Good morning. Welcome everybody to today's Traders Summit. We are so excited for another fun-filled day of education and market instruction. There's a lot going on in the markets right now, so this is definitely very good timing for a market summit to hear from our market experts what's going on in the market, what we should expect, and some of the strategies we can be using to help us in our trading during this time. So we are going to be getting started in about 8.5 minutes here. What we're going to do here is I'm going to just check in on the technical side, make sure everything looks like it's up and running okay, and then I'll be right back with you. Okay, it looks like everything is up and running okay. Welcome again to today's Trader Summit. We are MetaStock. We are your hosts of the Trader Summit today. We are very excited to have you here. As you come into the room, tell us who you are, where you're coming in from. We are here in snowy Salt Lake City today. I'm looking out the window to a lovely snowstorm. We're very happy about it. We've been experiencing a bit of a drought, so we're happy to see some snow here. As we get started, let me introduce again myself. My name is Kelly Clement. I will be your YouTube host today. We are MetaStock. We are purveyors of technical analysis and charting software. If you are not familiar with MetaStock, I am going to show you a quick video, introduce you to MetaStock, who we are, what we do, and then I will be right back with you.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, welcome again to the Trader Summit today. That was a quick introduction to MetaStock, who we are, what we do. So as you're coming in, I just wanted to show you who we have speaking today and what to expect throughout the day. So I am just going to show you here really quickly. This is metastock.com/traders-summit. This is the summit overview page. And here is who we are going to have speaking today. First of all, we're going to have Jeff Tompkins. He's going to be talking to us about trading the VIX. We're going to then go to Vince Vora and identifying strategies with Vince Vora. We're going to have Tushar Chande, one of the biggest names in technical analysis, along with, he wrote some great books along with Stanley Kroll, if you're not familiar with those. Price Headley, our own Jeff Gibby, Peter Dalal, and then Hima Reddy will be our last speaker for the day. Then Oscar Carboni will be our last speaker for the day. So if you want to register for any of these free gifts that the presenters are giving away, you just need to go to metastock.com/traders-summit. I've also put the link into chat, so if you have any questions, go ahead and go there and you can click on it and you can see all the different offers that the presenters have for us today. Let's go ahead and turn this off. And it looks like we are just 2 minutes from getting started today, so I'm going to go ahead and go back and make sure everything's ready to go with the presenters, and I will be right back. Okay, we are ready to go. We're going to get started here in about 30 seconds. Again, as you have questions throughout the day, feel free to put them in chat. We'll be trying to get those questions to the presenters as we get through the day. My name is Kelly. I will be your YouTube host today. Jeff Gibby is going to be your main host for the event today, introducing you to the different speakers as we go through. So let's go ahead and get this ball rolling.
All right, let's go ahead and make sure everything's unmuted. Good morning, everybody. Thank you for coming. I hope you're doing well. Welcome to today's Online Trader Summit. It's good to have you today. I appreciate your coming. I hope you enjoy it. Happy President's Day, by the way. Let's read a legal disclaimer. Let's get going. Today's demonstrations are designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. I do want to thank our sponsors today, Stocks and Commodities Magazine. They sponsor our events since we started the Online Trader Summit. If you can believe it, it's been, I think, 10 years this year that we've been doing Summit, maybe 9. I'll have to go figure it out. But ever since we started doing the Online Trader Summit, they've been offering a free magazine for registering. They've been supporting it. They've been helping us to get people to the event, and we really appreciate them for the support that they do. It's also a great magazine. You can claim an issue of the Stocks and Commodities magazine at metastock.com/traders-summit. You just have to register. You click on any of the offers that you want, but one of those offers is a free magazine. So if you're watching on YouTube and you want to go to metastock.com/traders-summit, just register for today's event, fill out any of the free bonuses that you want, and that'll get you also the ability to get a free magazine right here. So I also do really quickly want to say thank you to CMT Association for helping us with the events. We've been a partner with them since November. They're very good to work with. We love them. They're very, very nice. It's really, really good to have the CMT Association kind of helping us with the events as well. So, and of course, we're MetaStock. We just released a brand new version. We've actually won Reader's Choice Awards 29 years in a row. We're offering an extended trial. We're going to talk about MetaStock all day. So let's get to the good part. Our first guest today has a very good name, Jeff Tompkins. He's also been a partner of ours for, I'm going to say, like four years this year. One of the things I like about Jeff is he spent a lot of time teaching people how to trade through a site called udemy.com, I think, if I remember that correctly. Since I've known him, he's went on to start a hedge fund. He's a hedge fund manager, and certainly somebody that's really, really well worth listening to. He really delivers a good class. I hope you enjoy it, everybody. Jeff, let's go ahead and bring you on here and get you started.
Yeah, great.
Good morning.
Yeah, wow. 4 years. It's hard to believe, but
right.
But 10 years, huh? For the Trader Summit. That's pretty.
Yeah.
Pretty, I didn't realize you started when you were 15.
No, dude. Next month I'll be 25 years at MetaStock, if you could believe that.
Holy cow! Wow.
Yeah.
Congratulations. We'll have to throw a party.
Yeah, right. Okay, I can hear you pretty well. You should have the thing that says "Show my screen" on your screen.
Yeah, I've got it. It's grayed out. I don't know if you have to give me permission or.
Oh, let's try that.
Oh, there we go. That should work.
I'm going to drink some coffee too while you present. Maybe I'll be able to run the software better. All right.
All right.
Very cool. I can see it. I can hear you good. Everything's coming through. I'm going to go ahead and get out of the way. Thank you, Jeff. It's all yours.
Right. Thanks so much. Happy President's Day, everybody. So the markets are, of course, closed today. I'm watching the futures closely, though. They were up yesterday, but they've taken a turn down. So we'll see what happens at the open tomorrow. But in any case, we are going to talk about trading volatility. This is a timely topic for today's markets. We've been in some volatile market conditions, that really ever since the crash back in early 2020, which has created a lot of challenges for traders and investors. And the purpose of our time together today is to help you navigate these types of markets using volatility and the VIX. So we're going to look at the VIX, which is the CBOE volatility index, and how to use it to help you better time the markets. Jeff did a nice job with their disclaimer, but I'll read ours real quickly. We all know that trading securities and options involves risk. Of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. We need a broker to trade securities and options and must meet suitability requirements. We will be sharing some various results on our session today. And of course, past results don't necessarily indicate future performance. although the performance figures that we show are based on our trade signal algorithms. But due to the time critical nature of trading, brokerage fees, and activity of other subscribers, we don't guarantee that anyone will mirror our performance. All right, so let's talk about what we're going to cover and what you're going to get out of the session today. So by the end of our session, you'll discover how to use predictive indicators to spot turning points in the markets. And most of what I use, if you guys know me or as you get to know me, you'll discover that I really don't like lagging indicators. They unfortunately don't end up working real well in the long term. And they don't give us a real accurate forecast of what is likely to happen in the future because, of course, they're based on past data. So what I typically focus on and share with our members are tools that allow us to see what's happening in the near future versus using lagging indicators that tell us what's happened in the past. And this is really valuable information that you can use to help predict markets. And what we're going to be looking at today can help you do that over the course of the next 30 days roughly, and you'll see why that is with the VIX. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So let's look at volatility to help us kind of understand how it impacts the markets, what it is, and why it's important to us as traders and investors. So many of us out there are probably familiar with the VIX. It's often called the fear gauge. I don't particularly like that label for it. It's really, to me, more of an insurance product. And really, that's why it was created. And while it does to some degree tell us if there's fear in the market, I really like to use it more as a timing indicator to let me know when there are likely going to be sell-offs or rebounds in the market. And as you'll see on our session today, it can do a really incredible job when we use it, as I'll show you. So basically, the VIX is the ticker symbol for the CBOE volatility index. And what it does is it measures the stock market's expectation of volatility based on S&P 500 index options. So when we look at volatility, we have historical volatility, we have implied volatility. So volatility as a whole measures the frequency and magnitude of price movements that a security experiences over a specified period of time. So basically, the more extreme the price swings in the security, the higher the level of volatility. Now, what the VIX does is it measures expected future volatility. So really take note of that because it's important. So it's actually one of the only, if not the only, true leading indicator available to us as retail traders. And once you see how that works, you'll be, I think it can really make a change for your trading and investing if you're not already using it this way. So what it does is it estimates the expected volatility by aggregating the weighted prices of the S&P 500 index puts and calls, or options on the S&P, over a wide range of strike prices. And the prices used to calculate the VIX index values are midpoints of real-time SPX option bid-ask price quotations. So that'll become a little bit more clear to you as we get deeper into the session. Now we're going to look at this in a moment on a chart, but when we talk about volatile market conditions or calmer market conditions with lower volatility, the general kind of rule of thumb or consensus among traders and investors is that a VIX reading above 20 indicates that we are in volatile market conditions. A VIX reading of less than 20 means that we're more in normal market conditions. So often when you see the market kind of in this nice steady uptrend with a lot of buying pressure, a lot of demand, you'll see the VIX at low levels. And when we see these, extreme swings in the market or more extreme sell-offs or significant sell-offs or even bear markets, you're going to see a higher VIX reading, typically above 20. And what we've been seeing since early 2020 during the so-called Corona crash is we've seen a lot of VIX spikes. We've seen a lot of VIX readings above 20, and they've been happening rather quickly and then retreating, and that's pretty normal. But what is kind of more abnormal is we have seen a lot of these VIX spikes. So the quantity of VIX spikes has been higher than usual. So what does the VIX tell us? Because if we're going to use a tool in our trading investment, we want to know what information is it giving us, how is it going to help us make better decisions. Well, the VIX is a real-time index that represents the market's expectations for the relative strength of price changes of the S&P. And of course, markets are correlated to some degree. So, when we see a VIX spike or a rise in the VIX, we often see a sell-off in the market, but not just necessarily in the S&P. We'll probably see it in the NASDAQ and the Dow and the Russell. So there's that correlation between indices and markets. But in terms of the VIX itself, it's derived, as I mentioned, from prices of S&P options. And what it does is it provides a 30-day forward projection of volatility. So it can give us a good indication of what's expected over the course of the next 30 days. And volatility, which is basically how fast prices change, gives us insight into market sentiment, and especially gives us insight into the degree of fear among traders and investors. And conversely, it gives us insight into greed. So when there's a lot of greed in the market, the VIX can indicate that by a low reading. And again, when there's panic in the market or fear, you see the VIX go up. So there's an inverse correlation. When the VIX is rising, the S&P is typically falling. And when the VIX is low or falling, the S&P is typically rising. So there's that inverse correlation. So how does volatility impact most indicators in trading systems? So this is interesting. There's so many different trading systems out there. There's so many different methodologies, trading styles, time frames. But on a whole, volatility for most people can be extremely difficult to trade. It's what creates what we call whipsaws, and it can take a system that you may have been using in calm market conditions that has been working very well for long periods of time and completely derail it. So we've all experienced this as traders or investors. It happens, it's inevitable. But volatility can also be a good thing, right? It can create opportunities for us. And if there wasn't some degree of volatility in the market, markets would stand still, they wouldn't move, and we really wouldn't be able to trade them. So it's important that we have volatility, but it's also important that we're able to use it to our advantage when it gets extreme. And that's what we're going to do. So just to kind of highlight an extreme example of the challenges of market volatility, if we had a security that just went like this, right, it just went straight up with no whipsaws or no retracements or anything, it just went in a straight line, right, the market would be extremely easy to trade. We'd all just buy and hold on to it, and we would be basically guaranteed to make money over time. But unfortunately, that's not how the markets work, right? So they typically look more like this, where you get moves up, move down, move up, move down, and all over the place. And when you look at point A from point A to point B, so the start of the trend to the end, there's a lot, the path to that point B is not a straight line. So there's a lot of curvy roads along the way, and that's what we have to navigate, right? That's what we have to figure out how to use to our advantage. Otherwise, we end up getting chopped up, whipsawed, or knocked out of the market, right? Because our system isn't set up for the unpredictable, right? So when things happen, as they inevitably do, that we can't predict, and we're not prepared for them, then that can create problems for us, right? So here's what I'm going to give you guys today to make that easier. We're going to look at how to use the VIX as a forward-looking predictive indicator, how to spot potential market sell-offs and corrections, how to protect your portfolio in volatile market conditions, how to buy cheap insurance when it makes the most sense. And that, again, that's what the VIX really is. It's an insurance product. How to apply volatility and momentum to any market in any time frame. So what I share with you on our session today can be applied to any security, to any market, any time frame. It's universal. How to help prevent entering bad trades. I'm going to show you a really cool little trick. We'll look at some trade examples, and then stick with me to the end. I'm going to show you guys how you can get my top indicator that I use in the markets. And I do trade for a living. And as Jeff mentioned, I'm also a professional hedge fund manager. So I'll be sharing a lot of the tips, tricks, and tactics that I use in my professional trading life. So if you guys haven't attended one of my past educational events, I'll give you a little bit of background on myself, and then we'll get into the fun stuff. So I have over 20 years of experience trading the stock, options, and futures markets. I did receive professional training at Morgan Stanley at their trade desk. I'm also the founder and chief investment strategist of Altos Trading. We have over 50,000 members in over 100 countries across the globe. It's a really diverse group of inner circle members that we work with to help become better traders and investors. And I'm a hedge fund manager at Altos Capital, so I do manage money for my hedge fund clients. And I'm also the founder and creator of the Trade Trend Signal software, which we developed in partnership with MetaStock. And as Jeff mentioned, it's been about 4 or 5 years. Pretty hard to believe, but we'll be looking at the trade trend indicator today as well. So let's talk about that. We developed Trade Trend, as I said, about 4 or 5 years ago, in partnership with MetaStock, as an indicator to help us navigate volatile markets, identify trends and momentum, and help us better time entries and manage trades once they're entered. And that's what Trade Trend was designed to do. And it has a very unique feature, as you'll see here in a second, that separates it from a lot of other indicators out there on the market, which basically, of course, use lagging information, and they tell you when to jump into a trade basically at that moment. So in whatever your time frame is. So, if you're trading on a 15-minute chart and you get a buy signal, you've got to then jump into the trade without any sort of real confirmation that that's going to be a high probability trade to get into. So where we've separated Trade Trend from the other indicators out there on the market is we've designed an algorithm that gives us predictive buy and sell signals up to 3 candles in advance of the trend. So we've designed something that is meant to be more forward-looking versus lagging, that gives you a degree of forewarning before a move takes place. And we designed it to do that up to 3 candles in advance. So regardless of your time frame that you're trading, let's say you're trading a 5-minute chart, we designed this to give you up to a 15-minute advanced notice of whether there's an anticipated move up or down in the security. Or if you're trading off a daily chart, we've designed this to give you up to 3 days of advance notice of the anticipated market direction. And we've done that with a proprietary momentum algorithm that actually reads the market in real time. And if you do take a trade off one of the signals, it includes trailing stops to help lock in profits. So the algorithm continues to read the market in real time and provide trailing stops based on volatility and price action to help you stay in a successful trade as long as possible before it reverses on you. So it can help you predict short-term and long-term trends with pretty astounding accuracy. And you'll see that, and we'll run some back tests on the platform and show you how it works and all of that. But the cool thing is it works with any market, because the methodology behind it is based on momentum and volatility. So those are two factors that are what make any market. So whether it's stocks, futures, forex, it can be applied to anything, and as well as any time frame, right? So again, that methodology is applicable to all time frames. And if we have time, we'll look at some option stuff. But we have a lot of members, including myself, who use it to supercharge our option strategy. So a lot of option strategies, especially directional option strategies, are very time critical, right? You have to have your timing down very precisely. And if you don't, a lot of times, you end up, losing the trade. So what Trade Trend can help us do is more accurately time entries for our options play. So if you trade options, this is going to be a great tool for you to see today. And just to kind of give you some other features of the indicator that set it apart, because a lot of indicators out there, you'll see, they're kind of the, marketers love to use these because they'll show you signals that look great in hindsight, but when you actually got to use them in real time, it's nothing like what it looked like on the chart in the past. And unfortunately, that happens all too often. Trade Trend does not repaint. So what that means is once you get a signal and it's a confirmed signal, it's not going to move on you or change or repaint. So at the end of each time frame that you're trading in, once you get a confirmed signal, it's there. It doesn't change on you, which a lot of indicators do. So that's an important feature of any indicator. If something repaints, I would highly suggest not using it. It also has built-in protection to avoid whipsaws. So we'll look at that with the feature that helps you manage trades once you've entered And it can help you capture most of the trend before it reverses, because that's a common problem, right? You get into a trade, a directional trade, you expect, let's say Apple stock to go up, and it does, and you're happy, you're excited, you're making money, and then all of a sudden it reverses on you. That's volatility right there. And then when that happens, that often wipes a lot of people out. This is where trade, psychology comes in, and we don't have enough time in our session today to get deep into the psychology of trading. But from a high level overview, basically, you get into a trade, you get excited, you're making money, and then we start to fear losing any additional money. We get greedy. We want to keep making money and maximize our profits. And there's nothing inherently wrong with that, but with the way the markets work, they reverse on us at some point. And so it's really important that you can capture the trend without having it reverse on you. And we've designed the algorithm to help you do that as well. And it's designed to limit losses and let profits run. So not every trade is going to work out. Of course, there are always losers in trading, and this is no different, but it does help you cut losses if the trade isn't going to work out. And the algorithm can help notify you of that very quickly before things get bad. It can be used with any other indicator. So if you're already using an indicator system that's working well for you, or maybe it's mediocre or not working well for you, and you want to improve it, we have a lot of members who use this for confirmation or in combination with something else they're already doing with a system or an option strategy. But ultimately, where this is really going to help a lot of people is it cuts the learning curve. It took me well over a decade to start becoming more consistent in the markets. I went through what everyone else goes through. I've gone through very difficult periods. I've lost a lot of money, and that finally turned around for me. But I don't want anyone that follows us and becomes a member of ours to go through that. I want you guys to become successful as quickly as possible without having to go through the steep learning curve that's involved with trading. All right, so we're about to get over into the fun stuff, into our charting, and I'm going to give you a little bit of a high-level overview of what you'll discover as we get into that. So we're going to look at why volatility is one of the only leading indicators of market direction. I'll show you how to identify when markets may be vulnerable to a sell-off. So imagine that, we all fear the unknown, and certainly there are a lot of unknowns in the market. We don't really know when the market's going to crash, but what if you knew a way to identify when it's likely that the market is going to crash and protect yourself, or even take advantage of it, like I do. So just recently in the crash of January, I shorted a lot of the major index futures because I knew with advanced warning that there was a likely downturn in the market. And I'll show you how I did that. And I'll also show you how to identify when the market's likely to go up. So we all know that over the long term, since the dawn of the market, the very beginning, the markets have an upward bias. So I actually like market sell-offs. I like bear markets. I don't like these long extended 10, 15, 20-year secular bull markets like we've been in, because it just makes the market, as time goes on, it makes the market weaker, more vulnerable, more risky. So I like when we get a sell-off or a crash, because it creates opportunity, right? But I wouldn't like it if I didn't have some degree of warning that it was going to happen. Otherwise, I would get knocked out pretty fast. So I'll show you that. I'll show you that as well. And I'm also going to show you kind of how to determine how far the market is likely to go up, which is good information, of course, right? And then I'll show you how to get your hands on a tool that I believe can change your trading forever, because it's changed mine forever. So please stick with me to the end. There's a lot of good stuff you're going to learn, and you're going to have the opportunity to use a really incredible tool to help you with your trading. So let's get into the fun stuff. So I'm going to get over to the MetaStock platform, and hopefully you guys can see this. Let me know if it's not showing up on the screen in the chat box, but hopefully you can see MetaStock here. So incredible platform. I mean, it's the features are amazing. Some of the features, when I look at them, because I use other platforms, I'm going to be honest, like I trade through Thinkorswim, and when I look at some of the features of MetaStock relative to platforms like Thinkorswim or TradeStation or Ninja, for instance, their back tester, incredibly robust. And I'm going to demonstrate that, the back tester, far more so than a lot of the major broker retail trading platforms. So really cool features in here. We're going to cover some of those, starting with charting, and then we'll look at exploration and system testing. So what I want to do first is we're gonna look at, I'm gonna pull up a chart of the VIX and the S&P, because I want to show you basically what we're going to be looking at in terms of volatility to help us time the markets. So we'll open up the VIX. Actually, let me open up the S&P first. I think I had a problem with opening up the VIX first. Okay, and I'm applying the trade trend indicator to the chart here. Oh, it's doing it to me again. Let me see. Try the VIX here. Okay, so we've got the VIX. Let me zoom in a little bit here. And by the way, so this is the Power Console. Okay, so this is where you kind of access everything, your charting, and it's just available up here in the upper left of the platform. Let me try to get the S&P to show up for me again here. It was doing this to me yesterday. I don't know why the S&P is giving me trouble. Maybe if Jeff's on, you can let me know, but I'll try to pull up this. I'll just use the SPY in the meantime.
Hey, Jeff.
Yes.
Do SPY. The SPX is fee liable, so the SPY is not.
I was at, you know, I had trouble with it yesterday once, but then it was fine. So I don't know, but we'll use the SPY. That'll work.
Okay.
Cool. Okay, so the SPY is basically the ETF that tracks the S&P. All right, so I've got the trade trend indicator on here. So let me real quickly just kind of explain to you how it works, so you know what you're looking at, right? As we look at how to use this. So as I mentioned, the trade trend gives you some degree of advanced warning before an anticipated move. So it does that with on the MetaStock platform with red diamonds and green diamonds. So you'll see these here, and I'll just zoom in a little more in case it's a little hard to see for you. Okay, so for instance, a red diamond is a sell warning, a sell notification. So it's not a signal to get into the market. It's simply telling us that the algorithm anticipates a move down in the market. And then it's going to give us an entry price. So on a sell warning, again, the red diamond, and that'll always appear above the candle, the entry will be below the candle of the warning signal. Okay, so the entry would be kind of right down in here. If the entry is triggered, so to enter a short trade, you would use a sell stop order, or you'd use a buy stop on a buy trade. To enter that, you would scroll over a little bit. You would enter a sell stop, and then if that price is triggered, it's going to show that it was triggered with a red arrow for a sell signal or a green arrow for a buy signal. And there's a commentary that's available in the platform that's going to show you that. So on any particular day, it's going to tell you if there's a long position open, a short, a pending signal, and if there's a pending signal, it's going to tell you the entry price and everything you need to know. So there's no guesswork on your part, which is of course important, right? You don't want to be guessing what price to enter the, to the long side or the short side, or et cetera. So that's how the symbology works, basically in the algorithm. And when you look at the expert commentary, it's also going to give you trailing stop levels. So if you do get into a trade, it's going to tell you how to manage it by moving a trailing stop based on market volatility and trend, momentum strength, basically. But here's what I want to look at with the VIX. Okay, so we're looking at the S&P and the VIX side by side. Now, we had this big sell-off in the early part of this year, right? Early January. So we basically topped out on the S&P on January 4th. So the high there, and this is the SPY, of course, but the high on the SPY was 479.98. we got a sell signal the very next day from Trade Trend. So that's our warning that we need to be cautious that the market could be turning over. Okay, and obviously it did. We had a very significant sell-off over the course of the rest of the month before we got a bit of a rebound in February. So this is important, right? But how does it relate to the VIX? So when we look at the VIX, we can use this to help us time these sell-offs and give us added confirmation. So again, this was January 5th where we got the sell warning on the S&P. Interestingly, and there's, by the way, in the algorithm, no correlation here with the VIX. But interestingly, we got a buy warning on the VIX on the very same day. Now, the so the buy warning on the 5th is significant because, oh, and by the way, remember the S&P and the VIX are inversely correlated. So when we get a sell at the same time or around the same time as we get a buy on the VIX, that's our added confirmation. That's very significant. In addition to the fact, and I've got the line drawn here for you, that the VIX prior to that was below 20. Okay, so we were in low volatile market conditions, and we got a buy signal. So this can be our prediction that there's likely going to be sell-off. Now, if we got the sell signal on the SPY, but the VIX was above 20, I might not have been expecting quite such a significant sell-off. But the fact that we got that in conjunction with the VIX being below 20, that was my real warning. Okay, and this is where I actually shorted the E-mini futures, index futures, and made some really good money in January doing that. So this is exactly how I do it. I'm showing you, I'm revealing how I did this. And this was my warning right here. So I knew as the market was topping and the VIX was bottoming that there was a very high likelihood of a sell-off. I didn't know what the magnitude of it was going to be, but I didn't need to because the algorithm tells me. It helps me navigate that. And you can see there was a confirmed entry to the long side on the VIX. Now, for those of you who aren't as familiar with the VIX, you can't trade the VIX directly. There aren't shares available like other stocks. So the only way to trade the VIX is with options. But even if you don't trade options on the VIX, you can use it. And I highly, highly advocate to all of our members to use the VIX no matter what they're trading, what strategy they're using, to really navigate markets and make trading decisions. Because if you're not using it, you're not going to get the benefit of the foresight that it can offer. And look at this. I mean, January 5th, if you were using the VIX and you were using Trade Trend on the VIX, you had a very good warning, probably more of a warning than anyone else in the market that it was vulnerable to a market sell-off. Right there, it's showing us right there. There's the trigger, and we get a very significant VIX spike up to 40 as the S&P sells off. Now, that's all well and good, but how do I know, where things are going to turn around? Well, that's where I use Trade Trend. So on January 26th, I got a green buy warning. So the market bottomed just 2 days earlier on the 24th, and a lot of people, would have been panicking down here, right? Because boom, I mean, we were almost in a bear market territory on the NASDAQ, down peak to trough 20%, almost. So a lot of panicking, right? But like I mentioned, this is where I get excited. I look for buying opportunities. There's my warning. Here's the trigger. So it gave me 3 days of advanced warning before it moved back up above the buy line here. And we got a nice little move up in the market. And it actually told me to exit before it reversed on us, which was nice, right? Right now, we're in another sell. And I'm looking for a retest of this bottom from back in January, right? So down around the 420 to 425 zone on the SPY. But we got another sell signal here. Interestingly, we got a buy warning on the VIX. let's see, did that come in on the same day? This was February 11th. Yeah, we actually got on the same day again, right? So inverse correlation, sell on the SPY, buy on the VIX, and we've seen the VIX spiking up again. So as long as the VIX remains above 20, I'm going to be more cautious about jumping into the market, but I want to see the VIX retreating. And we didn't get a sell signal on the VIX, which is fine. We don't need it when we got this buy signal on the SPY. But what we want to look for is when we get this buy signal on the S&P, we want to see the VIX retreating back into the 20 level, which it did in late January, early February. So I want to see this type of correlation to get confirmation to jump in if I'm going to, go long the SPY or any other security of the market. I want to see, and by the way, you don't have to trade the VIX or the SPY to use to use this information. This information should be used no matter what you're trading, because again, markets are correlated. Even if you're buying stock shares of Apple or Tesla or whatever, this is what you're going to want to be looking at as your first step in your analysis of the market. So that what the overall market's doing, what the probabilities are, and what the that you're on the right side of the market. You're not trading against the broader market, because that's where you can get yourself into trouble. So what the algorithm does, again, is it gives us the suggested entry price. So on this buy, for instance, on the VIX, our entry is going to be just above the high of the candle. So the reason we design the algorithm that way is for added confirmation. So what happens if, and let me see if I can find a signal here. What happens if we get a warning, but then there's no follow through? Then we don't want to get in the trade, right? We want to get into a trade that's going to at least start giving us profit right off the bat. And that's why you want to use that type of entry versus, let's say, a limit order or a market order where you're just jumping in. So here's an example. So we had a couple nice buy signals on the sell-off back in November, or sorry, sell signals, right? It caught the very top here. There was the warning right here. Okay, so November 22nd. Trigger was on the next day. Nice sell-off. So look at the timing on that. I mean, pretty incredible. Caught this nice little retracement. Okay. Here was one where the algorithm picked up that the market might be turning over. Okay, but it didn't. And this is what keeps us out of bad trades, right? So if we had just entered on this on the sell warning, we would have been immediately in a losing trade. But remember, the entry is down below the low of the candle. We never reached that entry price over the course of the next 3 days. So the signal is null, and you don't see a red arrow with a confirmed entry, right? So this one basically resulted in no trade. It actually happened here. So this is going to keep you out of a lot of bad trades, right? So you're going to see signals where it doesn't, and you might see that it follows through down the road, like a week later or so. But if it doesn't happen over the next 3 days off a daily chart, we don't want to get into it. Okay, so we want it to happen rather quickly. Okay, like these. So there's a nice sell. This is back in September. Look at that. Caught it almost right after the peak in the market. Big sell-off. Gave us a nice little buy signal down here. Got the rebound. Gave us another sell. So the timing is really incredible. Here's a nice buy from back in July. There's the confirmed entry. Boom. Long move up. We got another buy on the way up. Little sell in the middle if we wanted to short. So it's going to give you some pretty incredible accuracy. And again, these don't repaint. So this is set in stone, right? And the VIX can help us time these. So when we see a buy signal on the VIX in conjunction with a sell signal on this S&P, that's our major warning. Okay, so that's what I want to show you in terms of how to use the VIX with the S&P. Unfortunately, we don't have enough time today to get into all the nuances of the options on the VIX. I was hoping we could, but that's for another day. We'll do that down the road, I promise. So let's look at a few other features of the platform and just kind of show you how it works. And let's see, I was going to look run a back test for you. Well, I wanted to show you some other. So a lot of our members, for instance, trade futures or Forex or whatnot. So I'll show you what it looks like on Forex. If any of you guys trade Forex. So this is the pound yen on a daily, and I'll show you an intraday chart as well. You can see the incredible timing, right? So even after these, I mean, it's picking tops and bottoms pretty accurately. We got a couple nice buy diamonds here. And again, this is an advanced warning, right? This is telling us up to 3 days in advance on a daily chart, the anticipated direction. And we get, even after these really big moves up in a security, we get these sell warnings near the top of these sell-offs. I mean, there's a couple. We're actually just recently got another one before things get bad, right? And then look at some of these buys, even at near the bottoms. I mean, some pretty cool, reliable timing on this. So you can also, if you are more of an intraday or day trader, you can use this for that as well. So I'll just we can look at a 30-minute chart on the pound yen. So it works for intraday as well. So personally, I don't day trade. I don't trade intraday much, but I mainly trade off the daily charts. But again, the methodology is the same, right? When we're looking at momentum and volatility, it's largely the same. So it really doesn't matter what time frame you're in. The real difference is you're going to get more signals on an intraday time frame than you are on a longer term time frame. So the shorter time frame you're just simply going to get more signals than you would if you're off of a 4-hour or daily chart. All right, but again, the red diamond is going to give you the sell warning and let you know the exact entry price, and I'll show you that here real quick, and the exact trailing stop levels. Let me get the expert commentary up, and it's going to show you when to get out. Okay, so it tells you everything. There's no guesswork. Right now on the pound yen, there's an existing long position open. Okay, and it's telling us our stop order. It's giving us the exact price to place our stop order. Let's go back to the buy entry, or let's go back to the buy warning. So that came in on February 21st. Okay, so it's telling us the criteria for a buy setup has occurred, and based on the alignments of the different metrics in the algorithm, it projects a move up, right? So it's going to give us a suggested entry price at a higher price in the current market, because we don't want to get in unless there's follow through, and the type of order you're going to use, a buy stop limit. Okay, and then if something crazy happens between when the warning signal comes in and when it in between that and the entry price, like let's say things get volatile, or there's a huge gap up on a buy signal, it tells us not to take the trade if it gets too far out of whack. And then if the trade is entered, it's going to give us our initial stop value. Okay, and then on each subsequent day, in this case on a daily chart, or if you're intraday on, let's say on a 5-minute chart, or I guess we're looking at a 30-minute chart, sorry, each subsequent 30-minute time interval, it's going to tell us what our new stop value is, okay, ahead of time. So that's pretty cool. So it's going to help us, as you can see by the signals here, keep us in the trend as long as possible, but get us out before things reverse and whipsaw on us, right? All right, so let's see. Let's do a quick. I want to demo the Explore feature and the back tester. So let's look at the exploration. So if you want to find opportunities, there's an incredible tool within MetaStock to help you do that. So you don't have to pull up individual stocks on their own to do this. You can use their scanner feature, right? It's the Explore tab here on the Power Console, and you can scan through countless different markets. You can even set up your own scans. You can see I've done that. Like I've set up Jeff's future list, Jeff's weekly options list. So if I want to scan for, buy opportunities, let's say trade trend long signals on stocks that have weekly options available, on the daily time frame, I can select. All I have to do is select those, hit start exploration, and it will quickly run a scan of those 500 plus stocks and tell me which ones currently have buy signals, or I can search, for instance, for sell signals. And then it's going to print a list for me with the opportunities, and I can then go over to my charts and look to see which ones I may want to consider taking as trades. So we'll let that come up real quick. And then I'll pause there real quick and see if there are any questions from Jeff while this is running. And we will hold Q&A at the end as well. So. Sounds like it's all quiet on their end, so we'll let this finish up.
Sorry, Jeff. I had my microphone button behind the questions.
Oh, okay.
Took me a minute to find it. Let's see. We did have a question earlier that was talking about, will this work in my Indian markets? I can't remember if that was from YouTube or.
Yes. Yeah, we have a lot of members in India that use this. Yeah, it works on any market. And with the MetaStock platform, and Jeff could probably answer that more accurately, but I believe that MetaStock members do have access to India market data. Is that right?
Yeah, it's one of the 200 plus exchanges we cover.
There you go.
So,
there you go.
But
yeah, as far as the algorithm, yes, you can use it on anything that produces a chart. So you can see it gave me a nice list here of opportunities for tomorrow, because I ran the scan on a daily time frame for potential buys on equities that have weekly options. Of course, you can click on any of these and open up the chart and take a look and all of that kind of stuff. So this is Altria Group. So it makes it really quick and easy, as you can see, to find opportunities. Now, backtesting, also a nice feature of the platform. So we can test trade trend on any of the securities in any time frame before we place a trade. Okay, so all you need to do is select trade trend. I ran a whole back test on the NASDAQ. I can share that with you guys. But let's say, like, I don't know, just pick a stock. Look at Tesla, for instance. And let's say I just want to look at long trades. So you can run it long trades, short trades, or both. Let's say I just want to, for instance, look at long trades on Tesla over the last year from the trade trend algorithm and see how it did. Well, let's run a test here and see what happens. Well, I ran a points only. Let me run a, I'm just going to put in, okay. All right, so we ran this back a year on Tesla. On a daily chart, you're not going to get tons of trades, like as I mentioned, right? You're going to get more, and this is long trades only, so probably I got more like 16 trades going long short over the course of the year. Long only, we got eight nice signals. 6 of them were profitable. There were 2 losers. Overall, the profit on 500 shares per signal was over $100,000. But here's the important thing. I would urge you to do this whether you use trade trend or any other indicator or system. Does it outperform buy and hold? Okay, so if I were just, because that's the point of trading, right, is to not be in the market all the time and be vulnerable 100% of the time to what the market's doing. The point of trading is to be in the market when conditions are favorable to our system or our strategy and get out when it's not, right? That's what's giving us our edge. So if your system that you're using or your indicator or whatever isn't doing better than buying and holding, then truly you're just wasting your time, right? Because otherwise, why would you spend time trading? Why not just buy and hold? So that's the first thing I look for. So this did, in this case on Tesla, it did outperform a buy and hold. So you can see the buy and hold performance versus the performance of just taking the signals and not being in Tesla stock 100% of the time, right? So a buy and hold would have produced a profit of 87,000. We outdid that with a profit of over 100,000 by using the algorithmic signals. So that's important to look at. But the backtester basically gives you tons of information. It shows all the individual orders that were made on using the algorithm. It shows you all the positions, the profits, the equity curve. So if you had started with $1 million over the course of the year, how would it have grown? What kind of drawdowns would you have seen? This one's pretty steady. Looks pretty good. So it gives you a lot of great information on the backtester there. So I really love to use that. In fact, when I do any backtesting, I go straight to MetaStock. I don't use backtesting on any of the broker platforms. It's just not as good. I like the MetaStock backtester. So that's also available to you with the trade trend algorithm. Really great feature there. Okay, so hopefully I gave you guys a pretty good demo of the MetaStock platform with the trade trend indicator. You got some idea of the benefits that it can provide you in your trading and help you with in terms of navigating volatility. Certainly the VIX, I would highly urge you guys to incorporate that into your analysis and your timing, even if you don't trade the VIX. It's a really valuable tool to help us time. And I used it here with the Corona crash. So, this was our last most severe sell-off. The market sold off over 30% in just under a couple weeks. This was a tough one, right? There were billions of dollars lost in a very short period of time in early 2020. And so, a lot of new members that come to us and that start to learn my strategies and the trade trend algorithm and indicator and start to use it, wonder, well, how does it do in real life conditions? How do you do, Jeff, with it? So I think it's important to share that because, a lot of people out there create indicators, but don't necessarily use them themselves, or they may not share real money results with you. They're just going to show you back testing and charts and things like that. So I'm going to show you real money results that in terms of how I did during the Corona crash of 2020. I shorted the market as the sell-off began, and I also bought on the rebound as the market returned back up to the breaking point there from late February. When I saw that sell signal, because we're obviously in the very beginning of what could be a major pandemic, I was a lot more cautious. So I was largely in cash back in February of 2020, but I wanted to be in the market a little bit on the short side, to see what happens. And I did okay in February. So this is my statement from TD Ameritrade at the end of February 2020, and did a little over 13,000 for the month. So pretty good, right? But as the market, as I mentioned, I love sell-offs and rebounds. And when you use my trade trend indicator, you're going to see why, because that's where I saw the opportunity to get more involved in the market. I knew that things were overextended to the downside. I got the buy warning from trade trend, as I showed you on the chart just a little bit ago. I was ready to go in big. So I got more into the market in March after the sell-off was losing steam, and I used the VIX to time that. I was waiting for the VIX to start to retreat, and that was a huge VIX spike from the Corona crash. It spiked up almost to 90, unheard of. It's very rare that was the highest VIX spike I think we've ever had. And as I saw it retreat and I got the buy signal, I jumped in on the major index futures. I wasn't trading anything big here, guys. If you look at my position sizing, I was only trading 1, 2, or 3 contracts over $27,000 in March. So between February and March, when people were losing tons of money and panicking, I was able to make over 40 grand, being pretty cautious, right? Trading only 1, 2, 3 contracts, and using the algorithm to help me do that, and the VIX to help me time the turnarounds from the sell-off to where the market turned around in March and went back up. Okay, so real money proof, just to show you, I do use this in my own account. I use it in my hedge fund. And so it's something that is personal to me, I'm familiar with, and my goal is to help you guys reach that level of success. That's why I'm here. And again, we can apply this to any market, any time frame, any size account. It's universal, and it provides predictive buy and sell signals before the move occurs, up to 3 candles in advance. So not every signal is going to be successful. In fact, I should have spent a little bit more time showing you signals that didn't work out, because they exist. But the nice thing is the algorithm, when things don't work out, generally gets us out pretty quickly. So that's something you want to look for in any system or indicator: positive expectancy. You need, so many people, traders, especially newer traders, focus on win rates. They hear, and they're lured by that. It's a marketing tactic, right? Oh, this wins 95% of the time. Well, you can have a 95% win rate in a horrible system that loses money. Conversely, you can have a 30% win rate and have an incredible system that makes tons of money. So the win rate isn't the only picture. It's the expectancy. So even if you have a low win rate, that's fine, but you need to have trades that make a lot more money than they lose. And if you have a very high win rate, most likely you're going to have a lot of little winners and occasional very big losers. So if you don't know how to manage the losing trades, you're going to get wiped out. So it works both ways. The key is to manage those correctly, and have some degree of advanced warning. And just some demonstration of some of the past warnings in the major sell-offs from trade trend. So it did provide a warning around August 19th before the flash crash of 2015. It also gave us a buy signal in early October before the market rebounded after the double bottom. The 2008 mortgage crisis, if you guys were trading back then, market lost more than half its value in the second half of 2008. Trade trend gave the sell warning signal. So in advance, May 21st, before the market lost more than half of its value. Also gave a buy signal later in the year before it rebounded. 2000 dot-com bubble, so we're going back over 20 years. In early September, the warning signal from trade trend, major market crash, of course. Also gave a buy signal before the rebound. Okay, we're a little short on time. I want to leave a little time for questions and tell you guys how you can get trade trend. So I'll kind of skip over this, but just more real money proof of my use of trade trend in my real money TD Ameritrade account. And I do a lot of futures trading, so this is in the futures market. So what I guess the takeaway here is there's losing trades, right? You can see those, they're on there, but they tend to be relatively small. If you look at the dollar figures on the losers and the dollar figures on the winners are outrunning the losers here, right? And that's the key. So when something's not working out, you want to make sure, get out, keep it limited, and when it does, stay in it as long as you can before it reverses on you. So here's my promise to you guys for being here today. I want to help you become successful in the markets, and I'm going to give you access to my trade trend indicator starting today. So the markets are of course closed today for President's Day, but when they open up tomorrow, you can get trade trend today and start using it as early as tomorrow. All right, so this is a one-time opportunity to join me to discover how I trade with consistency, and I'm going to reveal every one of my special techniques and indicators that make what I've revealed today possible, and I don't hold anything back. You guys get access to everything that I use. Okay, and you're going to get access to our members area with all of our training. You get 12 months of trade trend on MetaStock. You get exact entry and exit signals like I've showed you. You get trailing stop levels. You get live interactive trade sessions. We hold a live session and demo trade trend and look for opportunities in the market every single Tuesday at 7 p.m. Eastern. You can join us for those as well. You get members area access for all replays and recorded training sessions. You get full support and personal coaching for me and my team. I'm the one that hosts the Tuesday live sessions. If you have any questions, I'm there to help you, okay, personally. You get my top 2 weekly trade trend picks every Monday. I'll email those to you. And ultimately, we're here to help you cut the learning curve and trade like a pro starting as early as tomorrow. All right, so here's everything that comes in the package again. You get the 12 months of trade trend. So normally that retails for $14.99, okay? You get live trade sessions. Again, we hold those every Tuesday. So you're gonna get to join those. At 7 p.m. Eastern. We're holding our next one tomorrow on the 22nd. So hopefully you guys can, if you join us today, you'll be able to join us for our next live session tomorrow night. You're getting the personal coaching to help you use trade trend, both from myself and from the MetaStock side. So they offer a very nice white glove treatment to get you set up, valued at $19.97. You also get to join our Facebook group. We have over 800 members in our group that you can interact with and share ideas with and things within the group, valued at $199. We're also throwing our professional trading series online course. This is over 10 hours of training. I showed you one of my strategies today on our session today. We have many, many more that we share in our professional trading series, covering options, equities, Forex, and you get access to that as well. That's normally a $900 retail value. And ultimately, we're here to help you guys learn to trade stocks, futures, Forex, and options with consistency. And we really can't put a price on that, right? So I'm going to throw in 2 bonuses. Again, I'm throwing in my 2 top weekly trade trend picks. Those go out every Monday night. So there's going to be one going out tonight for tomorrow. Keep an eye out if you guys join us today. Normally that retails for $9.97. We're throwing it in as a free bonus. In addition to my latest ebook, How to Create Risk-Free Trades. This is a really great money management book. You can use it with any system, any indicator, any strategy to help you mitigate risk in trades, and even in some cases eliminate it. So pretty incredible tool to use in conjunction with our strategies and our trade trend indicator. Throwing it in for free. Normally we sell that for $97. So the value on the total package is over $5,000, but we're taking 80% off for the MetaStock Trader Summit today. And this breaks down to under $3 a day. So only $9.97. You get everything here for a year. No commitments, no contracts. For under $3 a day, you get all of the tools, all of the bonuses, all of the access and live trade sessions that I've shared with you. Okay, and there's a lot more to learn. I only had an hour with you guys today, so trust me, I have a lot more to share. So I hope you join me and learn everything I have up my sleeve. It's a lot of fun stuff. We have a lot of fun on our trade sessions. A lot of good stuff to share with you guys. We are limiting this to 25 seats, and the reason we do that is we can't take on unlimited members, right? So we're here to help you guys. We don't just give you a product or a tool or a strategy and say good luck. We're here to help you and work with you to become successful. So as much as we'd love to take on 100 or 200 members, we just simply can't handle that. So first 25 seats, once those are gone, we will close this down. You can still get all this stuff, but it goes back to the retail price. So if you want to get the 80% off and get one of the 25 seats, go to altostrading.com/MetaStock and you can claim one of those seats. All right, and we're going to throw in a guarantee as well. If you're not convinced this is the best indicator available, or that we have the best to offer you to help you become successful, we offer a full 30-day money-back guarantee. So we're making this as risk-free as possible for you guys. If you are slightly hesitant or not sure, or you didn't have enough information, you can still claim one of the 25 seats and you're not locked in, right? Full 30-day money-back guarantee, and you get the 2 bonuses to go along with it. Okay, and we have a lot of really great testimonials from our members. Since we're short on time, I won't share all of these with you, but we receive hundreds, if not thousands, of testimonials from our members, and it really is a testament to where we've taken people from struggling to losing money to a point where they're more consistent, and that's what we strive for. So I only went 2 minutes over. That's good. And I'll go ahead and open it up. If we have time to take any questions, I'd be happy to. If not, you can always reach us at support@altostrading.com. And again, there's the everything you get with the package, and there's the link if you want to join. I believe Jeff will put that in the chat, right?
I already did.
Wow,
and Kelly's going to put it in the YouTube chat. So we've got it all covered.
Cool.
So
thanks so much. It was great to be here.
You're welcome. I did promise I'd ask you 2 questions. And so we're going to do those real quick. We're, of course, running low on time. So if you do have questions, support@altostrading.com. They do a great job of answering people. But the first question I'm going to ask you is, this comes from Stephen in GoToWebinar. What is your opinion on today's market? Do you think we're going into a bear market?
Good question. It would take me a long time to answer that, but to make it quick, yes, I do. I think our secular bull market is over. I think it was actually over last year, the year before. And it's normal to see these long secular bull markets. It doesn't happen in one day, right? So you'll see a 10, 15, 20-year secular bull market. That the clue where this was getting derailed was back in early 2020, because of the peak to trough sell-off and the overvaluation. So even though we rebounded and reached new highs since then, that doesn't mean that the bull market is still it's still strong. It's been very fragile since then. And yes, I think that we are shifting into a secular bear market. Those can last 10, 15, 20 years as well. Yes, I believe that the bull market's over. And in terms of like current market conditions, to answer the other part of that question, I think they're just going to be very volatile. I think right now we're probably going to see, and I'm watching the futures right now on my other screen. We're seeing probably a double bottom on the NASDAQ and the S&P from the lows back in late January. Hopefully whoever asked that will join and join tomorrow night, because this is what we cover like in depth on our Tuesday session. So I'll get more in detail on that. And also when you join today, you get access to the members area for all of our past recorded sessions. So I've covered this a lot over the last couple of weeks. So you can actually watch those today in our members area. But that's kind of the basic high level answer to that question.
Okay. One last question. Does this work well in the crypto markets?
Actually, I don't trade crypto. I've never used it, but we do have members that do. And I've looked at the charts, and I'm almost tempted to trade crypto because I have tested the algorithm on some of the major cryptos like Bitcoin Ether and things, and it does actually work really well. And I think the reason for that is the volatility. The trade trend indicator works I find it works even better on volatile securities. And since cryptos are so volatile, I found just looking at charts, it works incredibly well. I just don't personally trade crypto, so I can't give any insight there.
Got it. Okay. Jeff, we have to move on, but thank you very much for spending time with us. Appreciate it. Great job today. Thanks again, I guess.
Thanks for having me.
Very cool.
All right, take care.
Always. Again, the offer for that is altostrading.com/metastock, or you can also give us a call at 800-882-3040, or you can visit us at metastock.com/saleschat and chat with one of our representatives today. So let me go ahead and show my screen real quick. And let's go ahead and get back to where the presentation is. And there's a picture of the box that we created with Jeff Tompkins. He does a really good job of showing the commentary, the signals, how the scanning works in MetaStock, all these tools that I absolutely love, especially scanning for MetaStock. How do you narrow down the candidates of, like, if there's 4,500 optionable stocks, for example, how do I find which ones that work in the market? And MetaStock does a really, really good job with this. These algorithms that we built for Trade Trend, we created, they were Jeff Tompkins, but we created them to do scanning and kind of give you those commentary breakdowns and system testing, and even put together a comprehensive user manual with it. So as Jeff was saying, you can get all of that package as a package at altostrading.com/metastock. You can also give us a call at 882-3040. You can visit us at metastock.com/saleschat for that as well. And what a great way to kind of get started and learn from somebody that's managing a hedge fund and has a track record that they're willing to share. So we also are going to be doing a Summit Action Pack today, or a Summit Traders Pack, where we include some stuff from everybody that's speaking. So we'll give you 3 months on Trade Trend. Vince Vora is coming up next, and he has a Victory add-on, which was our best-selling add-on of last year. We've got some training that we're doing with with Oscar Carboni about trend lines and the fundamentals of drawing tools. 3 months of a Magic Trader Elite, a subscription to a product called LearnMetaStock.com, Unleash the Power of MetaStock, and 2 years of stocks and commodities. So that normally, if you bought all that separately, it would be $4,484. Here at the event today, we're going to actually bring that down to $2,193. And I was looking at the guest list today of the speakers that we invited, and it's such a strong group of people. So you can get that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. Bobby asked a question in the chat a little bit earlier. I'm going to answer it real quick as we kind of transition here, realizing we are a little bit late. Everybody that's watching will get, as long as you registered for the event, you're going to get a recording to it. That'll come automatically within about an hour of the end of the session. If you're watching on YouTube, if you just save the URL you're on, that's the replay as well. We offer free recordings, unlimited access to the recordings. We don't charge you for them, and I hope this is helpful for you. I hope you enjoyed it. I do want to say thank you to Stocks and Commodities and CMT Association, both for supporting today's summit. Task has been a great long time, almost 9 or 10 years sponsor of the Online Trading Summit. We appreciate that. CMT is a great association. We're happy to be associated with the CMT as well. And of course, we're MetaStock. We're going to talk more about MetaStock. Our next guest is a good friend of mine, Vince Vora. Vince has been working with us for a number of years. One of the things that I really like about Vince is his trading methods. The other thing that I like about Vince is really like the way that he kind of explains them to people. And he's so understandable, and he takes his time, and it's not one of those presentations that you go to and you're like, huh? Afterwards, he does a really, really good job of kind of conveying information in a very clear way. One of probably the best trainers we've got in that regard. So with that being said, Vince, let's bring you on here.
Good morning, Jeff. How are you?
I'm doing great, Vince.
There we go. There I am.
I can see you. We're doing great. How are you
Good.
doing?
Very well. Very well. Thanks for having me on today.
No problem. Let's get you right into it. I'm going to go ahead and kind of change the screen over to you. Sorry that we're running a little bit late. I blame Kelly in the control room. No, I'm just kidding.
Not a problem at all.
I can see
you back on time if I can.
It's okay. It's okay. Don't worry about it.
Okay.
But it's all yours now.
Okay, excellent. Thanks again, and welcome everybody. Thanks for spending your long weekend with us today. I do want to thank Jeff and everybody else at MetaStock for having me on. I really do appreciate it as always. And today I want to specifically talk to you about our victory method. It's been a bit of a crazy market out there recently. And Victory is a system I developed, I think just before the pandemic started in early 2020. I think it was late 2019 when we worked on it, but it's been great for us and I'm happy to share it with you. So let me bring up my MetaStock platform. And before I get into the actual presentation, I do want to say to everyone that if you haven't downloaded the newest version of MetaStock 18, you really should. I did so about 3 days ago, and I'm super happy with it. There are some great improvements on here, and I really enjoy using it. The scrolling feature, the way you can adjust the indicators and the different themes, really a great improvement. So if you don't already have it, you really should get it. What you're looking at here, this indicator on my chart, this is a chart of the S&P 500, the SPYs. And this is the victory method. Now, you'll see a number of things. You'll obviously see red and green arrows. You'll also see these red and green circles. And occasionally an exit sign here. You'll also notice that the bars at some points are all colored green or all colored red, and in very few spots yellow. Let me explain what you're looking at here. And then I'll talk a bit more in depth about this indicator and how we use it here at Trading Wins. Obviously, the green arrows are signaling a long entry. Now, if you're already in a trade and the same criteria that developed to create that green arrow comes together again, but we're already in a trade, this time it'll be plotted as a green circle instead of an arrow because we're already in that trade. So the way you want to read that is if you missed getting in on the initial setup and you get another opportunity to, you can jump in at the re-entry point. If you did get in on the initial entry and you see a green arrow, you can now add to your position or just read it as further confirmation that you should remain in that trade until you either get a red arrow or an exit sign. Now, at some points, the indicator goes from long immediately into red here, into a sell arrow. And other times, it flashes an exit first. You'll see some yellow bars, which means you do not want to be in any trade on that particular market when you see yellow bars. You want to be on the sidelines waiting for the next signal and then to get in from there. But the other thing I do want to mention is that we use a simple 20-period moving average. So this line that you see here, this blue line that you see along the way, I'm going to hover over it and you'll see it's a 20-period simple moving average based on the close. And we use that to judge momentum. What we're trying to do with Victory is trade with trend and momentum on our side. Whenever you do that, more than half the battle's already won. So what we're looking for here is obviously a trending market. And normally you can read price for that and just look for times where you have higher highs and higher lows. But when you have that 20-period moving average, it just makes it visually so much easier to read. When you have that 20 sloping upward, then you have a nice strong trend upward. And if it's sloping downward, you generally have a strong trend downwards. So the idea here with Victory is not to take every single trade setup. In other words, you don't want to buy every time you see a green arrow and sell every time you see a red. You want to look for those times when the market is trending strongly, when we have a lot of momentum on our side. We judge momentum by the slope in the 20-period moving average. The higher the degree of slope on the 20, the better. In other words, you can have a slight slope, you can have a more significant slope, or you can have a much more significant slope, right? So something like this that you see on the S&P 500, about a 45-degree angle, we would consider to be significant. And anything, any higher degree of slope than that would be even better, right? Over here, fantastic, right? And, it works the same in both directions. So if you get a slope lower, the higher the degree of slope to the downside, the better it is. Now, there are also times where you'll see a bit of consolidation, right? You'll see an area where the market is just chopping back and forth. And sometimes it'll be a clearly defined channel, right? Where it's bouncing between the two levels. And other times it'll be a little messier. But whenever the 20-period moving average is flat, like it was back in here, right? Or isn't sloping, significantly at the time of the signal, like it was here, it's pretty flat, right? We tend to ignore those. The only times we want to take those trades is when we're breaking out of a consolidation area, okay, or a defined channel. And we'll show you several examples of those as we go through. So if we were to connect these highs, for example, here, and we got this arrow here, we don't necessarily want to jump in here because we don't have a clear trend. We don't have momentum on our side. If we look at it from the perspective of higher lows and higher highs, here we had lower highs. We did not have higher highs at that point, right? We could say we had higher lows, but we did not have higher highs. So we were in one of those periods where the market is just consolidated. So we want to wait for confirmation that we've come out of that consolidation and are once again trending. One easy thing to do is wait for it to break this high, right? So if we waited for that, it would have been on this candle here. Then at that point, we could say we had higher lows, higher highs, and we had the green signal. And at that point, the 20 started to slope, so it was a better entry. Or we could just ignore it completely and wait for the next green dot or green arrow to jump in on those trades. Okay, now Victory is based solely on technical analysis. It takes no fundamental data into account whatsoever. It only looks at technicals. And so this can be used on any market, any time frame, any exchange around the world. Okay, so you can trade obviously stocks, ETFs. You can trade options with it, futures market, Forex, crypto. It really doesn't matter. And you can trade a 3-minute chart, a 15-minute chart, a daily, weekly, monthly. I'll show you examples across the board. I tend to use it more with daily and weekly charts. I'm more of a swing trader. But again, it's been tested and is used daily from our members across all time frames. So here is a weekly chart of the S&P 500. And you can see that ever since that pandemic low, there were several great opportunities to get in on it. Recently, it's gone red, but based on the weekly chart, we would not be short the market, right? In other words, if you got in here or here or here, and then you got that red arrow here, you would use that as an exit, not a short entry, because you're still looking for trend and momentum in your favor. So when we got the green entry here, we clearly had trend in our favor, and we had a significant slope higher on that 20-period moving average. And that's what we're looking for. Here, significant slope higher. Here, significant slope higher, right? And the way Jeff and his team programmed this makes it really easy to follow. In other words, whenever you're into a new green or long trade here, every single candle or open, high, low, close bar will be colored green. That way, it helps you remain in the trade for the life of that trade. You don't get scared out by the odd, red candle here and there, right? So you don't question yourself. You just stay in it. Now, here on this red candle, momentum was upward. It wasn't downward. So we would not be getting in there, okay, as a short. We just use it as an exit. Then we would have been out for a couple of days and then back in long, etc. Okay, you'll notice that on the monthly time frame, we haven't even flashed a red signal. So if you're more of an investor managing a retirement portfolio, or just you have a full-time job, you have a family, you can't sit in front of the screen every day, so you want to just manage a portfolio for the long haul. You get some great signals here along the way, and you'll notice that on the S&P 500, we'd still be in this market. There's no reason to panic, no real bear market yet here. Yes, we've seen some selling on the daily for sure. We're well off the highs. Yes, we are, but it's not telling us that there's anything to worry about just yet, okay? On the flip side, we can go to the other extreme and go all the way to a 1-minute chart, for example, right? And now, of course, you're going to see a lot more fluctuation. And here late Friday, we had a real strong sell signal, as we headed into the close. From about 5:20 or so into 5:30, we had a real push lower here. But again, any market, any time frame, it really doesn't matter. Now, I'm going to try to show you examples from different markets, different time frames, etc. But by all means, please type in any symbol that you want to look at. If you have a favorite stock you've been holding, you want to see how Victory would have reacted with it, or you're thinking of placing a trade on something, by all means, type in and I'll use the signals that you asked for. One of the things before I move on that I do want to mention is, it will provide you with some fantastic entries, no question, because from a technical standpoint, the combination of indicators that we look for to produce these signals, if you knew what they were, you would understand very quickly that it's impossible for it to miss a trend. So it's going to give you some fantastic entries along the way. One of the things that I like the most about it, though, is how quickly it gets you out when things are not going well. Okay, so if we do go further back in time, and go back to last year, here, when going back to February, March, here, actually, I went a little too far. Here's the, I want to go to the pandemic start. Let me go back here 1 second. Here we are, right there. So here we go, right? We had a real nice uptrend leading into February of 2020, right? And we had some great long trades. Then it gets you out very quickly before that big drop happened. So would we have gotten short here immediately? No, we would have not. I mean, if you're a little more aggressive, you could have marked the lows here and said, if we tip the lows, right? Now we have lower lows, and at that point, maybe we're going to get in. But what we do, if the 20 is not sloping significantly in our favor, we just wait for a pullback and an entry when we do have slope. And so here's when we initially entered that move. So we exited all longs here, we got short here, and we rode that lower. Now, when you get a push this significantly in your favor, sure, you can absolutely wait until the system tells you to get out, because it does. It won't give back all the profits. It'll get you out fairly quickly. But don't be afraid to start scaling out along the way, okay? Especially if you have a significant position, right? A lot of shares or several option contracts. You want to start unloading and lock in some profits along the way, okay? But the point I was trying to make is not only does it give you great entries, it will get you out at the first sign of trouble. And the last thing I'll say before we look at many examples here is you really want to focus on the entries that happen right along the 20-period moving average, okay? When price moves away from the moving average, it tends to snap back at some point. So the further away you are from that 20 when you get an in, the higher the risk that it's going to snap back on you. So you really want the entries to be as close to the 20 as possible and have the 20 sloping as significantly as possible, okay? So right off the bat, we have a few symbols. So first of all, Stephen is saying, how about a graph for Hong Kong's Hang Seng Index, the HSI? Sure. Again, like I said, this works on anything that you can chart, basically. So any index, any stock, no matter what exchange it's traded on. Let's look at .HSI, which is the Hang Seng Index here, and have a look at that. And here we are. So depending on the volume, on how, volatile and that market or index is, you're going to get a variety of signals. Don't what's the word I'm looking for? I was going to say don't be fooled, but that's not the right word. Don't get distracted by all these signals here, because they really don't mean anything if you don't have that significant slope on the 20. So this whole area here, no matter where you would have gotten in, long or short along here, chances are you would have been stopped out along the way, right? So this is an area we want to avoid. What we do want to do when we see this develop is mark a line across the highs, right? And one across the lows. And it doesn't have to be perfect, but try to select an area where you get, and I probably should have drawn this a little higher. Let me correct this. You want to identify an area where you can connect as many lows as you can, right? So here, this would have been perfect. You look at going back to March, April, May, June, July of 2021 on the Hang Seng Index. And if you had put money in this market, long or short, it was dead money. You weren't making anything here. You were likely getting stopped out along the way. But while you were watching this consolidate sideways, you were waiting for the opportunity. And while it may be frustrating for you to wait several months here, understand that the longer you wait, the bigger the opportunity is going to be. Because when you finally do break out of a channel like this, whether it's to the high side or to the low side, you tend to get a move similar in size, at a minimum, similar in size to the length of the consolidation. So once this broke out below here, we knew we were headed for a significant move lower. But again, if you look at the signals in here, you would have lost money on just about all of them, right? But look at this one here. We had come out of that channel. We came back to retest that same level, and we were failing. And we got that signal. And more importantly, have a look at the slope on the 20 at that time, right? Significantly lower. That's an entry we would have wanted to be in, right? This arrow here, look at the slope on the 20. That's a trade we would want to be in. This one here, that's a trade we would want, right? This one here, this one here. And so those are the ones you look at, okay? This one here, right? Significant slope higher, and it works out. This one here, you're in a consolidation. Do you want to take this one right here? No, you do not. What do you want to confirm? Is that you clear the highs, right? That you come out of there. And when you come out of there, is there slope? If there still wasn't significant slope, you just ignore it. And if you miss it, you miss it. There are plenty of opportunities out there. What you want to do when you're trading is give yourself an edge. And that edge is trading with significant momentum on your side. Look, put it this way. We can all watch the news. We all have an opinion on whether these markets are going to go up or down. And whether we're looking at the Hang Seng Index or the S&P 500 or Tesla or Apple, it doesn't matter. We all have our own opinions, but they don't really mean anything, because at the end of the day, it's the transactions that are actually conducted on the exchange that either move the price higher or lower. right? So what we're doing here is identifying those areas where there is either a great deal of buying or a great deal of selling on that particular market, right? We may not have known why the Hang Seng was going higher here at this point, but price told us, right? The technicals told us that there was a significant amount of buying in this area. And so getting in while all that buying is happening, that's the edge there. And then riding that wave, okay? That is the edge. Let's look at a few more markets. Jim is asking for Roku, a very popular stock, especially over the last few years, that had a significant move higher, followed by a very significant move lower. Now, this is the daily, and there are several opportunities here, but let me broaden it out so we can show the ride up and then the ride down, right? Now, any of you who might be a little more experienced with technical analysis could look at this chart and quickly say, oh, that's a major double top. So you can incorporate other charting patterns, candlestick analysis, etc., with a victory if you would like. But keeping it simple is best. And here, look at this. We had an area where the market was in a range on Roku, right? Then we started to come out of there. And what happened when we got this signal here? Because again, if you took this signal, this one here, 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 you probably would have lost money, right? But why wouldn't we take those? Because maybe this one we could have said, oh, well, actually, no, we wouldn't have. It was sloping higher. So we did not have a significant slope lower, right? Did not have a significant slope lower. No slope lower. No slope higher. No slope higher. Very little slope lower. So we would have ignored all those. Same with this one. Did we have a slope higher? No. Now, once we get this, what do we have? A beautiful slope on the 20, right? And then at this point, we could say we have higher lows, higher highs, right? And if you look at this candle, what's happening here is we're breaking above these highs, right? Right there. It's just poking out. So that was your signal right there. And off it went. Huge move, right? Now, it comes in here. Do you sell it here? If you were long, absolutely you want to get out. But do you go short here? No, you don't. You most likely would have taken this one because we still had a slope higher. Luckily, it gets you out at the first sign of trouble. So here's the thing with victory. You should have more winners, way more winners than losers, if you're following the rules with the slope. And along with this indicator, you will get a couple of different training classes that we recorded with Jeff, where I go into much more depth on comparing setups, one between the other. Because on any given night, you're going to have several setups to look at and compare. And you don't want to jump in on all of them. You want to select the one or two best setup, right, for your time frame. And I'll go over in detail how you do that. But just keeping it simple and looking for slope. Not only are you going to have way more winners than losers, but your winners are going to be much bigger than your losers, okay? So something like this would not hurt you at all. Small loss, and that's what you want. As long as you keep your losses small, you can overcome them very easily. Now, even looking at this and saying, hey, potential double top, we got rejected, we got this big red bar here. Do we take this short? I certainly don't. Why? I hate risk. I absolutely hate risk. And I am most likely one of the most conservative traders out there. So I would rather give up some profit to gain that edge. Do I take this one? Yes. Do I take this one? Absolutely yes. So even if I miss this downside, do I really care? Look at the slope here when we got this, right? Now, if it was that far away from the 20, yeah. If I took it, it'd be a smaller size trade, or I'd just say forget about it, because on any given night, there's probably one that happens right near the 20. But the reason why I'm showing you this is to show you how powerful that momentum is. Obviously, there was a ton of selling going on here on Roku. For what reason? I don't know, and I don't care. Do I? I just know that sellers are fully in charge here. So you want to ride that wave down. Let's look at a few others. Let's see, let's go back to the top. Oh, we have quite a few signals here, symbols. Lumen, who was it asking for Lumen? Stephen, L-U-M-N. Let's look at that. Here, Lumen Technologies. I'll try to get through all of them if I can. I see Apple and ExxonMobil, etc. I'll get to you guys. So here, right, when you look at this chart initially, and this is the weekly chart, right? I don't know if you can tell me what time frame you'd prefer to look at it on, but whether it's daily, whether it's weekly, and so on, you want to step back when you pull up a chart and look at it. So if someone came to me and said, I think Lumen, it looks good here, you know, it's either has a good short or a good long, whatever. I'd look at this chart and I'd say, you know what, this is kind of messy, right? It's all over the place. I like to see clean, smooth trending start. So that's one negative here. But would I ignore a trade setup like this, or like this, or like this? No, I wouldn't, because of the slope, right? This long in here, would I ignore that? No, I would not. Okay. If there was another chart at the same time that had a long setup with just as much slope, but a much cleaner looking chart, then yes, I would go to that one instead. But your edge here is a strong trend with strong momentum in your favor. And what Victory does is pinpoint those key times to get in. Now, this looks like a falling knife right now, right? I certainly wouldn't touch this at this point, nor would I chase it. I'd wait for another retracement back to that downsloping 20, and then the next short entry in. Okay, but you know, let's look at it on a different time frame, on the monthly. You know, this one's obviously been dropping for quite some time, and there have been some great short opportunities along the way. Right now, though, on the monthly, the 20 is completely flat. Would I take the short? No, I would not. Okay, let's look at a few others. Law is asking for ATVI, Activision. Let's look at Activision quickly. I also want to tell you, stick around, because I'm going to show you a couple of extra parts to this indicator. We have an expert commentary and a scanner that you're going to want to see on here, and I'll also show you some more international markets as well. Activision recently been dropping, not a big surprise. A lot of things did, but the point is, were there tradable signals here that you'd have taken? Not many, right? But that's the whole point of Victory, is to keep you out of those low percentage plays, right? And get you into the high percentage plays. So, you know, just because you sit here and you say, well, there hasn't really been a good opportunity here for a long time, who cares? It means the opportunity is elsewhere. The last thing you want to do is put your money into a stock and sit there month after month after month, not earning a penny, or even worse, getting chopped around, getting stopped out, in, stopped out, in, stopped out, in, right? Deal with that momentum. Was it a little cleaner on the weekly, maybe? Sure. Weekly, some real nice signals here lately, and a real nice short here. Okay. It all depends on your time frame. Let's look at a few others. ExxonMobil. Here, XOM. Real nice entry recently. Just told us to get out of there. You know how hot oil has been, and I will show you actually. That's a great example for a futures contract that we can look at. Is crude oil, because it has been just going through the roof lately. But there you go. Now, was this a great entry? Sure, looking back with hindsight, you can look at this and say, wow, what a great entry, what a great trade that would have been. Are we kidding ourselves though? How many of us would have actually gotten in there? I wouldn't have. Now, when you look at it, there were signs here. You would have had a higher low at the time, and if you look at this bar here compared to the previous high here, you would have also had a higher high. So that was the point in time where we switched direction, right? So if you were more aggressive, you might have jumped on that. Me personally, I would have said there isn't enough slope in here. I would not. So If this was a prior all-time high, that's what I would have marked. Above an all-time high, you want to get in there because there's no resistance whatsoever, right? So we could have said, yeah, at this point, I'll jump on that. But the easy entry was back here. Just sit and be patient. You know, sometimes it'll never pull back and come out. It'll go straight up and then give you an exit, and so be it. But more often than not, it'll take off, come back, you know, retest the 20, retest prior support, give you another opportunity to get in, and then you go from there. You know, going from about 70 here to, you know, over 80, heck of a good trade. Nothing to sneeze at. Let's see what else we have here. M Gold is saying, how about an on-balance volume indicator? Listen, if there are indicators that you like to trade with, you can always add them on your chart and incorporate them with victory or whatever other strategy you have. But understand that we don't present these to you without testing them thoroughly. So the way we started this process was to combine several indicators, and then through our testing, we would eliminate them, right? Because for the most part, many of them do the exact same thing. So it's just duplication. And by adding all those indicators on your chart, you're just overcomplicating things. What you want to do is minimize what you have on the chart. So for a number of reasons. Number one, if it's too crowded, you're going to end up missing entries along the way. It's going to be too crowded, too messy. And number two, you know, you're going to have fewer and fewer setups. The more indicators you use and try to have aligned at any given point, the fewer setups you're going to have. Believe it or not, in victory, there are only 2 indicators. That's it. 2 very simple indicators. All right. And then we use something like the 20 here to judge momentum. That is it. Only 2 indicators that come together to create these entry points, because it's all you need. And we tested it over many, many years of all sorts of different markets, right? .com bubble, 2008 crash, boring years where it's just all quiet, consolidating, bull markets, bear market, just technicals, they all work the same. Someone is asking for Crocs. William is asking for Crocs. Let's look at Crocs. You know, last year, I think it was, Crocs was one of the strongest stocks out there. I want to go to the weekly just to show you. Look at that move. Oh boy, did we love trading Crocs all last year. You know, this was the prior high. So again, all-time high, prior all-time high here. So did we take this signal? Absolutely not. Okay. Look at the momentum. It's negative. It's negative. So the odds of this trade working out are very slim. Now, with hindsight, we can look back and say, wow, what a great trade. But you take this 8 times out of 10, you're going to be losing if you take it with negative momentum. But once it broke out to a new all-time high, now we know at that point, look at the slope on the 20 at the time that it broke out to the all-time high, right? And no resistance overhead. That was a no-brainer entry there. And then every time it pulled back, no-brainer entry. So am I disappointed that I missed this portion of the trade here when I could get this and this portion? Absolutely not. Would never take one of these signals. Then the drop started. Now, here, did we have slope here? No. So for trading the weekly, we would exit longs, we would not go short here. And in fact, we're still waiting for that pullback to get in, right? But if you look at the daily time frame, this drop has been happening through all that. Great short entry here, great short entry here, great short entry here, great short entry here. The stronger the trend, the higher the degree of slope, either upward or downward, the bigger the move tends to follow, right? Why? Think about it. The 20-period moving average, all it does is look back 20 candles, right? If you're on a daily chart, it looks back to the last 20 days, averages them out and plots it, right? If you're on a weekly, it looks back 20 weeks and averages it out. So obviously, for it to be sloping with this kind of degree, there has to be a ton of selling going on, right? So that's what you want to write. You just want more of the same. It's that simple. What else do we have? I think Stephen was asking for APA. It looks like, to me, it's hard to see on the chat. Let me just see. APA ordinary. Yeah, here it is. Again, you know, when you look at this, you don't really care what is coming out. A lot of times, I got to be honest with you. I don't know what the company does that I'm trading, and I'm not throwing you a line. I'm not kidding you. When I was trading on the floor, I had every single symbol of every single American company on the American Exchange memorized. It was my job. That's what I was doing every day. I knew it inside and out. Nowadays, I don't have them all memorized, nor do I know what they do. I do not look at a single financial report. I couldn't care less whether they're hugely in debt, whether they have great growth, weak growth. I couldn't care less. Someone's buying for a reason. Now, if you tell me, hey, Vince, here's a setup for a company with a great degree of slope that has been growing earnings and revenue at plus 40% a quarter for the past 5 quarters. And at the same time, here's another stock that has the same degree of slope that has negative earnings growth and negative revenue growth. I mean, which one are you going to take? Obviously, the one with the revenue growth, right? But it's not the main reason why I'd be buying this stock. It's the slope. It's the trend. It's the lack of resistance overhead. That's what I'm buying. Okay. And so you can save yourself a lot of time and a lot of research and just look for the look at the chart. It will tell you the story. It will tell you what's going on. Let's look at a few more here. We're getting close to the time. Intel. And actually, there's no way I'm going to be able to get to every signal here, or every symbol. Sorry. So if I overlook you, it's not intentionally. It's just a matter of timing, because I do want to show you a few other things. Now, look at Intel. I mean, this is a weekly chart. When it's this messy on the weekly, you know, there hasn't been a lot going on with the stock for a long time. I mean, back in the .com days, this was a darling. This thing used to move like crazy. But look at here, going back to 2018 until now, this has been a chop fest, and even before then. So, you know, when you look at a stock like this, I'd say there's no point at all in trading this. I don't care what the story is, what their plans are for the future, whatever, until this chart cleans out and smoothens out. For me to trade this, you know, when I see this, all I see is risk. That's all I see. I see me getting in and getting stopped out, getting in and getting stopped out, right? That's what I see. So does it mean there won't be opportunities for short periods of time? Sure, there will. Look at this one here. Look at that degree of slope. Did it work out? Yes, and it did. Is it rocket science? No, it's not. It's the indicators behind this identifying significant buying going on, significant buying pressure. And that's what it was. And that's why we wanted to take it. Same here. Significant buying pressure still in place, and that's what you wanted. Look at the slope here lower. Did it follow through? Yes, it did. Okay. Not everyone's going to be a huge winner. Some will even be a small loss, whatever it is. But overall, like I said earlier, you will have many more winners than losers and much bigger winners than losers. Now, before I go, I want to show you, for example, does it work on futures contracts, right? Here's crude oil futures. Okay. Fantastic signals. Nice smooth chart, heavily traded, great signals, long and short. That's all you want, right? Does it work on Forex, for example? Sure. I don't know. Like, let's look at Euro USD, for example. Are there going to be signals along the way? Sure there are. Are we going to take all of them? Of course not. You know, you look at this one here, looking back, you see what a great trade. But at the time, no momentum whatsoever. It was flat. I would not have taken it. All through here, flat. I'm not taking it. Were there times when we would have taken it? Absolutely. There were times we would have taken it. Look at this one here. Is it worth waiting for? Yes, it is. And I guarantee you don't have to wait very long, because you can scan across the whole market and find dozens of setups every day on these. How many of you trade in other parts of the world? I know one of you asked for the Hang Seng earlier, but say the Nifty in India, right? The Nifty 50 index, right? There you go. Same thing. Do we want to take any of these? No. Do we want to take these? No. But would this be an exciting time to be monitoring the Nifty 50? Absolutely. Why? You have a clearly defined channel here. What are we waiting for? We're waiting for a breakout. And what happens when we get the breakout? We know at a minimum, we're going to get a move this size, if not higher. And what happened? We got a move even bigger, right? There was a breakout, a clear breakout, right? With higher volume. Did we have slope? Not much. So maybe we would have ignored it. Would we have ignored this one? No. Look at the slope. Would we have ignored this one? No. How about this green setup? No. All three would have made you money, and that's what you want. And now we're selling off with slope. That's what you want, right? How many of you trade crypto, Bitcoin? It doesn't matter what the market is, as long as you can chart it, right? If you didn't know, if you didn't look at the symbol on here, didn't know whether it was a stock, a futures contract, a forex pair, crypto, who cares? Would you take this trade? Look at that slope. It's right near the 20. You have a clear red dot. Would you take it? Yes. Would you have made money? Absolutely. And that's what matters. Why? It's measuring the strength of the trend and the amount of momentum in that direction of the trend. So as long as you take the momentum in the direction of the trade, that's what matters. Okay? So you do not want to take every single arrow. You want to take the ones with momentum on your side. All right. Let's see. Let me just show you. What else should I show? Oh, actually, you know what? I'm going to go into the expert commentary and the scanner, because I have a couple of trade ideas I want to share with you before you leave. Okay. And then if there's time, I will stay for questions. I don't have time to show you Singapore, but I can guarantee you it does, because I've traded in Singapore with this myself. Traded in the UK, Australia, all over the US, Canada, even in Peru, Lima, Peru exchange with this, India, across the board. It's the exact same thing. Let me show you. If you go to the top left here, click on view. Right here. Sorry to bounce around. Here's expert commentary. Those of you that have been trading with MetaStock for a while, I'm sure you're familiar with this, but it'll bring up this commentary window, right? And you'll see the little triangle here on above the most recent candle. It always defaults to the most recent candle here. There's a red triangle there. What the expert commentary window does is, yes, it'll tell you a bit about myself and trading wins and the victory system, etc., right? But what it's supposed to do is hold your hand through the trade. So you can put this little triangle above any candle you want, either by using the arrows at the top of the commentary window or just by clicking over a trade, right? So, for example, here I have it at this red dot. When we got this, it added some extra text in between these paragraphs. Now, notice how, if it's red text, it has to do with a short entry. If we were looking at a long entry, it would be green text, okay? Everything is kept consistent. But it's telling us that it's signaling a short sell re-entry opportunity. In other words, it's not the initial trade, it's a re-entry, but it looks good. So let's say we take that trade, and then as every new candle is created, we move forward, right? Now, it's telling us that we're currently in a short position, right? And it's giving us a level to use a trailing stop with. So now this is Bitcoin, and that's why you see here 43,786.80, right? That's so that if you're going to set this up and go to work and you can't sit in front of your screen, you want to put in a stop loss using that level, right? You go forward the next day and you'll notice that now it's 43.5, right? And then 43,258. In other words, it's trailing it on the way down. So not only is it continuing to tell you that it remains in a short position, that you should remain short, but it's giving you a trailing stop if you want it. And having the candles all painted red makes it very easy to follow that trade, okay? So a nice feature. Now, if you go to the top left and click on the letter P for Power Console, go to the third tab down on your left, which is the Explore tab, okay? And great improvements here on MetaStock 18, love it as well. But at the top, in the top window here, you will see all of the different systems program that you can scan with. If you go to the bottom, because they're in alphabetical order, you'll see all of mine, the Vora method. And then you can right click on here and save them to your favorites tab so that, you know, you get there very quickly next time. But here's the Vora Victory filter. Now, there is a Vora Victory plain and a Vora Victory filter, just like there is a Vora Victory re-enter and a Vora Victory re-enter filter. And what it filters for is that slope, okay? It filters for a high degree of slope, so it'll save you time. So I'm going to mark that off, go down here, and let's just go to, actually, let me uncheck that. Go to, where are the index constituents? Here, index constituents. And I'm just going to go to save time, scan for the Dow Jones 30 and the NASDAQ 100, okay? On the right here, I'm going to pick my time frame. I'm just going to stick with daily for now. And here, it verifies what it's searching for. I'm going to click Start Exploration. And at the top here, you'll notice that I selected 124 different securities, and this is how quickly it's reviewing the charts. It's almost done. And there it is, it's done. So it's populated a couple here. And this is great. Because it has a new long and a new short column, and it's either going to have a 0 or the number 1 in there. So if it has a number 1, that means it's that type of setup. So both of these happen to be short setups. But if there are dozens here, we could sort them by just clicking on these column headers, okay? And here's the slope. Now, anything over a 5, a +5 and higher for longs, or a -5 or higher for shorts is the kind of slope we want to look for. And you can see that Pinduoduo here has a 7.5 negative slope, while Lam Research has a -9, okay? And if we click on that and we click Open Chart, you can see the degree of slope here on this one, right? There you go. So we would take this and now we'd compare one to the other. We would look for things like support and resistance, and you know, is it an all-time low? Is it near an all-time high, etc.? Is it breaking out of a pattern? That sort of thing. And we teach all of that in the training classes that come with this indicator. Okay, it's that quick. Now, before I hand it over to Jeff to tell you how you can grab a copy, let me just give you a couple of trade ideas. They're both on the short side, because that's the kind of market we're in. One is DoorDash here, DASH, okay? DoorDash. Let's have a look at it. We've been dropping for a while, right? And look at these signals, right? Fantastic. We got another one here, but look at the degree of slope right now. Look at these lows. You can draw a line across these lows, can't you? So you can look at this one of two ways. You can jump in now. And one of the things you always want to do, here's what I do. When I get a symbol like this, right, I'm generally looking at this after market close. So like, you know, in this case today, I'm finding this. Tomorrow morning when this opens, I want to make sure that it trades below Friday's low, right? I want to make sure it continues in that direction. Because if it opens up here, am I going to get short? No, I'm not. I want to make sure there's follow through. So I'm going to mark that low, and 1 tick or 1 penny below there is where I'm going to get short. Now, if you see something like this, and it's this close to this series of lows, you could wait for it to breach that level. It's up to you. It just depends how aggressive or conservative you are. The other thing you can do is go to a higher time frame, right? Go to 2 higher time frames and make sure that they're aligned with it, right? So here's the weekly, and there isn't enough data on DoorDash going back for the indicators to calculate the formula up until this point, and that's why you see these in yellow. But clearly, we're sloping lower, and we're in a short trade on the weekly as well. So that is a good-looking short, right? And here's one more before I let you go. KARS, which is the electric vehicles and future motive ETF. Okay, it's an electric vehicle ETF. But have a look at that slope. Look at that trend. For whatever reason, there has been selling going on, and it's a similar looking trade as the other one, right? So here, look, if we were to take these lows across here, and I could have drew it across here as well, but look below, look at the lack of support here. So if it breaks this level, chances are it's coming all the way down here to about 25. So we're looking for a move from about 40 to 25. All right. And look at that momentum and trend that we have on the daily. That looks like a pretty good one to me. So I hope I've shown you enough to give you an idea of what victory can do. Stephen is asking about the 20-period moving average. Is it as simple? Yes, it is. It is a plain, simple period moving average based on the close. 20-period simple moving average. There you go. Not exponential, not weighted, just simple. Okay. I hope I've given you enough. If there's any questions, happy if there's time to stick around, or else you can always contact MetaStock support and or the sales team, and they'll be happy to demo it for you and walk you through it. Okay, so with that, I'm going to pass it back to Jeff so that he can show you how to get yourself a copy. But again, I want to thank Jeff and his team for having me on today, and thank all of you for joining us as well. I'm really glad to be here.
Before we transition back, I did promise Mr. Giulacanti. That was easier than his first name. That's why I called him Mr. But I promised that we'd look at one more symbol. So could you look at NET or BABA? Either one.
Sure. Cloudflare, NET.
I'm assuming that's it.
Is it .k? No.
I think it's just dot or just NET, no dot.
Ah, there you go. Cloudflare. Yep, absolutely. So, you know, when this was hot, when it was in favor and people were buying it, we're going higher. Now, look, at the time, this would have been an all-time high, right? Whenever you're breaking out to an all-time high, and especially if you have slope, it's definitely something you want to look at. We had a signal here. Would we have gotten along here? No. Would we have gotten along here? Absolutely. Okay, but if we missed it, we missed it. But look at this. Would we have gotten short here? No. No slope. Look at here. Beautiful trade. Look at here. Beautiful trade. This is what you want to focus on. This is what you want to capture. You want to sit through this while it's doing nothing? No. Down here? No. And if you miss it, who cares? It means you're in a different trade at the time. Worry about the ones you catch, but this was a great looking trade. And just quickly, I'll show you Alibaba as well. That, you know, has been taking a beating for a very long time. Here, let me highlight it on the weekly to show you. There it is. And, you know, the other thing you can do, let's say you prefer to trade on the weekly time frame, on the daily time frame, right? But you see a signal on the weekly like this with significant slope lower, right? What you can do is you can jump in right away here, or you can just be aware that for the next several weeks, who knows how long the trade is going to last, Alibaba should be dropping. So you're going to switch to the daily time frame, and then look for a similar entry, meaning an entry with slope in your favor at that point, right? But you can see here, going back to last year, great signals all the way through, and before then on the way up as well. Again, breakout to all-time high. What a beautiful ride. So there you go.
Good job. Thank you, Vince. I appreciate that.
Yeah.
Good job as always. And we're getting a lot of Anissa says this was an insightful section. Thank you. Bobby says great presentation as always. And good job as always, Vince. We really appreciate that. So I am going to show just one other thing in there. Sure. And we had a question in terms of does it work well with options? And what I wanted to actually show about that, can you see my screen just now?
I can. Yes.
Okay. I just want to make sure. So in the, it does work well with options. And one of the things I like particularly about it is in the commentary that Vince showed, it gives you some advice for that. So I've got the commentary open, and I've opened it to a bar that's just a re-enter bar. And just one of these opportunities to re-enter on the short side. I think I even maybe got it a little bit off screen. But what I wanted to show you is every single day there's going to be some advice in terms of what you should do. It's going to talk about what the slope is looking like. It's going to tell you, in this particular case, the Vora system is currently signaling a short entry opportunity. So, and then if you look here, just to kind of talk about that, I'm just zooming in a little bit on it so you can read it a little bit, read along with me in your book if you'd like. But you'll see that if you're looking to, if you miss the, so this is a re-entry. This is one of these diamonds. I can't remember which one I clicked. It's not important. But if you're interested in, if you missed the initial purchase or are interested in adding more, you could look to short the stock. If you're an option trader, you could look to consider the intermediate term put options that are 2 to 3 months before expiration. These signals can last about 4 to 6 weeks. If you're aggressive, you can look 2 to 3 strikes out of the money with a delta of about 20 to 50. If you're conservative, you can do 1 to 2 strikes with a delta of about 70. So not only does it work with options, it actually gives you some pretty good advice in terms of you. The workflow for that is in MetaStock, there's a list of all the optionable stocks. You can just scan them every day. And then with this one, it'll kind of give you some advice in terms of once you decide on what stock you want to long or what stock you want to short, exactly what parameters you should be looking for that. So Vince did a really, really good job in kind of putting together some really good commentary. And you look right here, it's also got some advice in terms of how to get out of the position as well. So very, very good system. Vince, I really want to appreciate you for coming in. And thank you for all the time, the couple of years that you've spent with us in terms of developing out systems, all the work you've done with us. I appreciate it.
Thanks again, Jeff.
All right. Take care. Thank you. Okay. And I'll talk a little bit about how to get this as well. So this is a system that, let's go ahead and get back into my presentation. Okay, there we go. So as he talked to, as I just showed you, it has kind of the detailed commentary breakdown. You've got the expert alerts that can fire off. You've got full market scanning for the triggers and the entries. We added actually the filtered explorations and the ability to do filtered explorations. It does include system testing and the ability to do system testing. So very, very good add-on. What we're doing with the Vince Vora is we're going to offer it to you as a one-time cost. So you only have to pay for it one time. Then it's yours forever. Normally, the add-on for Vince Vora's Victory Method is a $1,997. What we're going to do here at the summit is we're going to do a $995 webinar offer. Okay. If you're new to MetaStock, if you don't have MetaStock, don't worry. We've been rated #1 29 years in a row, I believe is the exact number. And we'll include a free trial of our real-time product as well as the real-time data you need to run it. We'll actually give you, as part of your purchase, a bootcamp class. We also back the purchase with a 30-day money-back guarantee. So if you try it and it's not for you, we apologize. you get your money back. It's a really good risk reward scenario. So $19.97 is the normal price. Here at the event, it's $9.95. I'd encourage you to try it. It's a great product. It was our best selling product of last year. Absolutely encourage you to try it. And if you do buy it, you decide you don't like it, that's what the money back guarantee is for. You can do it with little risk. So there you go. Okay. It is also part of the Summit Traders Action Pack that we'll be doing today, where you can get Trade Trend 3-for-1, 3 months of that. Vince Vora's Victory, the Oscar Carboni Omni Trading that we did back in November, the Magic Trader Elite, 3 months of that, a subscription to learnmetastock.com, Unleash the Power of MetaStock, and 2 years of Stocks and Commodities provided by our sponsor, Stocks and Commodities today. So normally the price for that would be $4,484. Here at the show, it's going to be $2,193. You can take advantage of that at metastock.com/summit deal. You can give us a call at 800-882-3040. Or even if you just want to get some more information or get some charts, metastock.com/sales chat. That'll help you as well. So there you go. I do want to say thanks again to Stocks and Commodities Magazine for sponsoring the event, and the CMT Association as well. They've been good sponsors, and we appreciate all of the work that they've done over the years. We're going to go ahead, and just because we're running a little bit behind on time, we're going to skip this slide, but we're MetaStock. We won 29 years in a row. And we do offer an extended trial as well, and we can tell you more about that if you go to metastock.com/sales chat. So our next guest today is Tushar Chande. I am actually just pulling up a couple notes so I can remember his books. But Tushar Chande is somebody that actually gave me a call. I want to say it was about a year and a half ago or so. It's kind of what I'm guessing. He said, "Hello, my name is Tushar Chande," and I know who you are. It was kind of how the conversation went. With MetaStock, I've been here about 25 years, and we've been doing system testing for a number of years. And one of the systems that actually we test quite frequently is a system that's built into MetaStock called the stochastic RSI. And Tushar Chande developed that with Stanley Kroll. And just from the amount of testing that we do with the demos that we do and stuff like that, one of the things that we've noticed over time is that stochastic RSI system is one of the most consistently profitable systems that are built into MetaStock. So when Stanley called, I was really, really excited to get some stuff working with him and to kind of develop a product with him. And that's what we did. We put together some stuff. But, I know Stanley for a number of years. He wrote one of the most popular books with Stanley Kroll called The New Technical Trader. And he's also written a book called Beyond Technical Analysis. He's got 15 years of experience in the market. And he's right now a hedge fund owner. And yeah, I'm looking at my notes in a CTA, but he's also an incredibly nice guy. I like working with him. Tushar, you've been great. And hey, you look really nice today too. I like the sweater look.
Trying to look sophisticated, but it's hard.
Yeah. Well, no, I think you're pulling it off quite well. Let me go ahead and let's get you on here. Yes, okay. I know we're running a little bit late in time. And it's okay if you need to go over. I'll make up the time later during my presentation.
Can you see my screen and hear me?
I can hear you, and I can see your screen, and everything looks good.
Okay, excellent. Thank you, Jeff, and thank you to everyone at MetaStock for having me here and putting on a great conference today. I really enjoyed Vince's talk. It was so full of so many ideas and opportunities. This is awesome. Really fun to listen in. Thank you, everyone, for stopping by today. Very nice. So as Jeff said, we've created a new product with them called the Tushar Chande's Complete Toolbox. Now, I've done a lot of trading and testing over the years, and this sort of, I've taken a difficult problem and made it simple. So now I have the difficult problem of convincing you that it's really simple and easy to use. So I sort of have a provocative title that it's all you need, really. So let's see if I can convince you that the tools I've built are sort of useful and interesting. Now, as usual, I have to show you a disclaimer. The main thing here is that remember that past performance is not necessarily indicative of future results, that there's risk of loss in trading, and of course, that you're responsible for your own trading decisions. Now, so the question becomes, what is the big problem we're trying to solve? Like, what's the big picture? So when you're a trader, you have to deal with two basic challenges. The first one is that markets are random. And that's why I showed you a disclaimer and why everyone shows you a disclaimer. Random means you don't know precisely what the markets are going to do. And the other problem is that we have too many choices. As you saw in all the presentations before, there are literally, hundreds and hundreds of things you can trade at any given moment. So what I'm going to do is my solution to the problem is to focus on what to trade rather than how to trade. So the majority of the speakers and talks are focused on how to trade. So I'm going to kind of flip that on its head and focus on what to trade. Because I think once you can figure out what you want to trade, then it's much easier to figure out how you want to trade it. So I'm going to do a little something different. Now, this is an interesting chart because I want you to recognize that I don't want you to underestimate the randomness of the markets, right? So if you look at this particular chart, it doesn't have a time axis and it doesn't have a y-axis scale. So there's no price scale and there's no time scale. And why is that? Because I want you to focus on these three arrows. It says we don't know when a trend is going to start. We don't know the duration of that trend. We don't know how long it's going to last. And then we don't know the amplitude of the move. We don't know how far it's going to go. And if you just look at this chart, there are a couple more indications here where we got the same signal, but didn't have the same duration or the amplitude. So one of the problems we're trying to battle is that we cannot underestimate the randomness of the market. So we don't know exactly what they're going to do. And this is, of course, the new, fabulous Microsoft, the MetaStock 18 Explorer. And you see the problem here, there are 313,000 something instruments. This is impossible for anybody to trade that many instruments. So the other problem is choice. So even if you are, very well capitalized, there's just a limit to how many things you can analyze and trade on any given day. So those are the two problems that we have to grapple with. And somehow we have to find an easy way to get around them. So that's what I'll help you with today. So the most important question is this instrument trending, right? That's the fundamental question we're trying to answer. And whether your weekly chart or you use a daily chart or you use intraday chart, the question is still the same. Is this instrument trending? Because once you can answer this question, life becomes easier. And sort of you get a binary choice, if you wish. If it's trending and the answer is yes, you use a trend following approach. If you say it's not trending, then you can use a counter trend approach. And what I mean by that is initially I'm just talking about entries. So we're talking of a trend following entry or a counter trend entry. And then you can combine them with trend following exits. And all of this terminology will become clearer as we go along. So that's the most important question, is it trending? And how are we going to answer this question? We're going to answer this question using something called the trend meter. So whenever you design something and you want to look at many different trade-offs, before you can use this trend meter, I want to spend some time just to show you what it looks like, and then we can go into the details of how it's constructed. So you can internalize it, and then you can sort of get comfortable in how it's being applied and what the answer is when it says, is it trending or is it not trending? So let's look at the trend meter. So this is a very long-term chart of Microsoft. The two panels, the lower panel has the monthly data, the upper panel has a trend meter. If you look at the scale is from 0 to 100. So when there's a very strong downtrend, you'll get a reading near 0. When you have a very strong uptrend, you'll get a reading near 100. So if you look at the lower panel for a moment, you see there's a blue line going across, which is sort of from a previous high. Then somewhere around 2013, 2014, Microsoft broke out, and we had this sort of beautiful exponential move. So if you look at the trend meter, it also broke out above 80, and then it sort of went above 90. And for most of the duration of the move, it stayed above 90 or very close to 100, and it was sort of flat all the way across. So that's the fundamental signature or visual signature that we're looking for. So that's fine. Let's look at other time periods to see how this works over longer time period. So again, scale is from 0 to 100. When the trend is very strong, or the uptrend is very strong, you should get a reading above 90, and it should sort of stay flat all the way above. And the converse is also true. If you get a low reading, say below 20, that would be a sign of a strong downtrend. This is Microsoft again with weekly data. So we've shortened the time frame. Now it's from, say, about 2017 through the most recent time period. Again, visually, it looks very similar. Whenever you had a strong uptrend, the orange line or the trend meter was above 90 and sort of flat all the way across. And visually, you can't really tell whether you're on a monthly chart or a daily chart or a weekly chart. Again, scale is from 0 to 100. Let's look at daily data. Now, again, for all practical purposes, you have, it looks virtually the same. There's more fluctuation because we are on daily data. When the trend is strong, it's above 90 and stays there and sort of holds above 90. And when the markets, or when Microsoft is going down, it dipped below 20, or sometimes dipped below 80 when it was consolidating. So if you want to ask just a snapshot question, is the market trending? Is Microsoft trending? You only need one number to look at. And if it's above 80 or above 85 or above 90, you know exactly what it means. It means that you have a strong uptrend. This is Microsoft intraday data. I've used 4-hour time frame. Again, upper panel is the trend meter, lower panel is prices, and you see it looks exactly the same. The scale is 0 to 100. In the middle of the chart, you have a period when Microsoft was trending higher. CTM was above 90 and kind of stayed there. Maybe bounced around a little bit more here because we have intraday data. And then when we had a downtrend, it dipped below 20. So again, we're looking for a consistent way to model the trend. And we're asking the question, is it trending? How strong is the trend? So here I've put all 4 time periods on a single slide. So you can see the monthly data, the weekly data, the daily data, and the intraday data, or the 4-hour chart. And you see that visually, it looks exactly the same, right? When the market, or when Microsoft is trending strongly in that particular time period, you go above 90 and you stay there. When it's trending down, you go below 20 and you stay there. Now, of course, you could draw a line at 80 and 20 or 90 and 10 or whatever particular value makes more sense to you. But it's clear that by design, it'll be high and flat when you're trending up strongly, and it'll be low and flat when you're trending down strongly. So this is sort of the essential tool that will help us here on out in terms of scanning for opportunities, in terms of designing trading systems, in terms of designing exit strategies, because it helps you intuitively understand that the market is trending or the instrument is trending. And now it allows you to make an apples to apples comparison. So you can compare something from New York to Mumbai to Tokyo or Hong Kong. And essentially, if it says it's 90 on a daily chart, you know exactly that it's just that what it means. It means it's trending higher strongly. And that means the same thing whether you're looking for a bond fund or anything else. So I'll take a couple of moments to sort of look into the design of the trend meter. So the problem is that in technical analysis, there are a lot of different tools available to answer the question, is this instrument trending? And the problem is that if you take, say, any one tool and you look at one time period and you look at another tool in the same time period, the two tools will often give you different answers. And then if you look at the same tool and you look at 2 different parameter sets in the same time period, you again get a different answer. And then if you look at a different time period and you look at the same tool, you'll get different answers. So it's very difficult to get a consistent answer to the question, is this instrument trending? And that's kind of the problem we're trying to solve. And you saw from the charts that I've shown you that what we're looking for is very clean, simple, straightforward answer, like a single number we can look at to interpret, is it trending or not? Now, what we've tried to do is we've tried to combine different tools to answer the question, is this instrument trending? But it's not that easy to combine the tools, right? So the first problem is, which tools should you combine? There are like hundreds of choices. Then the second problem becomes, okay, we've chosen some tools. Now they have variables. So which parameters should we combine? Should we take 2 of these and 3 of that, or what? And then if you look at the same sort of instrument, sometimes you have multiple parameter sets. So the question becomes, how do you combine multiple parameter sets? And then a not so simple problem is that, how do you get consistent scaling? If you look at different technical analysis tools, they're not on the same scale. They're not measuring the same thing. So they're giving you stuff on different scales. So how do you combine all these different scales in a way that makes sense, that's consistent? And lastly, you always have the problem of, how do I weight this particular component? Now, why is that relevant? Because there's like a speed of response problem. You don't want to respond too fast, because then you'll get too many signals, and you don't want to respond too slowly, because then it'll just be, it'll be sort of sluggish to respond. So you're trying to balance and somehow resolve all these different opportunities and problems, but try to get it to work in a coherent and consistent way. So luckily, I've been able to do that. And so this is sort of a snapshot view of what the trend meter does. So primarily, it looks at 4 different time frames. So we're looking at 25, 50, 75, and 100 bars. So sort of short to long, or medium to long term. These are all relative terms, but we're not looking at 1 or 2 bars. And then I use 5 different classes of technical indicators. So I have bands, channels, returns, oscillators, and patterns. So looking at many different ways of asking the question or answering the question, is this instrument trending? And then when I combine them, I have 28 internal components or tests or combinations, so that we're looking at a lot of different ways of answering or combining these different indicators. And then lastly, I've designed it to make it breakout friendly, because there's this whole question of how smoothly or how easily or how rapidly you want the indicator to respond. So again, we've looked at a lot of different time frames, 4 different time frames. We looked at a lot of different tools. Each of them is giving a slightly different answer at each moment in time. And then we've tried to combine them and weight them in a sort of a internally consistent way. And then we've designed it to make it breakout friendly. So if a market is breaking out or an instrument is breaking out, we want it to respond relatively quickly, because we want to take advantage of the breakout. All right, so the primary application is to make an apples to apples comparison. We want to take any 2 instruments from any exchange or the same exchange and be able to say objectively, are the 2 things trending? Now, obviously, because the scale is from 0 to 100 and something is 99 and something is 98, there's really not that much difference. So you sort of have to categorize it or strategize it a little bit. So the scale is 0 to 100, and the key levels are 80 and 20 or 90 and 10. So once something goes above 90, there's not that much difference between, say, a 95 and a 97, right? But there's a big difference between 10 and 90. And then it looks like other oscillators by design, because it's built using closing prices. So if you compare the closing prices to the trend meter or the RSI or anything else, they look quite similar, because it's being driven by closing prices. But of course, internally, it's completely different. One of the things I like about it is that there are no input parameters, which means it's plug and play. So you don't have to worry about, should I use 14 days or 20 days or whatever. And again, I've shown you the chart, so it's flat at trend extreme. So that's one of the design challenges and benefits. So we want to say that when it's trending, we want it to kind of remain in the region, like above 90, when we know it's trending strongly, and not bounce around too much when it gets there. And of course, we can use any time period. So if you want to trade infrequently, you can use a longer time frame, like weekly data or monthly data. If you want to trade more frequently, you can use intraday data. So it's something that moves seamlessly from time period to time period. So now, having sort of gotten a flavor for how we've mixed and matched and built it inside, now we can go back to looking at charts and seeing how we can apply this thing. So this is RK, darling, during the whole COVID run-up. And the reason I put this chart is it had this great move up, and you can see that, and then there was a consolidation and a down move. So on a single chart, you can see a scenario where CTM is above 90. So you see it's above 90 and trending higher and staying there. And then on the right-hand side of the chart, you have a period when it was below 10 and staying there. So the idea here is that you can see that the indicator itself doesn't have any particular bias in terms of favoring the long side or the short side. It's just measuring sort of with equal exposure or equal decision-making algorithms on both sides, and then it's just giving you a summary number. And so you don't have to worry about saying, am I making a good judgment or not? And then, of course, there's a certain level of smoothing involved, a certain level of, smoothing out so that we don't get too noisy indication. So this is an example of on a single chart. You can see when it's trending strongly and when it's trending down or not trending strongly and then trending lower strongly. So how do we actually use it? Of course, you'd have to put it in a scan and scan it through the fantastic Explorer that I showed you a chart of. Now here, we had a sell-off in January, and then the bottom was on the 24th of January, and this particular run is from the 27th of January. And you see that the first one that showed up was the ProShares Short QQQ ETF. Now, also you can see that we scanned about 2,700 instruments, and only about 66 of them were trending strongly. Now, clearly, this is a relatively volatile ETF, so it's not the right answer for everybody. But I just wanted to show the scan to show you that, yes, it's possible to find opportunities in a downtrending market, in a generally downtrending market. So here's a chart of the intraday. Again, I've used 4 hours or 4-hour chart with the PSQ. Again, this is a volatile instrument, so it's not something that's right for everybody. But again, you see that the CTM was above 90. And it stayed there for this duration of this up move, or in the PSQ, i.e. the down move in the market. And the indicator itself doesn't really know what's happening in the market. It's just telling you that this is trending very strongly on an absolute basis. So this is sort of an absolute trend strength rather than a relative trend strength. And again, it's an opportunity to even find opportunities in an otherwise sort of downtrending market. So it's a search tool. You want to find strong trending objects and instruments. And then once you know that it's trending strongly, then you'll have an opportunity to decide how you want to actually trade it. So this is strictly what to trade sort of solution in terms of how you want to use this tool going ahead into the future. Now, this is another scan. This is a more recent scan from the middle of last week where we had this sell-off onto the 24th, then sort of a bounce, and then more weakness this week or late last week. Now here I changed the scan a little, but I only scanned the S&P 500 universe. So if you look at the data, we have about 500 stocks, and you see it rejected virtually all of them because it could only find 5 stocks that were trending higher strongly. And if you look at the CTM values over here, and the CTM values varied from about 93 to 100. So basically you can say that they're all above 90 and they're all trending higher strongly. So again, this is an opportunity to scan during a down market and an opportunity to look for stocks that were trending higher. And in this case, I've used the S&P 500 universe. So these are large cap stocks. So lots of liquidity, and you don't have to, you're not buying something, and you're not buying an obscure symbol, so to speak. This is a mainline stocks with lots and lots of liquidity and participation. So this is a chart of Philip Morris. You see that in the right-hand side, I have drawn the line at 80, but it's above 90 for sure. And you see that it is trended higher in the last few days, even as the market itself was selling off. And then in the lower panel, you see that we have some sort of up arrow, which gives us a signal getting in. And you see that it has been long since roughly the early part of December. And I will tell you what this is. This is a swing system, and I will discuss it in detail. So the point here is that we have a down market, and yet we can identify opportunities in a down market. And the other thing is that we have very sort of a consistent and clean process for identifying what's trending and what's moving up strongly. Let's look at Marriott International. So this was also on that list. So if we just go back for a second here, you see that MAR was the third one on the list. So we'll look at MAR. Again, the right-hand side, you see that the values are above 90, so it's trending strongly. If you just look at the lower panel, we see that we had some highs or maybe a double top, if you wish, sort of a breakout above highs that were set in the October bounce and then again in December. So we definitely have a breakout of some significance. And you see that we didn't have to worry about looking at the chart and drawing this line and that line because the trend meter told us that it was trending strongly. So that's the beauty of this approach. You don't have to draw 1,000 indicators or whatever. We have looked at many different ways of quantifying trend strength, and we're giving a single number. So the advantage of this is you can run a scan, you can find what you need to focus on, and then you can only worry about how you want to trade this instrument, and don't have to worry about lots of things bouncing around on your chart. So obviously, the next sort of challenge here is to take the analysis and convert it to a trading strategy. So we ask the question, is this instrument trending? And then if the answer is yes, we can use trend following systems or trend following approaches. And if it's no, we use a counter trend systems or counter trend approaches. So we have a consistent process of ranking stocks. As soon as you see a number like 90 or a number like 20 or a number like 10, you know that, okay, it's a trend following system or a counter trend system. So this, by being able to properly answer the question, is it trending, our life becomes dramatically easier. So what do I mean by system? A system is sort of robust rules. So you have entries on if in any system you have entries, you have risk management, and you have exits, sort of a simplified view of a trading system. And so you may have one or more entry rules, then you need one or more risk management rules, which could be things like trade size and your exit stop, a hard dollar stop, and so on. And I've left those out because I'm sure everyone has a different process. And then you have an exit, or you have one or more exits, which could be a profit target or a trailing stop, or an entry in the opposite direction. Lots of different ways of getting out of a trade. So I just want to spend a moment saying here that you can be a discretionary trader, which means that you use different rules on different for each trade, or you can be a systematic trader by using the same rules on every trade. So that's a choice you have to make in terms of what suits your personality. And even whether you're a discretionary trader or a systematic trader, you're sort of using some written or unwritten rules or approaches to get in or get out. And then ultimately, I would nudge you in the direction of being a systematic trader. But the fundamental question you still have to answer is it trending? And once you know it's trending, then you can go with a counter trend system or a trend following system. So schematically, if it's trending and you want to be, if you're a trend follower, you're buying strength or selling weakness. So if the market is going higher or the stock is going higher, you want to go long. If the stock is falling, you want to go short. And then conversely, if you are a counter trend trader, then you want to buy weakness. The stock is falling, you want to buy it. Say, you want to buy it against 20-day moving average, or you want to sell strength. So you get a reversal up to the 20-day moving average or whatever, you want to sell it. So it all depends on whether you want to be a trend follower or a counter trend trader. So I have 3 systems in this package, and essentially these are the 3 systems I have in there. So the point I want to make is that trading systems catch different types of price action. So each system is designed to recognize and respond to a particular type of price action. So if you have a trend following system, I have a long-term system in the package. Though if you want to just trade for the very long term, for a relatively slow moving system, but we're looking for a long-term trend. And then there are 2 counter trend systems, a swing system and a volatility breakout system. And I will explain them in detail. Now, the important thing to recognize is that these are entry conditions. So the exits are still trend following exits, but the entries can be trend following or counter trend. And again, we're following from, is it trending? We use the trend meter. If it's trending, yes. Prices are rising. We want to use a long-term breakout type entry. And then conversely, we'll have a swing system or a volatility breakout system. Now, The thing I want you to recognize is that the parameters are the same on all instruments. So we're not optimizing in any way. We're not trying to, on the fly or any other via other means, trying to make a market specific or a stock specific system. These are generic rules. We want to apply the same thing over and over again to a large basket of rules. So I'm going to use Tesla as sort of the sample or the example that I want to use to explain the three systems I have in the package: the long-term system, the volatility breakout system, and the swing system. And again, remember what I said is that the systems pick up different types of price actions. So let's start. I'll take a slight detour and show you what I don't want. So this is a trend following system. It doesn't matter what it is, but you see that you just get you get hundreds of signals all the time, and you somehow have to figure out which ones you want to take and which ones you want to ignore. And since we want to be systematic, we have the problem of having too many signals. And also there are tax consequences of having too many signals or losing trades jammed together. So, and if you're trading a huge portfolio and you're generating lots of signals, this is mind-boggling. So those are too many signals, and we really don't want to have a process where you're generating lots and lots of signals all the time. And then this is a counter trend system. Just doesn't matter what it is, but it's generating lots and lots of signals. So this is not what we want. So the systems that I will show you are generating really clean and relatively few signals. So you don't have to, and they are generating signals in the one direction. So you don't have to worry about this constant, back and forth. That's sort of mind-boggling, and you somehow have to figure out, are you going to take it, not take it, and why do you take it, and so on and so forth. Okay, so this is Tesla. We have a long-term system. You see that we have a green line, which is some kind of signal line. I'll explain in a moment. Then we got an entry signal in this green arrow. We kept riding it higher. We got little blue arrows telling us yes, it's higher. And then we have red dots trailing around here, which is our exit. And then you see that Tesla made a new high, came back down, triggered our stop, and we got out 1 day after the absolute high of the move. So trend following system, it's a trend following entry. We got a long-term breakout, so we took it. Then we have a trend following exit, which are these red dots. In this particular case, I'll show you that I've set a certain distance from the highest high, but you can adjust it to being a wide stop or a narrow stop. But for now, we use the default. But the main thing to recognize is that as the prices accelerated, the trading stop also accelerated, and we got out 1 day after the absolute high of the move. So that's a great trade. Didn't have to think about it. Don't have to have any guesswork. We know exactly when to get in. We know exactly when to get out, and we only got one signal in the direction of the trade. So really clean, really easy to manage. Let's go back to the Tesla chart, and I want you to look at the the left-hand corner here, sort of in the November-December timeframe of 2020. We had a sort of a triangular consolidation. Tesla was going to be added to the S&P 500 index, a lot of excitement, and of course, all the index funds had to buy in. And so let's see what happened. Let's see how we could trade that particular event. So in this particular case, we use the volatility breakout system. And you can see that there's a green line, which is some sort of trigger line. And then we have a red line, which is sort of an exit line. And this is a 1 day event. You see that we had this doji cluster on the right-hand side, sort of indecision, and then a big step up, like a big 1 bar that was significantly higher than everything before it. So that's our signal that we have a volatility breakout. But then we also want strong follow through past the volatility breakout. So you see that we got the solid green bar and then a big bar right after the initial breakout, which is like a strong follow through. That's what gives us our entry. And then we are off and running. And again, this is a volatility breakout system. We have no idea where it's going. We take this red line, which is our exit, and eventually it gets us out sort of in early or so towards the end of January 2021. And we get out, say, 3 or 4 days, say 3 days after the absolute high of the move. So again, from a point of view of a mechanical system, that's fabulous. It got us in after almost 1 day, only 1 day after the first surge. And then it got us out, say, 3 days after or 2 days after the main absolute high. And we didn't have to think about it. I mean, in the sense that the entry was baked in, follow the rules, the exit was baked in, follow the rules. all you had to do was, go in the sort of change your stop every day before market opened. And then you see that if you look at the ribbon down below, there are all these periods marked about week down, green, week down, strong up. We could ignore all that. So on a short-term basis, there were still lots of ebbs and flows in the market in Tesla, and we could ignore all that and just sort of ride the trend and get out on a high side. Now, obviously, not every trend works that way, but what I'm trying to say is that there's a one-bar trigger. We got this one big, huge bar up, then we wanted a strong follow-through to get in, and then we use a trend. So we had a sort of an event-driven entry, if you will. It's counter-trend because the price was weak, so we bought strength after weakness, and then we got out on a trailing stop. So again, simple design. Once you understand it, then you're comfortable using it. This is just to remind you what the Tesla chart looks like. And in the middle of this chart, we have this huge area of sort of consolidation, maybe sideways move. Stock has absorbed a bunch of selling. Now it's sort of forming a base, trying to move higher. And how do we trade that interval? So this is the Tesla swing system. So the Tesla chart with the swing system, we are buying strength after weakness. So I have those arrows down. You see that there's a little period of weakness. We buy strength after weakness, and then we use the trailing stop. Then again, we buy strength after weakness, and then we get all the way to the end. So now here again, we're using a counter trend strategy. We're buying strength after weakness. We have some sort of entry line and an exit line, and we just follow mechanically along. And the idea here is that you remember the Tesla chart. There was a huge surge on one side, a big breakout on the right-hand side, and sort of a long period of consolidation in the middle, or base building in the middle. And we were able to participate by using different systems along the way. So again, a summary: when the prices are rising, we have a long trend following long-term entry, or a swing system and a volatility breakout system as a counter trend entry. So now that you've sort of seen how the individual things sort of work, we have a trend meter. Is it trending? Is it not trending? If it's trending, we have the trend following entries. If it's not trending, we have the counter trend entries. So let's spend a little time just looking at the long-term breakout, just to give you a sense of what's happening. Some chart, we don't know what it is. Huge long-term trend. How do we analyze it? Now, this is the ARC ETF chart. We have some sort of a band on it. Doesn't matter what it is. Once we get above, we want to trade outside the band. So here's the green arrow specific entry condition. Comes back down. We get stopped out. We get a re-entry. Okay, we got stopped out. We got a re-entry. Kept going. Got a very nice exit towards the end. Right. So specific entry condition, specific exit condition, relatively few signals, clean and in the direction of the main trend. So we don't have to deal with 1,000 arrows going up and down, and you're not left wondering what you should do. Should you accept it, reject it? So just as a summary, the blue arrows sort of tell us what to do. Relatively low trading frequency. We're trading in the direction of the major trend, and it's plug and play, right? Specific entries and exits. The commentary tells you exactly when to get in, when to get out. So you just have to move your stops as you go along. And this is trending, so the trend meter would tell you, yes, RK is trending. Now it's up to you to decide whether it's something that interests you in terms of trading or not. Again, a long-term example, some chart, we don't know what the prices are. We don't even care what it is in a way. This is Devon Energy. Same thing again. We want to trade outside the bands. We have some entry process, the blue line, the entry line. And then we have these red dots, which is our exit line. And in this case, I've used a loser stop. So it's a wider stop, if you will. So the wider stop will give you fewer re-entries, but of course, it'll be slower to get out. So again, this is a matter of individual preference, but you can set it, tighter or looser, based on your particular preference. But the thing to remember is that we pretty much got relatively few entries. It's very clean in the direction of the major trend. So, if you're sort of trading occasionally, don't want to trade too frequently, this is a nice solution for you. So again, just to show you what the trend following the long-term system looks like, here we have this, entry arrow over here, a green ribbon that tells you everything is good, goes higher, comes back down. Made some money, maybe you could have made more, but again, if you remember the first chart, we don't know the amplitude, we don't know the duration. So you just have to keep rolling with the rules that you have for the system. And obviously, in terms of the trend strength, you will find it because that's how the scan is built. Okay, so let's take a moment and just look at the volatility breakout system. So now I've explained to you the trend meter, and explained the long-term breakout or the long-term entries, and then the volatility breakout, which is a counter trend entry to this process. Now, this is the Tesla chart again, just to go back and refresh. The we had a little consolidation, these bars of indecision. And remember that the double-sided arrow tells you that we are looking for a gap, and you can write, like 1,000 functions for how you want to define what's a significant gap for you. And once you get a move above, you move through the gap. So the low is a single bar event. You get one big bar that blows through the gap, and the low is above the gap. Now you have your start of the process. Now you're looking for the entry level. And again, the double-sided arrow over there tells you that you can adjust the entry level so you get more entries or fewer entries. But it's a one-day event. You get a big move in, a big sort of surge up higher, and then you're looking for a follow-through to get in. Again, this is the same Tesla chart, and you saw that we moved higher. And then again, trailing stop, and we got out here. So the idea is that we're looking for, by design, we're looking for a one-day event with a large move higher, and you can define what do you mean by large. This is an example of Crocs. We had earnings report, strong move higher, and then entry on the following day, and then here was a trailing stop. So again, mechanical process meets a certain criteria, off you go. This is Mira GTX. So you can see a messy chart, if you will, the strong downtrend, and then sort of a double bottom. We broke out strongly out of this sort of downtrend line. So we broke out strongly. We're in on the follow through. So again, we're looking for a surge breakout. Something unique has happened. There's earnings or whatever. And then you can design a system to set wherever you want, how wide this gap to be, and then you're in on the follow through. And then you keep following. Of course, the daily commentary gives you a trailing stop on when to get out, and sort of gives you some guidance on where the stop gets placed and so on. So again, unique price action. Something is happening now. We can get in with high selectivity. We don't have too many counter signals, and then you get out on a trailing stop. So relatively straightforward and easy to follow. And then let's spend a few slides here looking at the swing system, because we're sort of running out of time a little bit. So the swing system is somewhat similar to the breakout system, because it is a counter trend, the volatility breakout system, because it is a counter trend system. But the logic here is different. It's not a one-bar event. It could be a multi-bar event. So we have some trigger line, or we have some trailing stop. We can adjust the gap between the trailing stop and the trigger line. We can make it wide. We get few signals. We keep it narrow. We get a lot of signals. And then once you get a close above this line, or the signal line, then you still have another little decision tree there in terms of how easily you want to get in. So you can set the barrier to entry as wide or narrow, again, based on your preference. And you can see that, for example, here I have the trend meter above. Typically, the trend meter has picked up the signal that the trend is stronger. And of course, we already have an entry going in from the swing system. So this is a counter trend entry on, I think this is Abbott. You have weakness, you have strength after weakness. You want to buy strength after weakness. Entry level, again, we have some signal line, barrier line. As soon as it goes through, the ticker starts in terms of should we get in. This is a very important chart to understand how this process works. So the breakout I showed you in the previous slide is to the right-hand side of the chart. You see that we got this breakout and we are moving higher significantly. There are two nice swing trades before it, but then in the red box, you see we have a sort of a gap down. So that's one of the weaknesses of the system. That is, you have gap risk, because this is a counter trend signal. You're buying strength after weakness, but there's nothing to prevent the weakness from reasserting itself. And sometimes, even though you have a trailing stop, the market could open through your stop. And this, you say you may be budgeting a loss of X, you might get a loss of, say 2X, for example, or more. So that's something to watch out for. That the gap risk is definitely something you need to be aware of. So you have to be diligent in placing your stops, but that doesn't mean that it's not going to open through your stop. And then One more example here. This is swing system Verizon, and you see that they have a lot of consecutive losing trades. So that's another failure mechanism, because you're buying, you're trying to buy strength after weakness, and the weakness could continue, so you could have a series of losing trades. So that's another filter you need to have here, where you need to decide that, if I have got 3 or 4 losing trades in a row, I'm going to trade something else. So just to understand that, like any set of rules, these are also vulnerable to breakdown. This is the swing system on the SPY for last year. You see it worked beautifully on all these moves going higher, because the market would come down, and it works really well on the equity market indexes. And then this is a SPY on the 30-minute chart. Again, you can see you can really catch the swing moves very nicely. But the flip side of the coin is that you also have little regions of consolidation, and particularly when you're using a really sort of a small or short time frame, you're vulnerable to small moves when the market is just chopping around. So the swing system is really interesting as a counter trend move. It can work very well in many situations, but as I pointed out, it does have its limitations. You have to be aware from a risk control point of view. So I just want to show you an update. The scan I ran yesterday, we had this, the Russia-Ukraine thing, and then is the Fed going to raise, not going to raise, going to raise by whatever, 50 basis points. So right now, what is trending? So I ran this on all the S&P 500 stocks and all ETFs. So it's a relatively large universe, about 3,700 or so items. And you see that it had Everest Re on top, and then a bunch of gold funds. Here's Aberdeen Standard Gold. So I thought I'd look at that just as a check. And again, you see that it's been trending higher. The CTM is above, it's above 90, so definitely strong. We picked up the trend. And if you were using the swing system entered on the 7th of January. So, I think the sell-off began on the 5th of January. So you'd have entered this pretty much right after, if you're looking for gold as a hedge against a potential weakness. So an example of how the swing system worked beautifully, even if you didn't use the swing system, eventually the trend meter itself would have flagged you and say, hey, look, there's a trend going on over there. This is a US commodity index fund. This is on the same list, but just further down. And here you can see that, again, upper panel, you see the trend meter went above 90 and sort of stayed there for the duration of the trend. Been trending beautifully for the last several months, a couple of months anyway. And then again, if you look at the counter trend swing system, there was weakness down here. We bought it really sort of in early December, and you would have kept going higher. So it doesn't mean that you necessarily took this trade over here, but even if you joined in later, it gives you a clear entry point. You say, okay, I'm going to get in. It gives you a clear exit point. You can calculate your risk accordingly, and you can just follow along with this trend. You don't have to think about when do I get out. You have a specific exit point. So that's an example of just the current data set, what's happening right now in the markets, and an example of how the CTM would have sort of driven your attention to the commodities. And you could say, well, potentially there was this high in October, and the breakout about the high sort of drove this higher, probably true. But with all the many things going on in the market and 50,000 opinions, now you can just calmly run the thing, and it tells you, hey, there's something's going on. There's uptrend over here above 90. You can do something about it. Okay, let's wrap up. We're running out of time a little bit. As a summary, the package that I have with MetaStock has all the essential tools you need. The first question is it trending? You answer that with the trend meter. Once you can answer is it trending or not trending, then you have the systems. There's a long-term system, the volatility breakout system, and the swing system. They give you a specific entry point. They have a trend following exits, again, very specific. They're very clean signals, not too many back and forth, relatively few signals, so they're selective and easy to trade because there's not a lot happening when you're in the trade. So, hey, that's great. This is all we need. We have a robust process. We have a trading process. This is all we need to get going. You also need confidence because the market is going to test your confidence every single day and ask you, what do you believe? And you need to understand the entries, exits, and failure modes, which is what I've gone through. So I'm hoping that you'll be able to combine a process, you have the confidence, you have robust tools, you have the confidence, and so you can have a good and successful trading process. making money sort of a needle in the haystack problem. We showed 3,000 or whatever instruments. How do you find the ones that are trending? The market is going down. How do you find what's trending? So you want to use the robust rules in this package, run them through the Explorer, take this huge haystack and reduce it to something, it's more manageable. And then you can feed it into your trading process. If you're using whatever discretionary process, anything else you like to use, or some of the systems that are in this package. And then just by your summary, I sort of think of systems as a stick shift. You don't want to be stuck in neutral or in reverse. You want to be, you want to be shifting gears. So you can use CTM as a way to shift gears, or you can use one of the trading systems in the package to shift gears and find trading opportunities. I have a blog. Please sign up for that at chandeindicators.substack.com. So I hope all of you guys will sign up and give us a sense of what's happening. I have a website. This is sort of the menu over there in terms of stock finder and so on. And this is an example of how you can use some of the same ideas I showed you today to look for trading opportunities. There are about 1,500 stocks and 1,500 ETFs. And that's my last slide, just to remind you that I've developed lots of indicators. So this indicator is one amongst that have stood the test of time, and you can use it to find opportunities in the market. Thank you very much, Jeff. It's all yours.
Thanks, Tushar. That was great. Every time you turned it over to me, and I immediately hid the screen I needed to look for. But thank you very much, Tushar. I appreciate you spending some time with us and your work on kind of developing those out. Good to have you here today. I appreciate it.
Thank you.
All right, very cool. Let's go ahead and kind of just change over a little bit. We did have a question from YouTube that I'm going to go ahead and take a stab at. I'll go ahead and share my screen. Otagal wanted to know, you said this could be used as scanner. Also, yes, all of the systems that he talked about can be used and they have explorations with them as well. So one of the things that I really liked, and we'll just go real quickly through these just because, well, we're running out of time and, well, it must be a session. It must be a trader summit because we're about 10 minutes behind. In any case, though, one of the things that stood out to me with Tushar, and one of the things that was in his manual in particular is to take our profits slowly, cut our losses at once is one of the things that he likes to talk about. Tushar did a really good job of talking about the long term and the trend meter and the wide stop and the Vidya. These are a couple of stops that go with the system. Well, anyway, that's the case of the indicators that are in there. The methods that are included, he talked about the long-term system, the swing system, and the volatility breakout system. I really like how he kind of has all three of them covered. And one of the things that actually works really well in the testing is they actually test very, very well historically. I'd go ahead and show you the system test, but I think I might do that later if I have a little bit of time during my presentation. So the long-term system is a trend following system, has high levels of smoothing, has wider stops, obviously, as you'd expect a longer term system to give it a little bit more room to kind of fish. With the short-term system, it's by strength after weakness, uses tighter stops, and uses swing moves that can last several bars. And basically what it does is it looks for follow through after the breakouts. And then the final system that he's got is what he calls the volatility breakout system. And he showed that as well. You look for a one-day breakout. It uses an average true range, a very interesting way of looking at kind of a breakout. You look for a gap that exceeds the ATR. Never thought of doing that, but it's a really, really cool idea. It also uses a trailing stop as well, and a tighter trailing stop, I think is what I meant to put right there. So SS says, thank you, Sir Tushar. So Jim Valentine said in the chat a little bit earlier that it's very quiet in the market today. I'd agree with that. There are actually very, very quiet, especially the U.S. markets today. There are actually 4 scans. There's the long-term scan. You can scan for these things, Otagal. You can scan whatever you want. We've got hundreds of thousands of instruments and exchanges you can scan through globally. You got but we do. Those are the scans that are included. Tripping over my words a little bit. And then 3 expert advisors that match the systems. And we talked a little bit earlier with the expert advisor, the commentary, and how helpful that can be, especially as you're learning. So with this particular system, this is a brand new one for MetaStock. We just finished it up. Normally, it's going to be available at a $499 one-time cost offer. It's $399 here at the summit. We're going to, of course, back it with a 30-day money-back guarantee. If you need MetaStock, you'll get trial access to MetaStock, and you can sign up for it at 800-882-3040. You can also do it at metastock.com/saleschat. This is a brand new toolkit. Like I said at the beginning of the session, I was really happy and really excited to be working with Tushar, because the stochastic RSI system in MetaStock has just been testing for so well for so long. He's a very, very good system designer. We're pleased to be associated with him. So $399 if you just want that. We'll give you a trial to MetaStock if you don't have our award-winning software that's been rated #1 only 29 years in a row. You can get it. So give us a call, 800-882-3040. You can also visit us at metastock.com/saleschat. So in addition to that, it is part of the Trader Summit Action Pack, where you can get 3 months of Trade Trend, the best-selling add-on of last year, the Vora Victory. You can get that Omni training, which we're going to talk a little bit about at the very end today. Tushar Chande's complete toolkit, 3 months of the Magic Trader Elite, 3 months of LearnMetaStock.com, 2 years of stocks and commodities, and also our Unleash the Power of MetaStock as well. So normally that would be $4,484. You can have it for just $2,193, and we do back it with a money back guarantee as well. So to take advantage of that, give us a call, 800-882-3040. Chat online with us, metastock.com/saleschat. Visit us. You can even sign up for it online if you want it, metastock.com/summitdeal. So I think we've had a great number of presentations so far. I want to thank everybody that's spoken already. I do want to thank Stocks and Commodities for their sponsorship of the event. If you're watching on YouTube, real quick, just go to metastock.com/tradersummit, fill out the registration form, and you can get bonuses from all of the presenters today, totally free. You can even sign up for a free month of Stocks and Commodities. We love Stocks and Commodities. Great sponsors. Thank you. We appreciate all the work you do with us. And then CMT Association, our other sponsor, a newer sponsor. We've had them on since November. We love working with them. They've been doing a really, really good job. If you're not familiar with the CMT Association, it's Chartered Market Technicians Association, a very, very well-reputed organization, and they do a lot of good work. So we're really proud to be affiliated and sponsored by the CMT Association. Okay. So. And of course, we're MetaStock. I'm going to talk a little bit more about that in our break. Our next presenter is Price Headley. Price Headley runs BigTrends.com. And Price Headley is actually one of the very first partners that I worked with when I started my BD role a number of years ago. I remember that at that time, I had actually helped him write the indicators that he used into MetaStock. Then we had our programmers fix it. But one of the things, I love Price. He had, at that time, he had been rated one of the top market timers for several years. I don't remember the exact number because this was probably a decade and a half ago, but he had been rated one of the CMT, one of the top market timers from Timers Digest. He's in the Traders Hall of Fame. He's written Trading Big Trends with Stocks and Options. I think it's just called Big Trends with Stocks and Options. Price, correct me if that's wrong. But one of the things I particularly like about Price is the methodology that he goes with. And I say this every time I introduce him. I think it's such a core principle. He likes to talk about, being willing and able to step over smaller opportunities, to focus on the opportunities that are really going to make you money. And so the work that he's done over the years really kind of focuses in on that. And actually, he does a really, really good job. Price, I've learned a lot from you. Let's bring you on here now. Price, welcome to the
thank you, Jeff. Great to be here with you. How are you today?
Doing great, actually. Let's see. Let me make you the presenter here. Did I miss anything in that very extensive bio I just gave you?
You're just far too kind. Thank you so much. It's always been a pleasure to work with you, and you helped me so much to help codify, put into code these concepts that, when I was first launching BigTrends.com. So I know you've been around the game for a long time, as have I. So it's great to be with everybody today. Can you see? Oh, let's see my screen here. Make sure we're sharing the. You see my how to find big trends in stocks and options screen there.
Mm-hmm. Yeah, and I was going to point out that you're also a CMT. So there you go.
I'm a big fan of the CMT Association. It's a CMT charter holder from many years ago. Just a big believer in constant learning about technical analysis. And I know everybody that's here is all about the technicals and the charts. And so CMT is really a great resource for more charting and technical analysis study for everybody.
Okay, I'm going to let you go with it. I want you to know, I know we're about 10 minutes behind, and if you need to go long, don't worry about it. I got you.
No problem. I'm going to do something a little bit unusual, Jeff, and then I'm going to do just a few slides. I'm going to spend most of my time in the new MetaStock 18, which, Jeff, I love. Congrats to you and your team. It's the best version yet, in my opinion. So we're going to spend a lot of time in there. Good afternoon, folks. I'm pleased to be joining as part of the President's Day Summit today. Always a lot of fun to be in on these MetaStock events. You get tons of great real world content. So I'm going to share with you how I find big trends in stocks and options, and take stock ideas to turn into options ideas. You got to find the best of the best stocks to really leverage options properly. I don't want slow boats. I want the fast speed boats, and leave the battleships and the slow turning vehicles to everybody else. So we're going to walk you through that. And I am a CFA charter holder as well. It's more the fundamental analysis side. The CMT is the technical analysis side. I believe in both, but here, we're talking about taking the power of MetaStock and being able to scan for thousands of situations and to really get a handful of a focus list that you can manage and can really then take action on. Just a reminder that everything that I share with you today is provided for your education and information only. Nothing we talk about here should be considered a specific recommendation to buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions. Big Trends and the staff are not responsible for any trades you choose to make, and all our Big Trends products and services are appropriate for all traders and investors. At Big Trends, we don't provide any personalized financial tax or legal advice to any individual. So we say consult your tax consultant before you make any investment that's going to impact your tax situation. I'm going to jump into the core principles that I want to focus you on, kind of take a piece of my toolkit that's in MetaStock. We call it the BTT3 now. It's a big trends toolkit, the third version for MetaStock. And so what we're going to do is walk you through some indicators from others like Larry Williams percent R, percent range. I know Larry, he's one of the great traders around and one of the great innovators around. But I've adapted his percent R, percent range indicator to turn it from a range-based approach into more of a trend following indicator. So percent R will show you these takeoffs when they go into that very overbought mode. Overbought's a word that is you're going to see throughout this presentation. Don't misuse the word overbought. For if you want to trend trade, overbought can actually be really good. It can be really bullish. The stock can keep going a lot higher if the right conditions are met. So I'm going to walk you through what conditions I look for to say the institutions are just starting to launch this stock like that space shuttle graphic into orbit. It takes a lot of energy to do that, right? A lot of fuel. You can see all the flames flowing out of here. The key is that the more fuel is applied to a stock set of purchases, the better, in my view. It shows you that we're getting power, thrust, as I call it, behind that move, that takeoff point for a stock. And that's going to likely lead to a lot more opportunity to the upside. And so those things can keep coasting on their own. And so we don't want to just kind of try to scalp the markets. I know that's a tendency. When you hear the word trader, you think, oh, that means I got to be in and out quickly. And like Tushar, our prior guest, said, I'm looking to let trades run and take profits more slowly, more gradually. Give your best trades a chance to keep carrying you forward if they're continuing to prove that they should be held. So we're using this very unconventional approach of saying overbought can be a good thing. So quit missing out on when you think something's overbought and then looking back and saying, wow, I left a lot of money on the table. We'll also talk about low risk reentry points, what I call retests, within an indicator like %R, the big trends way. And we can also show it on different time frames. I'm going to mainly focus on the dailies here, but we'll get into some other time frames as well in the intraday too. And you can even use it longer term. I'll use it on every time frame. So Larry's approach is a little different than Big Trend's approach. He used a 0 to -100 scale. So if you plot the traditional Williams %R, % range indicator, you see a high of 0 to a low of -100. I go from a grade school scale 0 to +100. And we want A+ stocks. We want stocks that are heading up into the 90s and 100 level. A minimum threshold, they've got to cross above 80 and keep going up. So the difference is that a lot of people would use an oscillator like %R as a kind of a classic reversal signal. A lot of people would use a 10 or a 14 bar setting. I use quite a bit longer setting to say, look, let's go ahead and turn this from a reversal based approach into a trending security. For me, the overbought threshold above the 80 percentile, I only want to trade that top 20% of the moves. The 50 level can be useful as a general guide of what direction the trend is in as a whole, but I'm really want to focus you on the top best of the best situations. Same thing on the downside. The bottom 20% is where you can see some pretty dramatic moves lower if they keep on getting more and more oversold. So just in a prior example, and we're going to look at a newer example here in a second, but just as a prior example, we've got this chart of Amgen, and you can see going back on this chart, the notable move here. There's a first move into overbought here where we see the stock go overbought about this area, and that would technically be a signal. You'd get a little bit of a lift. You'd come back into a retest right here about June what was that, June 6th. And then you get a violation if it closes under that low, which happens about June the 10th, and you would have a scratch out, no real gain or loss. If you use options and buy options, you'd probably lose a little bit on that trade. Okay, I want you to know it's okay to lose. I just want to lose smaller and quicker, and preferably get rid of those kind of signals where it's not outside of a traditional band. This is my acceleration band here. So I'm going to use more indicators, and we're going to filter that and turn it into kind of a broader, what I call big trend score later in the presentation. But you can see the big move here is where Amgen on the next breakout. And so a lot of times people will go, oh, I didn't make money on that first one, so I'm not going to take this second one. And you can see that's a huge mistake. Even if you waited for the band breakout and bought it a little bit after June 23rd, you can see you had tons of potential from the mid 40s up here, gets to the mid 60s within about a month or month and a half. So, and even if you're taking profits gradually along the way, that's fine. Just, you can see you want to give it a chance. You can see this move here would be earnings related. Good earnings lesson, I would say, if you're using options, you're buying options, say, right in front of earnings. And even if you're buying them weeks before, like this one would, if you've got your double or more out of and can take your risk capital out of a trade, I like to ride those into earnings and give it a chance to turn into that bigger home run. But if I don't have my risk capital out, if I'm flat or down before earnings, I'll blow the trade out, recapture what I can. Don't let hope become a thing where you hope that the earnings are going to bail you out. If you're in a flat or losing position before the earnings, to me, that's not of interest to take that kind of gap risk. In this case, it worked out. By the way, %R, what does that mean? %R means it should be in a range between if it's at the top of its recent look back range, which this one's about a month and a half look back. You're saying, okay, if it's at the top of its range over the last month and a half, you're saying that's 100% reading, right? How can it go any higher? Well, it can keep going higher if the range is no longer a range, but it keeps on making new highs. So by definition, higher highs, part of the definition of an uptrend, right? Higher highs and higher lows. So our objective here is to say, you know what, %R for what I'm using it for becomes kind of a misnomer. I probably had to have a %T for % trend instead of % range. But the idea is the same concept, that look at how long this thing stays overbought without even one test back at that 80 level. It got close about a week into this trade, but essentially you can see then just never look back. Just even when it was flattening out here, you can see it's still incrementally making some higher highs. It's not really making that much of a lower lows either. It's just kind of a slower uptrend after the upside earnings gap. So as we look at a more current example, like say we look at Apple, and just love this MetaStock 18 here. And so just was popping this onto my computer here as my latest update and saying, look, what do we want to trade here? There's a lot more signals, obviously, with a %R than And when we get into our big trend score, which is designed to filter the best of the best of those with all the other indicators I use as the best signals on the board. But you can see here that with Apple, just zooming in even a little bit more here, that just look back over the last several months, you can see Apple had this nice breakout into the %R up 80 percentile level. And this is the key I want to point out. When it starts to break above that 80% level, like it did in, you can see about mid-November there, we need to see it close above that bar's high. That bar's high was like almost 152. It didn't do it the next bar, but it still stayed overbought. You can see the %R's hitting it's at the near the top of the range, but then it breaks out and closes above there. November the 17th, you can see finishing that day in the neighborhood of closer to about 155, finish around 154.77. Well, that's the bull confirmation. That's why we have a buy listed thanks to MetaStock with the expert advisor, as it's called. So we've got with the expert advisor, you just pop that up and you'll see this window come up. And right now I've got it on my BTT3 on my toolkit indicators, which Jeff will tell you about later, how you can take advantage of a great special on that. But I've got that set up here as saying, okay, look, we can see that buy signal. Now, when do I get out? You see, we come back and we're going to get into big trends bands too, which are these blue lines here, which is another way to visualize what the 80% line level is as this uptrend is developing. You see, there are times where we get a pullback, like this pullback that happens here. That was right after Thanksgiving, November 26th. That was when we first got the latest Omicron worries really hitting the market the day after Thanksgiving. The market tanked. And this is what I call a retest bar. This retest is where you could actually buy into that late day action and say, look, if that low gets taken out after a retest is a key pullback out of the overbought area, then that low will become my stop. If it closes below that 156.36 low, I would get out in a future bar. You can see it never did. So we could draw a flat line across what that support line looks like right there and say, look, okay, that's my support level. By the way, do you notice on the recent little down leg that it had, look where it found support, right in that mid 150s to 157 range was a pretty good buy the dip opportunity on that one, although I was actually getting now a bear signal. So I was actually looking at it more as a place to book some profits into the prior support zone from 160 down into the mid 150s. But you can see this holds. It holds again. You can see actually this one does not hold. This one was a key low that should have held, and it closed just a hair below it at the finish of December 2nd. So we wait for a re-signal, going overbought again happens. You can see right here, December the 7th, Pearl Harbor Day, needs to close over at 171.5 zone, and the next day it closes 175.08. So that's a bull confirmation. You see, it doesn't end up making the huge move over time, but it did make a 7-point move in your favor over the next 3 days before it then gave the retest, then bounced back to test that mid ones, or actually almost 180 level, 179.50, 179, well, actually 181. So you could have had a chance to have booked some partial profits with options. One of my rules with options, when I'm buying an option, I want to say if I can sell half of it at a double, get my risk capital back for me and my subscribers, then yes, we want to do that pretty much on any strategy we use, okay? Why do we do that? Because it frees you up, not just financially, but psychologically to give the rest of the trade a chance to keep going. So if it doesn't keep going, like here, you can see by the time it violates on December 17th, you can see you're going to lose on that second half of the trade. But if you sold half of it at a double, which you may or may not be able to get depending on what type of option you buy. We're going to talk more about the options that I like to buy for a more kind of a conservative approach that still gives you good enough leverage. The key, though, is that, okay, even if I sold half at a double and another half down 50%, you're making money on that trade overall. It's plus 100, minus 50, 50% divided by two halves makes a 25% gain for the whole trade. So a lot of traders, when they convert from stock to options, they have trouble handling that leverage. And I'm curious of how many of you have traded options. Type in your chat box real quick. We're going to keep it moving, but how many years you've traded options? If you've never traded options, hit a 0. If you've traded them for 20 years, hit a 20. If you're in your first year, hit a 1. Just curious, like what the nature of the crowd is. If you like options, if you've never traded them, it's not a requirement. But use your chat box. I love to get your feedback along the way, keep you engaged here, as well as know kind of what kind of audience we have with us. Or if you prefer to trade something other than stocks and options, pop that in the chat box too. So, we tend to get a mix of folks from, we got one that's 3, one that's 8. So, we get some that have never traded options before. And while I'm getting that feedback, one of the things that I like to do, we'll talk about if I'm getting a signal on Apple at the close there at 175, you say, what kind of option strike price do you want to buy? A lot of people make the mistake of thinking, well, I'm going to swing for the fences and trade the 180, 185, 190 calls, and when they're brand new to options. We got another said 2 years. Okay, so most of you that have replied have traded options. If you know zeros yet, but I'm sure there's some that haven't traded options out there. Not a problem. But my first thought that I tell people is, look, I want you to think more about like creating what I call a stock substitute position. If I'm buying on a daily chart, I tend to say, look, think of yourself as a position trader on a daily chart. Go out about a month expected hold time, knowing that you probably won't hold it that long, but sometimes you can when those trends really run. But that if I go out a month, I'm getting that signal December 8th, and I say, well, those December monthly options are only a couple of weeks away. I'm going to go buy the January 21st expiration and more than like 6 weeks away before expiration. More importantly, I'm going to say, okay, as a position trader, not just give yourself a month plus of options time to buy, but also try to buy deep enough in the money that you can create a lot of intrinsic value in your position. So with Apple at 175, I'd probably be looking at like a 170 call that's got $5 of intrinsic value, and maybe you pay $7 or so for the option going out about 6 weeks, so that your total time risk, 2 points out of the total of 7. Remember, if you're thinking options terms, that means that to control 100 shares of stock, which is what one contract does, if it's quoted at 7, you're paying $700 to control Apple stock that would have cost you $17,500. So that's where the leverage kicks in, because if you paid $7 for it on a 170 call, up into the 182 area, good chance you can probably double that because it's worth 12 intrinsically plus some time left. So you're pretty much right around a double, and then you say, okay, if I can sell half those contracts, I've got a risk-free trade. I can't lose even if the other half went to 0. Now, notice what happened with Apple is it gave that next move here, which we're going to talk about with the big trend score, would not have been confirmed by that. But we're going to say, look, we're going to see that the next move down in Apple was this January sell-off. So what's a downside bear signal look like with percent R? Percent R is now going the bottom 20% of readings. You can see that happens here January 19th. When that happens at this low right here, it's a low just about 166. And we've got to see it close below that low. Why do I require that confirmation bar to get that follow through close? Because if it first goes overbought, that could just be the top of the range, or first goes oversold, the bottom of the range, even if it's underneath this big trends band here. So the idea is that, look, if the institutions really want to dump this thing, they're going to keep dumping day after day. They're not going to stop with just a one-day breakage here. So you can see that at 166, the next day it closed 164.5, and that's our confirmed sell signal there, 164.5. You can see over the next 2 sessions, it went from the mid-160s to the mid-150s. It dropped 10 points. 154.7 was the low. Just a couple of trading days later. So if you can catch 10 points in Apple in a couple of days, again, buying like an in-the-money put, it would be like a put remembers a right to sell the stock. So another one, Donald said 1-year trading option. So great. Bottom line is that I'm 164.5. I'm probably buying the 170 put right to sell at 170. It's already 5.5 points in the money. So that way, again, you get a 10-point move in your favor. That 5.5 points in the money is now 15.5 points in the money. And, if you paid 7 for it, your 7's worth 14 plus, it's worth 15.5 at least. And you're feeling pretty good about whatever happens. And in this case, what happens is we get an exit signal in the next bar, because you can see that we're it's just essentially that on short signals, sometimes I'll say, look, we'll give it a window of time. And if it doesn't hit quickly, we don't want to hang around for too long. So my exits here are just about 160. So even if you paid 7 for it, even if intrinsically it's worth 10, you don't have much time left in it, fine. Bottom line is that you still should be a pretty happy camper. You can use weekly options with this, but if I was going to use weeklies, I'd probably move it from a daily chart down to, say, an hourly or even a 30-minute chart. So you can say, look, if you look at Apple, you can see, of course, during that down wave, you saw some more good bearishness in that mid-January to that low point on the 24th. You're seeing some nice confirmation that that's a good spot to be bearish and taking advantage of your put purchase. Compare it to then, of course, once it's bouncing up into this upper band, we're not getting through it. That's still the top of that range. But once it starts clearing through there, now you got a short-term little uptrend happening. This is the hourly chart. So you can, of course, one of the real things that's powerful about this approach is that you can then start combining your time frames. So you can say, okay, I've got a daily chart that's bearish, an intraday chart that's bearish. I want to be trading those 2 rivers of time flowing in the same direction down river. Okay, so taking advantage of that is a key goal. If I get a daily chart that's bullish, an intraday chart that's bearish, I tend to pass on those type of trades. If those are my key kind of double time frame analyses, that's going to another level. We're not going to spend too much time on that today. But you can even see on Apple and we do a lot of them in my trading room. Call it winner's circle because I'm here in Kentucky and horse country, but everybody wants to be in the winner's circle for horses and for stocks and options. You can see Apple's recent bounce. It seemed like an impressive one, right? We came from 155 all the way back to 175. Look at how percent R came close, but didn't quite get above that 80th percentile. When it touched right into that, you can see we're close to our big trends bands, which is basically saying what the top of that range would look like around 177, and the high trade there was like 176.6. So that's just the top of the trading range situation. I don't mess with those. I want to mess with the ones that are really rolling to the upside or to the downside. We're going to get into now a little bit more detail on the filtering piece as well, but just, percent R, the whole principle is don't trade the stuff in the middle percentiles, the stuff that's kind of not that strong, not that weak. I don't like to trade ranges, for example, because, if you trade a range, you think, oh, well, it's a very clear range. I can buy the low, sell the high. You probably have a much better growth opportunity somewhere else that's really rocketing up or getting pummeled on the downside, or both. So I'm actually sharing with you on this chart here that while most are using 10 or 14 bars, I'm giving you something I don't usually give away for free. MetaStock's been good to me, so I'm going to share it with you here. I'm using a 30 bar setting on percent R. So you can see it's 2 to 3 times longer than the typical setting to smooth out, but still keep it plenty responsive. People worry about lag. I don't worry about lag with percent R because it's like an unsmooth stochastic. It's very, very adaptable, if you will, to current price action. But the key is the top 20%, bottom 20%. You've heard of the 80-20 rule. Top 20% of your actions drive 80% of your results. It's the same thing in trading, especially if you buy options. Okay, so I'm not sure what happened here. Let's see what happened to there it is. Something weird happened to my words there. Bear with me. Not sure what happened on that one, but we want to be above the 80th percentile on the uptrends, below the 20th percentile on the downtrends. So this is the 80-20 rule. Now, here's the key, big trends bands. So I use percent R and just would look at the percent R chart for a long time, but then we internally started to say, what would happen if we could actually say, what should the 80 percentile reading be? You know that if I told you a stock's trading, for example, between, let's call it 100 and 110, okay? So if a stock's between 100 and 110, what would the 80% level be between 100 and 110? Can anybody tell me? When you know that the 100 level would be 0, the 110 price level would be 100%, what do you think the 80% level would be? It's a pretty easy answer, I think, but I might be testing you a little bit at this stage. So I'm going to give it to you here. Say, look, the answer is essentially 108 is 80% between 100 and 110, right? You're 8 points up off the low, you're 2 points down below the high. That's the 80th percent level. So we would know that 108 would calculate in that reading as where that upper band should be. Guess where the 20% level would be? Anybody have a guess now that I gave away the 80% level? What's the 20% price number between 100 and 110? 102, okay? So bottom line is that when you think about this, you don't have to do that manual work anymore. What we set up is that you can actually calculate what would be the range in between 108 and 102 as the stock adapts. Those numbers will adapt. But what the result here, and it's so powerful to me, is that, let's face it, most of us are very visual learners if we're interested in charts, okay? We're not interested in reading through financial reports and saying, okay, trying to pull a nugget out here or there, probably as much as we are saying, let's let the chart tell the tale. So when you go back over here to Apple for a second, we'll go look at a bunch more. You can see when I have this new range plotted for Apple right here, and you can see it's just recently shifted down. Why would that be? Because over the last 30 bars, we've lost some of these high levels from December and early January. Now here we are near late February, and said, okay, now as we lose those, the recent highs are probably closer to this number. And so you can see this number here is more like 177 rather than 182. So the range has shifted down a little bit, right? Looking backwards over the recent bars. And you can see, of course, we had that pop on the downside where we caught the move under that lower band continuing for a few days. But you can see right now it's saying the low band is near just under 160, 159.2, upper band's 172.68. Are those levels inviolable that it can't be violated? No, I mean, of course they can. But the key is that if Apple breaks out to the upside over 172.68 on a closing basis, I'm going to mark that day's high and say, okay, give me a close above that high, and we're back in uptrend mode, baby. Or same thing on the downside. We start breaking under 159 and it keeps dropping. I'll be a little worried about that prior support at 155, but I'm saying, okay, well, if it closes under there, I've got a decent chance to trade it back to 155, book some profits, and see if we can trade it down to the next set of lows near 150. But bottom line is that right now I have no opinion on Apple. I'm not interested in trading it from a trend trading perspective because the daily chart is stuck in the mud. We're going to talk about some other ones here. Let me give you another good bear example, because it's interesting to me how many people are trying to bottom fish in names like Facebook, Meta Platforms as it's now called, right? I've seen so many people telling me that, and they'll tell you too on CNBC, that Meta is a great value, quote unquote, right? No, you didn't hear that from me. I'm saying no, I'm not interested in the bull case right now. I might be eventually, but not now. Right now, the momentum is too strong to the downside. So if I attach the big trend spans here, close it, you can see with the gap down that happened on the earnings and the immediate follow through that happened thereafter. You see that first day down, the low was 235 and change. And the second day after that, it did not confirm. It closed above that 234 at 237. But the day after that, closed at 224.9. So that's the bear confirmation officially. This one's close. It says so short there, but I would say really I'd like to see it close under that 235.7 low. So it's important that you learn these rules. The beauty is that, of course, you get all the expert advisor explanations and all that stuff when you go and look at what the expert, all the MetaStock expert stuff will tell you. But you can see everybody's been saying, oh, this is now a PE ratio of whatever they say, 17 or 18 times earnings for 2023. I'm like, well, why don't you look at 2022 first? But they're saying, look, this is a great value. Well, I'm saying, you know what? Facebook had another situation like this. If you go back to 2018, I don't know if I want to go too far back here today, but if you look back at 2018 when it had an earnings gap back there, look at how much longer it took for that thing to bottom. It took it 2 more quarters, from July to about late December, early January. The stock went down another almost 30%. So you don't want to be a hero here and say it must therefore bottom at 200 or whatever number you randomly pick out. It's very much about saying, let's wait this out on any kind of buying the dip and saying, look, even if you eventually are right, you probably have a lot of opportunity loss. You could make a lot of money somewhere else. Like while you're messing with Facebook and hoping that it's going to turn around, you could have been cashing in on Exxon. You can see Exxon, XOM symbol. The last move was nice. But this is where we're going to get into our big trend score that I want to see it get above that big trend score 80 level, just like I want to see the percent R above 80. My big trend score is a combination of 10 different indicators that I look at and saying, look, what we do is say it's got to go above 80 and then it's got to confirm. Well, look, if I change my expert advisor and say, okay, yes, you could have made money on that move, I made some, and the same move. I made some. I got out a little bit early because I was a little worried about the mid 70s history on this chart. It went higher and just cashed it in here at, you can see here, about 78 and change. But the point is, and you can see we came out of this big trend score area even before that. And so you go and say, let me change my expert advisor in MetaStock from the one that gives you a lot of signals with big trends band, and just look at the big trend score breakdown, which actually I do have on there. And so you can see it actually did give me a brief little signal from this window here that then it gave the exit even before the trend broke. So that's a lot different than when you look at the expert advisor for all of the big trends band signals, just for a comparison. And you say, well, should you have been selling short Exxon here? Not according to no confirmation from my big trend score, which we'll get into that more in a minute. But you can see %R will get you in earlier, but it also will sometimes give you some head fakes. So you'll see some times where you got in, you got right back out. You got in, you got right back out. And the big trend score combination of all my indicators was never above that green upper 80% threshold. So in that case, I say that's too weak of a signal. I'm not going to mess with it. It saves me a lot of whipsaws. I'll miss a few, or I'll get in it late on a few. But I'd rather, if I'm using options and using leverage, I'd rather leverage a much higher consistency signal than possibly one that could have a little more noise in it. So we're trying to minimize the noise when we look at big trend scores. Let's talk about big trend score. I've kind of jumped into that. So let's go and say, so this is, of course, big trends bands with a prior Apple period. You can just see that if it's stuck in between those bands, you don't really want to mess with it. But if it's outside of there, that's where you're going to get your big trends moves. For Apple, it was on the downside on the left, and then on the upside more on the right. So we'll look at a lot more of those here. And so with big trend score, what is going on there? It's so strange. Somebody's messed with one of my staff might have messed with my chart here, but I've got a few on here that are not showing up. %R is one, the commodity channel index another, efficiency ratio, directional movement, ADX, Bollinger Bands. There's commodity channel index. That's weird. But the beauty of this is that, Jeff has actually helped me a lot and his team have helped me a lot to say, okay, this is an older version of big trend score. We've since have made it even a little cleaner to look at it on a percentile basis from plus 100% to minus 100%. You can see it's kind of showing up on here, but the windows that you would really want to trade the big trend score with Apple were really more like right back in this phase right here. You can see how clean and simple that trend is. And oh, by the way, look at the next one coming in right here, that little phase on the right. So those two phases are some of your best upside. Obviously, there was some nice downside there too as we broke down, both on the left side of the chart that caught that a lot of that big trends move in the bottom percentiles. We've actually tightened things up to say, let's look at the top 20% in each direction. So what I want to do is spend time talking about the markets with these indicators in mind. So if you look at the S&P, and remember, everything we're talking about here is just educational. Don't consider this trade advice in any way. I want you to make your own decisions. I want you to also test this on your own with your MetaStock platform. Test it in paper first, and then test it like if you were trading one option contract, or if you're buying just one lot of shares, just to say, get in the habit of following the rules. So like if you look at the S&P with the %R indicator, you can see this recent phase has been pretty effective. I mean, we saw the move in October, steady uptrend, and it chopped around for a while, right, because of Omicron. That breakage that happened there was an Omicron gap down the day after Thanksgiving. Notice how we chopped back and forth. We tried to break through these bands a few times on the overbought threshold. Those were all top of the range until proven otherwise. Even here, where it looks like we're breaking out in the morning on the gap up, closes back down. So it saves you 3 different fake outs where it looks like it's breaking out there in early December to mid-December, and then gaps all the way down into a bars testing underneath that lower band, then closes back above it, and we bounce back to the top of the range. We do get a buy there. Of course, as we start the new year, it's been a down January. And the interesting thing when you look at the history of weak Januaries for the Dow going back decades is that typically that's not the low point. The average loss after the end of January, the average drawdown to the low point of the year, the average drawdown is about 13% and change, courtesy of Stock Traders Almanac. Now, the year ends up averaging about a couple 2-ish% gain from the end of January to the end of the year on a down January. Okay, so that's some of the upside bias that's built in the market. But that's actually below average. So what that tells you is it's still going to be a trader's market. It's still going to be a market that you need to be nimble. You can't buy and hold, and especially you can't buy and hold those stocks that are getting pummeled, like I showed you with FB, Meta Platforms. No offense to them. I think it's a very great company run by very smart people, but it tells you that it's going through a transitional phase with this drive to get to the metaverse, and it's telling you that there's some growing pains through that transition. So let's not be a part of the pain unless you want to profit from it. Let's try to say, let's wait until we get one of these uptrend phases like what the S&P had back in October. You can see we did also catch the downside move. The first breakage below that lower band, we're going into the 20 percentile level there on January 18th. Then on January the 20th here, or 19th actually, 19th close, it shows a close at 451 when the prior day's low had been like 457. So 451.75 close bearish, and you went from 451 over the next 3 sessions. Look at that low, 420.76. That's more than the 30-point handle in the S&P if you're thinking about the classic, 4,500 to 4,200 type of a move. That's like 300 SPX points, 30 points in the SPY. But the it'd be like 300 handles in the SPX. But you can see, look at where we're at now. We bounced back. Notice, wouldn't be interested in really buying that dip. We were telling people just generally to be concerned about the fact that like you have this prior 450-ish, 451-ish support level. Thought it would probably hold in there. It actually went a little bit past it, went up towards 460. We tested 2 times to 458-ish on these 2 highs, and you can see from that high just over 10 days ago on the 9th, we came crashing back down. And you say, well, is that a crash? Well, not really, because you're just testing right near that lower band. Look at how close we got to the lower band on the Friday low. You can see that we had this move here down to a low of about 431.82, and the band is 431.24. Now, with the weekend activities, obviously we know about Russia and Ukraine and the attempted kind of peace talks. Good luck with that, it sounds like, but basically making that attempt, which I think is probably the right move, but probably won't. It looks like that everything's headed towards Russia invading Ukraine. You can say, well, isn't that awful for the market? We could say the market's been discounting that. Right now, if we get news that Russia invades Ukraine, the market gaps down on tomorrow morning and then manages to come back above that line, that'll probably be a short-term low because you're right at that support level. I'm not saying it's the buying opportunity of all times, because it can still chop around, as you've seen from this chop that you've seen for the last month since that Jan 24 low. So the point is though that don't sell everything thinking that the worst is coming with the war breaking out necessarily. Now, if we break that on close below 431.25, and then we break below whatever tomorrow's low is, if that happens, that would be bear confirmed. And that would be cause for some downside opportunity. So, so the point being, and so if you're bullish or have a bunch of bullish positions you don't want to sell, you can use put options to hedge and manage accordingly. So the beauty is, and if you want to see a certain symbol, pop it in real quick. We'll pop it up on the next few minutes. But you're going to have fast fingers, as I will, and we'll do a little lightning round here for about 5 minutes. But the point is that when I start looking through, we mentioned gold, like GLD, of course, we know inflation's here. It's been here for a while. The Fed's finally admitting it. It took them a long time to acknowledge it. But you can see gold's been breaking out to the upside. We have this upside. And the big trend score, by the way, will tell us when we're above the 80% line where we've got the best of the best signal. So one that was popping up in the gold sector was ABX. And so ABX is one that, I forget which one is the best symbol here. Let's look at it as a It's kind of a classic ABX chart there. Let's see if that'll pull. Might not. That's not the right one. Hold on one sec. So basically, we look at ABX. This one might be it. Try again. Look at Barrett Gold, and you say, okay, there it is. Look at the move in Barrett Gold just in the last week. So it was picking that up, and you say, okay, well, that last one didn't last too long, only a few days. But you can see we just broke out here a couple days ago. Would like to see maybe a little confirmation, maybe a little comparison to, say, Newmont Mining, which I don't think is actually quite there yet, but it's close. Yeah, it's not quite there yet. But you see it's perking up. So, and even GDX, which is the gold miners ETF, is another area that's starting to show some signs of life. But it's been a while for these since they've really gotten percolated. It's shocking given all the inflation data, right? So, of course, part of that's the Fed pressure. You see silver's not very bullish, so it doesn't interest me. But the idea here is, look, we're focused here on, what's the condition of the trend? Is it trending or is it range bound? So for silver, it's still range bound. I'm not interested. But when I mentioned energy, and we mentioned Exxon, and what I wanted to show you before was that Exxon, gave that signal on the big trend score here when all those indicators kind of lined up here, said, yes, you would like to own this at the close there at $65. And you see steady right up. And when you look at just even that last move, and you see it caught some of these last quick moves here, a couple of them were quick stop outs. You see some of them that say sell short. I've got to really see a sign that things are really confirming across multiple time frames in the longer term charts that we're bullish. But you can see that move there. Look at the big trends bands holding so beautifully as a key support level here, and then finally giving it up and telling us, okay, it's time to exit at the close of that bar. That was Valentine's Day last Monday, a week ago, just around $79. It gapped down the next day, popped back up towards 79 to 80, then came back down to 77. You could say part of that's because maybe the oil price uptrend is somewhat tapped out. Pardon my analogy, but you can see my pun there, but with the tapping of the oil reserves and whatnot. But the point is that, you know what? You can see right now, it's not something we would want to mess with. That it's just not the right configuration. Even if we get some kind of a brief spike in oil up on the Russia-Ukraine news, I would say don't get seduced into that. It's late in that move comparatively, and we should at least be waiting for a reconfirmation through that 65 level. So point being that, you want to stay disciplined. Whether you look at, say, Microsoft, you look at a lot of the big tech names, or you look at what some of the new leaders are. Look at Microsoft. There was a great time last year to be riding the uptrends in Microsoft. But look at it since near the end of the year. We got that one run in December and also two runs in December where both of them topped out at our upper big trends band resistance. And then it tanked off. And you can see while the big trend score didn't say to get bearish, you can see we had a brief little %R violation and pop down there in January. Right now, it too is like Apple, kind of, or actually even not as good as Apple. Microsoft's kind of like the market, really holding down near those lows, but not really breaking down yet. But it's one of those things where when you look at it, we say, well, what's working? We look at a name like Alcoa came up on my scan. I ran an exploration, just an hour ago. So, okay, what's shaping up as we head into this next week? Aluminum Company of America, Alcoa, former Dow stock, you can see has been just steadily chugging higher. Aluminum stocks are looking good here. It's a kind of a commodities inflation play. You say, well, isn't that bad that commodities are going up? So isn't that going to mean that the cost of aluminum is going up, and doesn't that hurt Alcoa? Well, no, they just pass it on to consumers. They, and it's saying, there's enough industry out there that you can take advantage of the move in aluminum and the play to the upside. Now, the question is, if you're on the outside looking in, I mentioned retest. What I would tend to do is say, look, the stock closes $78. Do you just want to chase in here when the signal's already about 4 days old? I'm saying not necessarily. What I'd probably say is probably closer to 75. And certainly if you get a market pullback that brings it down to this big trends band here, which is in the 73 and a third level, but rising, the more we make a new high, the more it's going to pull that upper big trends band up. So somewhere in that range is going to be an interesting area of support, like this retest that happened soon after that first breakout. You saw a retest there right back into that 71 zone, then immediately snapped up to 78. So the point is that, okay, when we look at Alcoa, we look at our kind of our scans, and again, I did a bunch of these. I'm not going to go through all of them, but we look at a few of them here where what else is working, okay, on the upside. And so a name like Cabot, which I haven't really traded Cabot, but basically let's just see how that one looks. CBT, just to show you like what the scans are picking up through the exploration. Look at that chart. While the market's been tanking, CBT's been charging ahead. So as Jeff knows, I like to look for the big fish and throw the little fish back. I like to focus on the best of the best and leave the rest. What does that tell you? If that stock's going up when the rest of the market's going down, that's incredibly positive relative strength. A lot of people would say, hey, even if a stock is flat while the market's going down, that's a good news sign for that stock ultimately. And while ultimately it may be, I don't have that much time to wait if I'm buying call options or buying put options. I need confirmation quickly and speedily. And so that's a bullish example. And then for another bearish example, what about PayPal? There's been a lot of people that have bottom fished on PayPal. Some of them have readily admitted they were wrong. But you can see this chart for a long time has been telling you to stay away from the upside and never even giving you a chance to get a bullish signal. The last bullish signal with the trend score was back here last June, okay? That was a good face on the upside. Ever since this big trend score really got going on the downside here right before the earnings, that was early November, stock was 228, gaps down on the earnings, breaks that low at about 200. Once it breaks 200, Katie bar the door to the downside, because even though it retested back near 200, these retests were holding. You see that percent R testing up above that 20% line right at that short-term high. So even when it tests above it again, we never take out this last resistance line here. 197.69 was the high. Pummeled again on earnings here in early Feb. And then everybody was talking about bottom fishing or whatever. A lot of people sure are throwing the baby out with the bathwater. There's some case to be made that 100 is kind of a bigger round number that maybe might bounce from. I don't try to catch falling knives, and I don't think you should either. I think, I don't necessarily advocate shorting it here or buying puts on it here. The next great put buying area would be back near 120, that low of 118.5, and how once it really violated that 120, 118.5 level, a next test up into there, it'll probably be a 1 or 2 day hard short covering bounce. And that will probably be a good chance to trade it back towards 100 from the high teens near 120. So the point is, you still have to think in risk reward terms based on both short-term and longer-term charts about where that is. So Ann asks, do I only enter when the big trend scores over 80? For a bullish trade, yes. So that's going to be our best of our best opportunities. So as I'm scanning through, just quickly, just give you a couple more, and then I'll hand it back over to Jeff, because I know I got started about 10 minutes late. There's some aluminum stocks on there. There's some gold stocks, El Dorado Gold. Again, I haven't traded some of these smaller gold names. I mainly focus on the Newmonts and whatnot. But if you just look at a name like that, you say, look, it's just going over that. It just hit that 90% level. So this thing's got that percent R. It's got the band breakout. It does have some longer term resistance near 12. So you say, okay, well, that might not be the best gold stock to trade. I might need to look for a few more. But you kind of go through and you just keep looking for names. Goldfield's another one, GFI. It's been a while since I've traded that one, but I have traded before. That looks a lot better, actually, because it's cleared that old resistance here near 12 to 12.5, closed at 13, and it too just crossed into that 90% level. So I would actually prefer a GFI to that last one, EGO, because of the break out above prior resistance. You don't want to trade the laggards and hope they catch up. You want to trade the leaders that are breaking out first. That's always a good principle to remind yourself, is stay with the stocks that are moving the best. So if you compare that one more to compare to in the gold space, Royal Gold, RGLD, hold on, that didn't pull the right one, RGLD.O. Skip that. Okay. RGLD.O. 1 second. Bear with me. Okay. There it is. Okay. So now I'll try this. Okay. So look at that. That's a great move, but you see it's got these old highs to deal with, and it's a higher dollar stock. So GFI would probably be preferred against those other two. I'm not saying you should buy it, but I'm saying it just gives you one more that's just running through. This is what I do every day. Is you just run through a load of signals, especially within a sector. You say Yamana Gold, not bad, breaking out to almost 6-7 month high there, but still has that old resistance in the 5.25, 5-ish area. So again, you have to figure that out. But then you look at these other like steel plays, like Reliance Steel, RS. This is starting to break out. You see how we're starting to get that. See the last move? It went vertical for like 3.5 days. And when you got your first signal, you still had more meat on the bone. It didn't last forever. But, of course, X would be the normal name that you would use to think of. It's probably not quite there. I'm not seeing it on the scan yet, but no, it's nowhere near there, right? So X is no good, not interested. It's at the top of that range. Is not going when the other metals and industrial metal stocks are going nicely. PM, Philip Morris, the dividend stocks, PM and Mo, those names still hold great yields. So bottom line is that there's still opportunity there, but you see, you'd want to buy it on the dip closer to 110, that low 109 and a third. We know it can even trade below that, like you saw in some of these other little retest areas, and then flip back up. So the key is that band is sort of a guide, but it still can have those brief little retests along the way. How does Mo look in comparison? I think PM might look better. Yeah, PM does look better. Mo still might be setting up for a longer-term breakout. Might be worth keeping an eye on it because there's still pretty healthy yield in these. Compare it to a name like AT&T. Speaking of yielding stocks, AT&T's been on the other end of the story mostly, right? It's been downtrending. Why is it downtrending with a high yield? Because they're breaking apart the company. They're actually going to cut the dividend, and they just announced when this pop down happened that the dividend would be cut to the low end of what expectations were. So dividend investors, income investors are saying, it's not what I was hoping for. And it's basically been one to stay away from. You can see it's pretty well, if you're using %R especially. So if we go and attach this, sometimes you say, okay, well, I didn't get much of a signal on the big trend score there, but you can see I would get, of course, mostly all bearish. There's only one bull move there until they announced that news of the dividend being on the low end. Got a little bounce there, but you can see very difficult to trade bullishly when the longer term trends have been bearish. I don't want to run too long. I want to give it back over to Jeff so he can kind of quickly walk you through the Big Trends Toolkit. And also, I know Jeff is due to speak after me, and I know he might not have anybody to introduce him, but let me say, Jeff has been such an awesome person to work with and get it done guy. I mean, Jeff, I ask him to do something, he does it, and he does it promptly, and he does it completely. And it's just a representation, I think, what MetaStock as an organization is really a bunch of get it done folks that really give you tools that you can implement in any market condition, up, down, or sideways, to get the best of the best out of the markets. But Jeff is truly a pleasure to work with. He's truly a market expert, having been around this game since about the time that I was launching Big Trends. I know he's been around even before that. So he's a true veteran of the markets. You're going to want to stick around to hear Jeff as our next speaker, in addition to more to come beyond that. So thank you, Jeff, so much for having me, for all the great work you do at MetaStock, and all you and your team.
I appreciate that, Bryce. I did promise Paul T that I'd ask you if you have any thoughts on SOFI, SOFI.O.
Sure, SOFI.O. So you got one of the more recent IPOs in this fintech space, right? And so, you say, okay, let the chart tell the tale, and you can see what the chart says is stay away, right? It's saying that it's been bearish, but it's been choppy. And so you can see this, we zoom it in a little bit more so you can, I really want to focus on the recent action here and say, okay, if I was looking at the expert advisor in MetaStock, looking at the big trends bands, it's not giving me much on the score. So I'd probably be looking elsewhere if it was just like, okay, I've got a world of fish to look for. I want to look for those bigger fish on the downside. So I probably would say, don't mess with it yet. But it's saying this little diamond here is telling you that's bear setup. If we close under that low, which is 1170, close under 11.7. So if we will be back into a bear confirmation. So if you're bottom fishing, or if you're trying to say, you know, I think there's a great value here, this is a great space, whatever, the great thing about these charts is that they kind of take those rose-colored glasses that we sometimes have about when we think we're onto a fundamentally great story and say, maybe we are, but maybe we're a little early. Maybe we should just wait it out a little bit. You know, even when I was tempted to say, should I bottom fish on some of these popular names that are beat up? Then I say, no, I don't want to do that. So like if you look at a name like, say, like Square, now renamed Block, maybe in line with blockchain, look at that stock was a huge winner in the past, right? You go back and say, man, this stock was vertical 2020, right off the pandemic. What a winner post-pandemic, right? And you say, well, isn't this a great buy, the dip opportunity down near all that support near 200? And you can see what the answer is based on the charts. The charts say, don't buy the dip at 200. This is bear confirmed. You see the bearishness continues, and it still continues on SQ. So the point is, you know, don't try to be a hero and pick bottoms. I once heard John Bollinger at a CMT conference say his mentor told him only can be right at the exact low or the exact high once in your trading career. He said that sounds like not a good game to play. He said, let's try to take the middle out of the move. Let's try to be sensible about things and not try to be bottom fishers and top pickers. So that's what these trend indicators tell you, is exactly where to find the leaders and also find the breakdowns where you can make money on both sides. And what I believe is the ultimate stock pickers market ahead. So you really are going to benefit with MetaStock and the Big Trends Toolkit with this ability to explore for the best and the worst stocks to trade bull and bear, call and put. Thank you so much, Jeff.
Thank you, guys. Really appreciate you. Appreciate all the stuff you've done with us over the years. Thanks for coming in. Thanks for the nice words, too. I appreciate that.
It's my pleasure. Thank you, guys. You're the best. Appreciate it.
All right. Very cool. Thanks, Press. One of the things I wanted to talk about with regard to the toolkit in particular is, you know, there's a lot of things. We've actually done 3 iterations of this. And so I'm just kind of transferring over. There's a few button presses that are involved to kind of getting this ready. So bear with me just a second. Okay. And you should be able to see my MetaStock screen. MetaStock or Kelly, whatever name you want me to go by. Let me know if you can't see my screen. I think you can. So, but in any case, all right, perfect. So what I wanted to kind of focus on is, obviously we've been through a few iterations of the Big Trend Toolkit. This is the 3rd version, and we keep touching it because it's been such a popular add-on. But one of the ideas that Price had for the 3rd version was a way to kind of incorporate all the indicators he's kind of worked with his book and his research and just the research he's done over decades, and kind of compile them down into one system. And so what we developed, actually Price developed it, I just helped him kind of code it and kind of get it ready. But we developed and designed a scoring methodology that took his favorite indicators and kind of put it into a score. And I just actually opened up a chart of XOM right here just to kind of show you how that works. So on this, here's the histogram that kind of goes from minus 100 to plus 100. I think those are the scale boundaries, with kind of 90 and minus 90, 80 and minus 80 being kind of the boundaries that you're looking for. What we're looking for here is a confluence of all of its systems to kind of match up to show you this is going to move explosively. So if we would have run an exploration, there's an exploration for this, we would have came up with XOM back here in January 4th. You can see where it kind of popped up above and gave a buy signal. But just to show you how the score kind of feeds into everything, you can see right here, you've got, I'm actually trying to make it bigger, but I'm making it smaller. You've got the Williams percent R, the 2 days ago Williams percent R, the CCI, the efficiency ratio, the acceleration bands, et cetera, down the list here. I'll score it either bullish or bearish, and these are all bullish except for the DMI. I'm gonna take this off because I don't need to wear a headset right now. But with the exception of the DMI, all of these are kind of lining up, which gives us a total score, as we saw before, of 90. Okay, and so with this particular methodology, it just uses those combination of indicators from Price's work over the years, and we would take a buy signal based on it. And one of the things I've always liked about Price, and actually learn from him is kind of like the specificity that he likes to use in the expert commentaries that he's going with. And so right here, you'll say, hey, it's currently indicating a crest above the 80. This is a potential long signal. Here's how you should buy the stock. Here's some ideas if you're an option traders. And here is when your exit is. So you should look to exit this position when the BTS indicator, this big trend score indicator, drops below 80. And then the price drops below that bar, which we actually will track in the commentary for you, or on the close 2 weeks before expiration. So that tells you a little bit more about the system and that kind of stuff. So in this commentary, it's actually telling you this. But in addition to that, if we kind of go forward a couple of days later, if there's an actual close, actually looks like my MetaStock's getting a little tired. If there is actually a score value, it'll tell you what the current stop value is. So I'm just going to load that a little bit further on. And we'll see if it has a price. You see where it says no stop price calculated. Once it has a stop price in place, it'll actually kind of list to you what that is, but it is monitoring for that condition. So very, very good addition to the Big Trend Toolkit version 3. In fact, I like the scoring methodology that Price came up with so much that I actually went back and we recoded all of his systems. So if you're running any of his scans, you'll get that confluation of the confluence score, that Big Trend Toolkit score of how this performs against all of the trend indicators. So if you
go and talk and let's see if it's back. Oh, then no, it's not. Okay. I'm going to restart that machine, Jeff. Okay, everybody, we're just about there. Apologies for the issues. It looks like we are just about back, so give me just 1 minute more and we are up and going.
Well, the plugin works, right?
Yeah. Well, come on.
I can even chat into YouTube. So, like, I did message that we were working on getting it up and running.
Join. Come on. Oh my gosh.
Okay, it's okay. Don't stress. It won't help. It's all okay. It's okay.
I hate this keyboard on this.
I'm just glad we didn't do that during Kelly's or Peter's. You and Matt, you did it for he would.
Oh yeah. All right, Jeff, could you go ahead and do an audio check for me and do your screen?
No, MetaStock, you guys can't hear me. Bobby says there's no audio for me in YouTube land. So I'll let him worry about that, though. Let me continue. Okay.
So
all right. Well,
everybody should be able to hear now, so we should be good.
Well, the good news is, guys, I appreciate all of you guys for sticking around. We still didn't lose that many people, and that's awesome. So let's go ahead. Let me take a deep breath, center myself. find my Zen. Let's talk a little, let's just close out the big trend toolkit presentation. Again, so it's 17 experts, 17 explorations, 17 system tests, and 18 custom indicators. A toolkit that's been so popular, we've done about 3 revisions of it. I really appreciate all the work Price did with this, and I really do like that big trend toolkit score. Normally, this is available as a one-time cost of $6.99. What we're going to do is, as part of the Summit special, we're going to do $5.99. That's going to include, of course, a 30-day money-back guarantee, which will include a trial of MetaStock if needed. And you can give us a call, 800-882-3040, or you can visit us online at metastock.com/saleschat. So thank you, everybody, for sticking around. That was probably one of the longest tech delays we've ever had. I think we lost internet in part of the office, and that usually it's really, really unusual. But anyway, thanks for sticking around. I appreciate it. That big trend toolkit is part of the MetaStock Summit Traders Action Pack, where you'll get 3 months of trade trend, Vince Vora's victory system, the Omni training that we're going to talk a little bit later, the Tushar Chande's complete toolkit, 3 months of Magic Trader Elite, learn MetaStock, 3 months of that as well, unleash the power of MetaStock, and 2 years of stocks and commodities. So there you go. Normally it's $4,484. Here at the event, it's $2,193. You can get that at metastock.com/summit deal, 800-882-3040, or metastock.com/saleschat. So I'm going to do some good catch-up work here. I can kind of talk about this for a few minutes, and we can move on. And I think I can even kind of fit almost everything I want to in a 30-minute time span. So I'm going to keep a close eye on that. Peter is a great speaker, and I don't want to kind of rob any of the speakers of any time. So I do want to say thank you to Stocks and Commodities for sponsoring the Trader Summit, and the Charter Market Technicians Association as well. And of course, we're MetaStock. So it's my turn to speak. Kelly, in GoToWebinar, Sudarshan is complaining about sound. Will you give him the YouTube link or tell him to refresh? I'd appreciate that. It just means I don't have to type it out. So I'm going to reread this legal disclaimer. I'm going to do it super fast. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. My name is Jeff Gibby. A lot of you know who I am. I've been here at MetaStock. Next month, it'll be 25 years. I love MetaStock. I love working here. I love the software. It's really been something that we've been able to just work with and kind of work on and develop and improve. And it's a great atmosphere. Really grew up with a lot of the people that are here at the company, and it's a really good company to work for. I absolutely love it. One of the things that I like to say, and I'm not reading any of this, I'm going to go fast today. But the one thing I'm not going to skip is for I believe it's actually 29 years in a row now, we've been the winner of the Stocks and Commodities Reader's Choice Award. So we're very proud of that. It's a great software program, and you're going to see a lot of that today. My goal today, I'm going to skip the importance of trading plans. I'm going to assume you know that. I'll read a little quote on it. What I'm going to talk about mostly is I'm going to give you a 10-minute talk about what the MACD is and how to trade it. Then we're going to test some trading ideas. My goal for today's session is 2. 1, I want you to learn something, even if you don't buy MetaStock. And so I'm going to talk, and hopefully you don't know much about the MACD, because then you can learn something. The second thing I want to do is actually just convince you to try MetaStock. There's a reason that it's been rated for 29 years in a row as the best software in its price category. And I'm going to try and just convince you to do what we call an extended trial of MetaStock at the very minimum. I myself use MetaStock to trade. I've been using it since I started. And there's a reason it's been rated #1 in its price category for 29 years straight. I personally use it every day to identify. Well, every day I trade, I should say that. Sometimes I look at the clock, I'm like, the market just closed. I just missed it. So, but every day that I trade, I actually look at and trade the markets. So RL, thank you for the question. Where is Oscar? Oscar will be in a few hours. He's not here yet, but he's a great presenter, and I think he'll come in 3 or 4 hours. Kelly, look at the schedule and tell me if I'm wrong. So, okay. All right. So the story I'm going to skip from Richard Dennis is actually pretty interesting. You should look up Turtle Trader on Wikipedia. It's a really good story. So in any case, I always say you could publish my trading rules in a newspaper and no one would follow them. The key to trading is consistency and discipline, is a saying of Richard Dennis. And I always like to start my presentations by saying that, because I think discipline is important when trading. I think trading plans are a really good step, and the Turtle Traders actually did a really good job of talking about how to trade with discipline, and they had one of the most famous experiences in history, in trading history, about kind of experiments, I should say, not experience, but this is one of the quotes that he said: discipline. I think it's important when you're trading to understand why you're trading, know what your entry rules are going to be and what your exit rules are going to be. And today what I'm going to do is what I generally try to do is spend a little bit of time talking about MACD and how it works, so that you can understand MACD, but also so that you can understand how like a trading system works. So we're going to kind of append this. This is Gerald Appel. He made the MACD indicator. Let's go ahead and jump into MetaStock. And if you put in a symbol real quick, I will be happy to actually just look at this, or just look at any symbol that you want. So let's go ahead and go back into MetaStock. Very quickly, you guys, if you want to look at a specific symbol, we'll type it in the chat. If we don't have one, we'll look at, ExxonMobil. So, all right. Okay. If you have symbols, put them in and we'll test them in a second. But ExxonMobil is going to be great for talking about the MACD. The reason I like to show MACD is not because it's the best system in MetaStock. There's actually a couple of reasons. One, it's a very popular video on our YouTube channel. And two, I find a lot of people trade with the MACD, but they don't really know what it is, or they don't know how it's calculated, and they don't know kind of the methods for interpretation. SPLG, Stephen, you got it. SPLG. And let's make sure the spider, the S&P 500. Is that a leveraged one? It doesn't look like it's leveraged. We'll look at that though, okay? And what I need to do is I'm gonna go ahead and just kind of actually just clean up the chart a little bit. So let's go ahead and we'll detach this expert advisor, close. I'll go ahead and get rid of the big trend bands on here, and we'll just go down to a chart of MACD. Okay, I'm going to zoom in a little bit. I really like the new zooming tools in MetaStock. It makes it really easy to kind of zoom in and out. Let's go ahead and we'll talk about MACD. In the new version of MetaStock, we do have the MACD histogram. I'm going to go ahead and apply it to a chart. And instead of having you guys actually answer the questions, I'm going to just tell you, just so we can kind of save some time, because we need to save some time at this point. So right here, I've got more popularized. I think Linda Radke actually popularized this view of the MACD, but I want to explain to you exactly what all the lines are and how they're calculated. So what I'm going to do here is I'm going to actually grab a moving average, and we're going to put in 2 exponential moving averages onto the chart. So I'm going to do basically a 26-period exponential moving average. I'm going to do this type of a field line because I can now, and I really like this kind of way of looking at the moving average. But okay, and then we're going to do also a 26-period exponential moving average, and I'll make that blue. Okay. The important thing about this, one of the things that I'd like to mention is, did I do 26 already? Let's do the 21 then, or no, not the 12. Okay. All right. Try not to be too frazzled, but you always get a little bit of an adrenaline when you have some issues. Okay. Let's go ahead and make this blue. Okay. We'll go ahead and do it field line. And I'm going to basically come in here to the fill color, make it also blue, but I'll go into advanced because I like to kind of change the opacity a little bit. So, okay. Okay. All right. So basically 26-period and a 12-period exponential moving average. Okay. Now the moving average, actually, I think I want to go back to the PowerPoint for this. The MACD is actually a trend and a momentum indicator. And so you've heard a lot about the trend is your friend, befriend the trend, a rising tide lifts all boats, all that kind of stuff. MACD is specifically manufactured to measure trend and momentum. And I'm going to talk about both of those as well. But the way that it's calculated, you see that there's 3 lines on the bar. There's this red line, okay, the white line, the blue line, the blue dotted line, and then this histogram, okay. If I wanted to calculate the MACD and show you how that's calculated on a chart, what I would do is I would take the 26-period exponential moving average and I would subtract it from the 12-period exponential moving average. And the result of that difference would be this red line here, okay? So basically what we're doing when we look at MACD, the simple way to put it is we're looking at the difference between a shorter term moving average and a longer term moving average. And that's really kind of one of the ways that it measures trend. If, like, for example, right here with the S&P 500, MACD is going up or the stock is going up, the shorter term moving average will cross up above the longer term moving average, and you'll get a bit of an uptrend, right? And so if this is trading positive, you're going to have a higher MACD value. So the higher this red line is, the more trend there is. And the higher it is, the more momentum it is, because the faster it moves up, the further that difference is going to be. And that's it. That's how you calculate a MACD. It's very, very simple. Okay. The second line that we're going to talk about this moving average of the MACD. So you've got the red line here. That's the difference between these 2 moving averages. You've got the blue histogram, and that Gerald Appel calls that the signal line. Okay. And the reason he calls it a signal line is you can use it as a signal in your trading. And to kind of illustrate this quickly, I'm going to attach what we call the expert advisor for MetaStock. So I'm going to come in here to the expert advisor and come down here to the MACD system for by MetaStock. I'll attach that. I'll go ahead and click on close. And what you'll be able to see, because I'm going to point it right here, is at the very bottom of the chart, every time this MACD crosses above its signal line, it's going to show either like a bullish signal. When it goes down below its signal line, it's going to show a bearish signal. So if I'm trading S&P 500, this ETF, if I'm trading it on the MACD, if it crosses above this signal line, I can buy it. That's a genuine buy signal for the MACD. So I could have bought it here. My intention is it's going to get bullish now for a minute. If it crosses back down below, as you see right here, when it crosses back down below the signal line, it would generate a sell signal, and so forth and so forth. Okay, and that's really the first way that you can analyze the MACD, by looking at the trend of the MACD. You'll see right down here, we also label the trend bullish or bearish or bullish or bearish or bullish, right? So generally, it's very, very simple to read that MACD once you understand what's going on with it. The histogram line right here is just the difference between this line and this line. Linda Rajke popularized it. It's a good way to see when the crossovers happen, because it goes from above 0 to below 0. But it's just a difference between the MACD and its signal line. That's really what you're looking at there. So you can kind of see that as a confirmation of momentum. Okay. The second way I can look at MACD is I can look for it as an overbought or oversold indicator. And I don't see any examples of that on the chart that we're looking at. So I'm going to scroll out a little bit and see if I see, oh, here's some right here. Okay, let's go ahead and zoom in on this particular like little price area here. And I just want to kind of show you what it's looking at here. You'll notice right here, in this particular line, you start to get green bars. What it's saying there for you automatically is when that happens, it's measuring that the MACD has become overbought or oversold. In this case, it's become oversold. So you see right here, you start to get these early warning signals that in this case, the S&P 500 was maybe oversold. Now, with overbought, oversold indicators, you have to kind of be careful, because if you've been in trading for a while, you'll understand that stocks can stay overbought or oversold for a really long period of time. And so with the expert advisor, I've been talking about the commentary today. And what it allows you to do is, with the expert commentary, I'm going to come in here. And if I highlight this on the, or just a specific section of the chart, so let's go ahead and click on this. Okay, there we go. See right here, I've moved that to this bar. Currently, the MACD is bearish since it's trading below its signal line. So it's telling you right now it's bearish. It's been bearish since right here, right? It also tells you that there's an overbought and oversold indicator. And right now, the MACD is in an oversold range. Prices made to continue to move lower for some time. Wait for prices to move higher before entering any long positions. I actually really like the fact that they included that language when they added the MACD, because you'll notice like we started to get those oversold readings right here, but the price continued to fall over and over and over again because we had panic in the market. I was going to say unprecedented panic, but every decade or so, it seems like the market gets a little frightened of itself. And I wouldn't say that it was unprecedented panic. We had a lot of panic right here, and there's still a lot of selling to go. So it's giving you a warning that prices in the S&P 500 might start to reverse right now, but they would also, but to wait until you have an additional confirmation. In this case, when we got the buy signal, that might have been a really good time. The third way, and I'm going to kind of skip this a little bit, but one of my friends, Dr. Alexander Elder, calls MACD divergence one of the most important signals in all of technical analysis. And we will watch for divergence. You can see there's been no divergent signals there. I'm going to skip that just because I have about 15 minutes left, and I'm going to still stop on time, even though we had a little bit of a technical issue. I want to make sure Peter gets his time. So there you go. Those are the three ways that you can look at the MACD. Now, one of the things I like about MACD and technical analysis in general is you'll notice that, like, well, I know I went fast, but hopefully I did a decent job of explaining those indicators to you. Hopefully you understand them. Hopefully nothing that I just said is subjective to you. In other words, if we were looking at this chart all at the same time, we're using the MACD, we would all come to the same readings. We'd know because we crossed above the signal line that we had a buy signal. We know that we have a sell signal. Because of that, technical analysis is objective. It's not subjective. It's more science than it is art. And that's something that I really like about technical analysis in general. You'll notice that we weren't talking about like what the Feds are going to do with the interest rates or the Ukraine scenario on the border. Those things I think do lead into the market. But the reason I like technical analysis is because you're studying the price. And because of that, it's objective. You know, I can look and say, hey, I got a MACD signal right here, and I got a sell signal here, and I can see exactly, I'm going to go ahead and draw a trend line. I can go ahead and draw a trend line from there to there and know exactly that it went up about 8.5% over 27 periods. Okay, I can see that we had a sell signal, and then we got our buy signal back in here, and I can just basically draw a trend line on the chart, and I can see that this was actually kind of not very good. We probably maybe even lost money there, okay? But I can kind of, because it's objective, it's not subjective at all. I can understand that, I can visually look at that. And at no point in this presentation, I'm going to talk about Ukraine or stimulus packages or quantitative easing or those kind of things do affect the market. But technical analysis is strictly the study of price and how it works on the markets. So that's basically how this works. In MetaStock, it's a tool that's been rated number 1 29 years in a row. It has a few hundred indicators. Because, and we get a lot of people that are new to their trading, or maybe an intermediate level, or maybe an advanced level. But one of the things that I learned early on in my MetaStock career of working with salespeople is a lot of people would come in and they would not know where to start. You know, you can easily go in and say, you know, MetaStock has 300 different charts or indicators and 8 different line studies and et cetera, et cetera. There's a lot of things that you could talk about MetaStock. And one of the things that, you know, people will do is like, how do I know where to start? Because this is objective, we don't need to necessarily learn about all of the indicators that are in MetaStock. You can just focus on the ones that work using our back tester. So if I want, let's go ahead and open up what we call our power console here. And what I'm going to do is we're obviously going to skip some of this stuff just for the sake of time. In a normal session where I didn't play videos for 30 minutes, I don't have time to talk about all of this anyway. There's a lot of tools that we've developed for MetaStock over the 30-something years that we've been working on it. But what I want to do is kind of, if you're new to trading, if MACD was a new lesson for you, I hope I did a decent job, even though it's abbreviated. But what I want you to understand is how you can kind of maybe start to look at indicators in an indicator-based approach to, and how you can kind of maybe shortcut your learning process. So in MetaStock, we've got all of these different system tests that you can use. We've talked about system testing quite a bit today. And what I'm going to do, let's see, there isn't a favorites system selected here. I'm going to select quite a few these ACT systems before I do anything. And then I'm just going to include, I'm going to do a little search here. So I'm going to do this, I'm going to go PS. It'll list all of the PS systems for me. I'm just going to select all of these too. So we'll go ahead and actually, let me back that out a little bit. Let me unselect all of these systems. Okay, now we'll search for the PS. These are just systems that I know that are included in MetaStock. They don't use a lot of historical backtesting, or they use a lot of indicator optimization, which you can do in MetaStock. They're just systems that I know will test fast. I know they're all included in MetaStock, so even if you just get MetaStock today and maybe look at the add-ons a different day, these are things that you'll have access to. What I'm going to do is I'm going to do a system test. So I'm going to take all the long trades, all of the short trades, so we're going to do both. And for my trade options, I'm going to come in here and I'm going to start trading with 10,000, that's 100,000. Let's do $10,000 of equity. And we're going to basically change this to trading the percentage of our available equity. There's a lot of options in here. I'm going to skip some just so that we can kind of do this fast. And what I'm going to do here real quick is we're going to do SPY, which is the S&P. We're going to do Dow. We're going to do Apple. We'll do Facebook. And we'll go ahead and start this as a system test. What it's going to do is it's going to perform about 348 systems. It's going to go back about 750 years, which is 750 days, which is about 3 years. And it's going to say out of all of these methodologies, these are the ones that perform best on those stocks that I put in. Now, this is something you could do on an entire market. It's something that you could do on an entire index. The system tester that's in MetaStock is very, very good. I'm going to go ahead and click on View Results here. Oh, okay. Looks like there was a little bit of an issue because we don't have graphs up here. Normally, you would have graphs up here. I'm going to go ahead and scroll this here. I'm going to basically, we do have a bit of a technical issue here, but that's okay. We'll ignore, normally there's a graph that shows you green and red up here. Something happened that it's not showing up. But so basically what this is saying down here though, is I've sorted the systems based on profitability. And based on the most profitable system, you've got PS fractal trading system, which would have made about 34% last year on those stocks that I just kind of typed in haphazardly, okay? Our best profit would have been $77.15, and our worst profit would have been $989. Our average trade versus our average loss, 9.8 wins to 6.8 losses. Let me go ahead and click on View. Hopefully we'll have a chart here. We didn't. Again, we'd have another chart here with green and red lines, but I need to do a little bit of a reboot, it looks like. Our best performing stock was Apple in that 3-year test period. Using the PS fractal trading system, we would have had 10 winners and 3 losers for about a 77% gain. So we'll go ahead and quickly view the report here. I guess we won't. We're running into a little bit of technical issues, which is par for the course today, right? But what I want to do, that was Apple. That was a 3-year period of Apple. What I'm going to do is actually, we'll just open the chart. And if you find something that you like, I'll show you how you can kind of learn a little bit more about it. Because as we started out today, I think discipline is really, really an important key to trading. It's really easy to trade successfully when you have really good years like last year, where it's fairly easy to make those decisions. It gets a little bit harder when some of the losers, and finding your stop losses and having the discipline that's required to trading when it's a little bit more choppy. And maybe you agree with me on that sentiment, and maybe you don't. So what I'm going to do here, though, this is the Apple. Apologize for all of the technical issues that we have, but I'm going to open up Apple, and we're going to attach the fractal trading system, and I'm going to show you how it works and how it would kind of apply to a chart. So let me go ahead and open up AAPL.O. What we're going to do here is we're going to go ahead and select the instrument here. And I'm going to go ahead and attach that matching expert, which was the PS fractal system. So let's go ahead and kind of go down here. I believe it was the number 1, but that's not super important. And when we do that, you'll be able to see that we're going to immediately get all of the buy and sell signals on the chart. Here's a buy signal, here's a sell signal, here's a buy signal, here's a sell signal. You can really get a good idea of how it works, even without looking at the reports, just by attaching the expert advisor to the chart. What I'm going to do here is just zoom in a little bit, okay? Or actually, that's out. Okay, you'll see right here we had a buy signal. Okay, if I want to learn more about what that buy signal is and how it works, I can go into the commentary. And so right here it says if you're trading signals for Apple today, or actually this is 11:17, we're back in the past here. If you're trading short positions, exit all short positions today with a market on close order. If you're trading long positions, enter long today with a market on close order. Okay, but here's where it's going to kind of help you understand what's going on. Well, there are definitions for fractal and securities trading. The definition used in the system is a minor version of the type defined by Bill Williams. An up fractal is defined as a middle bar with two lower highs. Okay, a down fractal is considered a down bar, the down middle bar with two higher downs. This system enters when it penetrates the last up fractal and gets out when it goes below the latest down fractal. So that's all it's doing. By reading the commentary, you can kind of understand exactly what the strategy is doing. We've tested it, so we know at least that it worked really well on Apple last year. And again, with that testing, when you're running these tests, you can test them against thousands of instruments if you want to. We didn't just because, well, I got 5 minutes and we're going to close on time today. So that's how you can kind of use the power system testing. If you're new to testing, if you're new to system testing, you can use it to kind of help you shortcut your learning process. So in this particular case, this is a good system that uses fractals to help you get in and out. And I find that I learn a lot of stuff just by running tests. You know, I don't necessarily use Bill Williams systems, but I like to use his fractals as exits. And so I feel like education is an ongoing process when you're trading. So, and of course, you know, we've talked a lot about scanning. If you find this system, like this fractal trading system, number one is something that you really, really like and you want to use ongoing, I can come in here and with a scanner, I can scan every single optional stock. If you're from India, we have a lot of Indian customers and a lot of Indian people here today. If you want to scan like the National Stock Exchange of India, you can, the National Stock Exchange of India. We cover about 300 markets. We have really a lot of traders from Australia, from London, from Singapore, Hong Kong, India, all over the world. And we can do that because we have such great data that we power with Refinitiv. So if you can use this for just about anything that you want to, and it works well in a lot of different markets. We really appreciate the relationship we have with Refinitiv. They're a hedge fund institutional quality bank. And because of that, we've been able to kind of provide data all over the world. So there's an abbreviated demo of my hour-long demo. Again, my goal is to just kind of give you enough information on MetaStock so you can understand what's been rated #1 in its price category. And, you know, we did have the ability to play some commercials for you while we were down. So that kind of helps as much. We have two versions of MetaStock. So we've got MetaStock Real-Time. MetaStock Real-Time is normally $250 per month. That includes MetaStock, everything I briefly showed you today, as well as like a news service that they spent over $1 billion on that provides news and market information from over 200 different news bureaus across with thousands of reporters. So one of the best institutional quality news feeds out there. That's included at the $250 price. What we're going to do for you, oh, also the other version of MetaStock before I get there is $69. So it doesn't have the news feed, that's the $1 billion news feed, but it does offer everything I briefly showed you today for $69 a month. And that'll include MetaStock and all the data, everything you need to run it. What I want to do for you today is I want to offer you what we call an extended trial. With the extended trial, we're going to give you, you'll buy a month of MetaStock and you'll get the second and third month for free. That'll bring your per month user cost of MetaStock for your evaluation periods, if you do DC, down to less than $20 a month. I believe that math's right. Kelly will type if my math's off. Welcome from India. I appreciate it. I'm glad you're here today. Okay, so if you buy your first month of MetaStock, you'll get your second and third month for free. That'll include MetaStock 17. That'll include data for the region of your choice. You'll get white glove installation support. That's somebody calling you and helping you get everything installed. You'll also get Unleash the Power of MetaStock, which is a $99 value. I'd recommend you try MetaStock. It's great. I love it. In any case, give us a call. We'll be happy to help you get that set up. It's 800-882-3040 and metastock.com/saleschat. What I would say too, if you're kind of on the fence, it's all a little bit about risk and reward. If you just try it out, you're going to pay about $20 per month. And for that, for end of day, and less than 100 for real time, right? For that, less than 100 or less than $20 a month for real time, you'll be able to evaluate the software that's been rated #1 in its price category for 29 years in a row. So I'd recommend you try it. I absolutely love the software. This new version is hot too. It's really cool. 800-882-3040 or metastock.com/saleschat will be good ways to try it. I also want to talk briefly about our Trader Summit Action Pack. We've got the 3 months of the Jeff Tompkins Trade Trend, Vince Vora's Victory, the Omni Camp training that we're going to kind of talk a little bit later about, Tushar Chande's complete toolkit. Thank you, Tushar, for a great class this morning. The Magic Trader Elite, 3 months of that. Learn MetaStock, 3 months of that. Unleash the Power of MetaStock, which is a training guide that we give you to help you understand how to use all the really cool tools that we've been working on for 30 years, and 2 years of stocks and commodities. So normally that would be $4,484. Here at the event, it's $2,193. Give us a call, 800-882-3040, metastock.com/saleschat, and metastock.com/summit deal. I'm just laughing that I jammed that all into 30 minutes. How'd I do, everybody? It will, Larry, thank you for noticing I missed a place where it says 17. It will be 18 if you sign up for it. Thank you for noticing that. I will fix the slide. I thought I had gotten all the, because we just released 18 last week and it's a great upgrade. And I thought I had gotten all the references to 17 out. I'll go dig that up. Thank you, Larry. Thanks for the question too. I'm going to go ahead. I know there's more questions. I'm going to say thank you for hanging on with us for 30 minutes while we tried to figure out why YouTube wasn't working and played videos. But I also want to thank our sponsor, Traders, Stocks and Commodities Magazine. You can get a free issue. If you're watching on YouTube, thanks for hanging in with us. You can get a free issue at metastock.com/tradersummit. You just have to fill out a registration form. All of the speakers today include really cool prizes or bonuses for registering. You can select which ones you want right there while you do it. So I'd encourage you to go up if you're just watching us on YouTube. I'm glad you found us. Thanks for coming. I hope you're enjoying today. Go to metastock.com/tradersummit. Also want to say thank you real quick to CMT Association for sponsoring today's event. We appreciate it. Great sponsor, great organization. So, and of course we're MetaStock. So our next presenter is Peter Dalal. I'm still amazed I was able to get through that in 22 minutes or something. I did as good as I could, I promise. In any case, our next presenter is Peter Dalal. Peter has been working with MetaStock for a number of years, like a long time. I think at least 15 years. We released FXTA, FX Traders Advantage, as part of the, and it was an insanely popular add-on. Does a really good job. The thing I like about Peter's stuff is he developed a lot of stuff with his daughter. So he's very much a family man. His methodologies are very, very clear and concise. I like the color coding that he uses to identify trend, and the concepts that he will kind of talk about, probably will talk about catalysts. So with that being said, Peter, let's get you on. Peter?
Yeah, can you hear me?
I can. Let's go ahead and get the screen shared real quick. You sound like an angel, Peter.
No, the quality of the sound.
Angelic. Yeah, you sound good. I can hear you perfectly.
Okay, perfect.
I just sent the screen share over to you.
Yes.
let's go ahead. Let's just make sure that's working. We had a major technical issue, probably the biggest we've
Yeah,
ever had.
I witnessed the last 30 minutes.
My blood pressure is still up. I'm gonna do anyway. I'll get out of the way. I know we're starting a few minutes late. I don't want you to be worried about time. Take your time. But not too much of it. But don't worry about going over. We're starting you 3 minutes late. Uh-oh. Okay, good. I can see the proper screen too, Peter.
Okay. All right. That's what we wanted to make sure.
Yeah. Okay, yeah, it's there. Okay, I'm going to go mute. The floor is yours, Peter. Take it away.
All right. So thank you very much, Jeff, and thank you very much to everybody for coming in today. And I'm happy that everybody was patient for some technical difficulties, but Jeff and Kelly made it happen. And I happened to become a little bit earlier, so let's see what is happening there. I missed the earlier part of all the presentation. All right, so my name is Peter Dalal. I'm from New York. We're going to be quick, and so we could fit in time regardless when we started, because there are other presenters later, so we have to respect them. So a few minutes here and there, but it affects their presentations. I'll be brief. So we're going to cut down where we have to cut it down. So we at least give them full opportunity. So let's get started. So first of all, these are the topics we're going to talk about it. Many of them are discussed in the past, but everybody knows that I change things around. So please do not take it for granted. Everything is the same. And every word has some meaning in trading, and probably that can change your trading life. So let's get started. We're going to talk disclaimer because that's a part of the business goals for this webinar. Then mandatory ingredients, we're going to talk about something in a design basis, why even we designed this software. Then we're going to talk about my daughter and I. Then we're going to start showing you how I trade efficiently to create pinpoint entries, and the software was designed based on that, so I don't have to stay in a market too long, as well as it affects very much based on risk. So your trading results will be much different than normally you are experimenting, regardless how many number of years you have been trading. So I learned those things from my institutional background. So we're going to talk about a couple of things new, part A and part B, which is in a Scalp-Swing methodology, as well as we going to talk a little bit about switches, and it's easy to identify. So people who are doing scalping or swing, so line in a sand, you could draw and you pick up the side, or you could do both, and that's very much important in this market. So you could also produce some quick results as well as you stay out of the trouble, because that's the most important in this market. So capital preservation is the key, and the software was designed based on a risk, not based on the prices we pay. So there are a bunch of disclaimer, about 9 of them. If I start reading that, you will be fall asleep, as well as it will be boring. All the copies of the disclaimers are available through MetaStock, plus on our website, or if you don't have it, we could send it to you. Reach out to Jeff. So I'm going to be brief. Important points will be discussed. However, we're going to show you all the slides, and a couple of slides we're going to run fast so we could finish in time. So again, these are risk disclosures, and I'm not an attorney. I'm not an investment advisor. Neither I'm a lawyer or I'm not an accountant. Trading is risky. Only genuine funds should be used in trading. Trading gives you false, sometimes, imagination. So you got to be realistic. And if you focus on a risk involved, your outcome could be much conservative than risking whole account. We're going to be talking about stocks, commodities, cryptos, or whatever. So some people calls them as an instrument, some people calls them as security, some people calls them whatever they're calling for. But they, as long as it's tradable, they are all risky and do not take unnecessary risk. And as far as we are concerned, they fall under hypothetical category. CFTC Rule 4.41, again, all this trading and magic trader is all hypothetical. And only in hindsight, it looks great. So magic trader software can show you the results. In a way, it could be considered as on a hindsight, right? So basically, those events cannot be repeated. And I had to tell you in a front because what it looks on a chart may not be practical in the field. And that's the nature of this business because it moves every second. We do have options available, the entries, exit on this magic trader software. So the options are risky, and sometimes some strategies you're going to be using, you will lose more money than you invested in. So you got to be very careful trading options. And you could get a lot of free education on 188 options and also get the supplement about the options. It's free and available. Now, this is regarding my company. My company is not an investment advisory firm. We do educate traders. That doesn't mean that I'm only doing education. I trade myself too with a bunch of traders. But we are not representing that we are going to give you any kind of advice, or we do not even give buy and sell signals here. We teach people how to trade, and they have to make decisions and take the risk at their own. Now, we have a bunch of patents. We have trademark, service mark, copyrights. So please respect that. And again, the copyright violations now is very in our focus, and there are felony charges. So please try to stay away from those things. Again, we are registered with CFTC. I have taken some exemptions so I could breathe, and I have done money management and all kind of stuff. But right now I'm not practicing, and I rather do my own trading because it's according to what I'm going through, right? I want less stress, but I do trade. And this is our registration number with CFTC. And you could look at the website of NFA, National Futures Association. That's where you get the information. Again, I do put articles on a Facebook, talk about some stocks. We have a live trading room, but sometimes I disclose, sometimes I don't disclose, but we are not going to guarantee that we're going to disclose every position I have it. So I try to be not talking about much my positions. So this way I have less bias in my talkings. Again, we do get paid royalties from MetaStock, so I have to disclose to you. And again, the testimonials, government is very strict. People do all kind of stuff right on their side, but we try not to. We've been audited, and they don't want us to talk too much about testimonials. But if somebody gives testimonials, right, it is hypothetical and is not typical. This thing came in recently because we have a Scalp-Swing. It may trigger your short-term gains. So please talk to your accountant. Okay, so what we're going to do today, we're going to go and cook some food for the Wall Street, in a Wall Street kitchen today. So I came up with this idea because, you know, when we go to a restaurant, there are commercial restaurants too, right? So I got an idea. So we need two ingredients. My wife cooks it and she has all kind of stuff, right? All these spices, she gets it from overseas. So basically, just those spices we need to make the tasty food, we need those spices for trading. And what are we going to cook? We're going to cook Scalp-Swing trading. So we're going to trade with that. So we're going to use those Wall Street ingredients to cook the food there. So let's talk a little bit about what we're going to talk here. Minimize the technical analysis time with Magic Trader with using 5 ingredients. Identify low risk trade setups with the Scalp-Swing method. And we could use only 2 ingredients out of 5 and 1 catalyst, and we could still do trade. And how we're going to scan, because we are going to show you a little bit different than what you used to. And MetaStock has a pretty good scanning explorer, which really helps us to find the trade. Now, again, we're going back to the 5 ingredients. We're going to talk about bullish and bearish both, and hurry up so we could do real-time examples if we can. So what are those 5 ingredients for trading? So if you have gone to high school, at least you could recognize everything on this chart yourself. So there is a green vertical line, which is a direction line. Then there are 3 lines. One is dotted, and there are 2 lines above the dotted line, which are parallel. That's what we're looking for. One is a purple line, one is a blue line. That's what you need to focus, not too many things around the chart. And once you focus, you're going to find the things which is tradable. And I've been trading since 2006. So basically, this software was utilized before for institution purpose. In the last 2 years, we released for general public. So software has a lot of miles, a lot of things we went through it, right? So basically, it's nothing new. You just don't know that the software did existed. Because once you do institutional trading, you don't need to do too much marketing. Everybody knows each other in the industry, and you work together with them. So those 3 lines, right, are located in a health window, which we're going to show you later. Then we call this as a spike. So you could see here dotted triangle. That's really an entry spike, and which is located in a spectrum. I'm going to indicate where the spectrum is in a little while. Then there is a little thin line, look like this, but it's a little bit thin line compared to these, and it's a pure health. So we have a health window. Inside the health window, instead of making a project out of it or do too much interpretation, right? This is like a juice out of whole health indicator. And it says, oh, it is looking good, health is looking good, go in there. And this is the MetaStock ribbon, but we call it a horizontal time risk because everything related to time risk, thousands of risk, all time related risk are indicated here. So it comes in different colors, but green, red, and black. So you could also find out whether we are bullish, bearish, or neutral. Now, this is a risk-based software. You could see here, it identifies the risk, analyze that, and we could control the risk because they have a numbering system on a software. Then the most important thing was for me, when they transferred the risk from bull to bear or bear to bull in a real time with a pinpoint accuracy. That's what it changed everything. So software has that capability, including with a black bar. So those are the events, really fights get straightened out, and you could know now transfer of power took place. The software is designed to reduce your entry and exit risk, right? And because they have the assessment feature in there, and it gives you the numbering system, every candle they could possibly do. So this way, you are aware of the risk every step of the way. It's not like just buy and sell arrow and whatever happens in between, God knows. Because how are you going to control your risk? Every step of the way is more important, not as a surprise that it was cooking there and now next thing you know, your security dropped through $20. It hurts. So here you can have warnings that there's something going on here. So a magic trader is technically designed to do anything which Refinitiv gives the data feed. Right? I'm just kidding. If Refinitiv gives number of children born every year or every month, I could tell you how many going to born. And we have done this experiment. I'm not kidding around. So it has a lot of capability as far as institutional side of the business. So basically, I'm not joking here. It is true. So if you want to trade options, ETF, ETN, mutual funds, bonds, currency, derivatives, any kind of derivatives, you could trade with Magic Trader. Now, what it does, it substantially cut down the timing to analyze your trade. I'm the trader, was traveling with Reuters staff all over the country. And then I had a tough time finding the time because I'm from the old school. You write a trading plan and this and that. By the time, right, you'd go call the broker because I was traveling and I can do a lot of things. So I had to call the broker in, right, whenever I get time. And by the time trading plan even looks different because S&P future had a 30 points drop. So your trading plan has to be adjusted and Peter is busy. So basically, I went through those pain. I said, there got to be something which doesn't take too much time to analyze. That was my biggest thing in my busy life. And I had to be still accurate. So that's what Magic Trader took place, right? While we were having other software, MetaStock or Reuters at that time were promoting. And I started working while they just kind of released the other product. And that gave me a freedom what I have it today. So basically, how we got to develop this software, what I realized on a Wall Street, everybody thought, I believe in Tesla and I believe in Microsoft and whatever. But have you pulled the trigger? No. So when you pull the trigger, when you really believe it and put your money on a line, that's called believing in this software, not just talking. Otherwise, even the barber gives you the advice. Right now, in the last few weeks, they don't want to talk about it. But this is what goes on. But how to track them, who believes them in real time, that's what I had to work on for 6 months to figure all out. And I was not a good programmer. And I don't want to ask Jeff help because he will know my secret. And because we filed for patent, I'm not supposed to talk, I guess. Jeff is my least worry because they are very trustworthy when it comes to those kind of information. So I have no problem for that. But the idea here is, as a patent, we're not supposed to talk about it before examiner knows about it, whatever. So we follow the rules, whatever lawyer advising. So now this concept, right? Yes, you believe in buying or selling. So how we could know and find out in a real time in graphical form. So that created a birth of magic line. So first I designed this green magic line. So on one side, everybody believes that we're going to go along. On the other side, right, when it falls down, everybody thinks that we're going down. So that's how they believe it. So it is representing both ways. So you could see in this example, there's a green line and there's a red line. Green line was developed later on after success of line in a sand. And then we developed a red line. And the biggest problem was where should be the mean risk reversion of the risk. So it is kind of in between these two lines. Also, I wanted to have automatically stop in a real-time adaptive way forecasting. So this magic line red works as a stop line for bullish trade, vice versa in the bearish situation. So as long as it does not close above red line, I'm good to go, right? And I will short the market or security, whatever I want to short it. That's how it is. It is also true. You see a lot of colors. What I got the pattern discover that it's not just buying and selling. I wanted to know when big institution like Goldman Sachs is buying, when medium-sized institutions are buying or hedge funds buying, and then everybody else buying. So the different colors are there. Today we're not going to go into details. So I discover major there are at least three buy side, then is in between, which is we represent by this color, right? And you have to learn how to recognize them. But on a sell side, there are three, including this purple color candle. So I also proved that it's not just buying and selling. It is the price is a sectional risk. So and each sectional risk has its own peculiarity. So it's not just buying and selling. You need to know, right? What are those people who are doing and who believes in those taking those kind of risks? So we kind of figured out, right? And we designed this software based on that. So right now, probably people don't recognize, but in coming years, people will start seeing this. What we're doing since 16 years is true. And there are documentations, right? We tracking with the institution when they're buying options, when the market makers are doing purchase, right, or their delta neutral position, we could see same thing in real time on a software. And there are so many witnesses there. So it's not just kind of a theory, it is a proven theory. Now, this is what we're trying to do. No disrespect to the people who develop. Without that, I won't be here. Let's be honest. I started teaching a lot of traders for Reuters, not one day, months after months, for years, right? And then I took a sit back, right? I trained a lot of professional traders. I ran only professional trading room, means only licensed people can come in there. I ran it for 8 years roughly. Right? So now you get tired, 20 hours you work, right? So you get tired. So then I came back and I'm going to help the little guys now. Professional people can survive at their own. So these are the indicators, right? Some of them I have used. I don't use them anymore. I found a better way and a less time in a technical analysis. That doesn't mean these people are wrong, okay? But there's a better way of doing things. So if you feel comfortable using what you're doing, it's fine for me. Let's talk about something. Who are the people behind the scene? So my daughter, since she was 9 years old, she got involved in business, and I had a stroke. I lost my speech and my leg, my hand. So this little girl was exposed. Thank God we started training at the age of 9, came very handy, and she handled all my different businesses at that time. So we survived, and then mysteriously or miraculously, I came back, and I have 99% recovered all these problems. So the girl is exposed to every business I did, right? So she has a great amount of knowledge in a practical life, and she is 334. She works for Goldman Sachs, and she is also part of the invention. She worked day and night to do these things, and it is very much involved. This software is not one invention; it's a multiple inventions, as well as there are close to 10,000 variations in there. It's a massive thing. Because I wanted to cover every damn thing you could imagine what I experienced in real time. So I've been trading before even I came to this country. I was an investor. Then I become a trader, hanging out with a lot of geniuses. That's how I learn. And I started structuring the deals with a big institution. They say, you can't get paid until you get a license. Okay, we go and get license. So I got Series 763 because of that. Then I got Series 3, I think it's in 2005 or something like that. Since then, I have it, and I let Series 7 go because after my stroke, I had to reduce a lot of stress, and that's why. Otherwise, I will still have it. And I do believe that brokers, whatever dealers are, they play games, right? So not all of them, but they go play the game. I say, hell with you. I'll be self-sponsored. So let's talk about those fine ingredients. We talk about bullish side. Let's talk about the bearish side. So if you remember the vertical line, here is a red. So you can see a red line. That's what you need to recognize. Nothing too fancy here. Because software has a lot of things there, but you don't need to learn everything. It is like an ocean and your what do you call sky or a galaxy together. That kind of power this software has. So you don't need to worry about or overwhelm yourself, because it's each step it tells you story what is happening and what is going to happen next. So it has a little bit forecasting capability. So this, we talk about those parallel lines. Here is that dotted line, and two lines are below that. And you can see here the blue line, right? It's on top of the vertical purple line. If you went to high school, it's very easy to spot on the chart. Nothing fancy. And that's what we wanted to do, make it very simple for people to recognize. So this is that spike. We talk about the green spike for bearish side is a red spike. So this is a dotted triangle. And you could see here what happened then after. You don't need to be scientists to figure all out. Same thing, the direction which we talked earlier is red, so we're going down. So it doesn't need all these technical higher highs and higher lows and whatever it is, patterns, charts, patterns, triangle and ascending triangle and whatever people teaching. And I was the one who was teaching too. So they're working. I'm not telling you it's not working, but I don't want to spend time with that. I just want to be simple, recognize a bunch of lines, and I'm in a trade. So this is the pure health line, which is a juice of this is called health window. And this is the volatility indicator. It is not regular volatility. There is a method to learn it, but we're not going to talk about it. But basically, this is the health window where security health is recognized. So this is a part of the pattern. It looked like you have seen before, but it took me 3 years to do these things because I was not a program. It's a massive number of formulas in there, but I wanted to make it simple so anybody can trade with. That took a little longer time. So what you see outside, but internal, just like our body, there are so many veins running around, but we don't see that, so we don't care. It looks good outside, but this one looks inside of the security health. So that's the peculiarity about that. So this has a lot of power in there, but it is simple way to recognize what is going on. Oh, 3 lines going down, and this is telling you we're going down. So you don't need to worry too much. So that much time you could save in analytical work. That's the beauty about it. So this is the place we put all together. This is the ribbon. So when you see this thing, you go short the security or buy put options. As simple as that. Again, we talk about it, but it is same way. We are all in a line. We stack it up together so you could recognize this is what you need to learn. Nothing too complicated. Especially when you don't know, you have to learn this one. Then we teach you other things. So pure health and one of those horizontal time risks we could combine with these color candles. You're going to see those color candles on a chart. I'm going to show you in a little bit, but right now imagine there is a such thing like a green looking candle. then this is a turquoise candle, and this is the black candle. So one of those exists with these two symbols. One is like a pure health, and this horizontal time risk. This is the minimum you need to trade here. That doesn't mean that you cannot do the spike. You could take this one and put a spike, and you could still trade. So what we're going to do today, a little bit different than what you read in your internet, right? So this is the normal tradings people do: scalping, swing trading, day trading, position trading. So what we did it, for my whole intention was reduce the time and reduce the exposure to market. More you expose, you lose. That's what I learned. So how I could do that? So I figured out a way that we have a minimum exposure and pinpoint entries and exit, so we don't have much exposure, and get in when risk is minimum. So you don't have much drawdown, and you're going to see it, and you came out like you went in a lion's mouth, right? And take the food from his mouth and run. And lion couldn't do nothing. So market is like a lion; it's going to bite you, right? So you got to figure out. So less you go and expose yourself to the lion is much better. Otherwise, lion going to eat you. Don't forget that. That's the analogy I do for the market. And plus, you don't have practice, so that's why you lose money, because the lion will bite you. So what is Scalp-Swing? A little bit, I could go. We did just did the training for Scalp-Swing was almost 14 hours. All right, so we could go and spend 14 hours, but in a short, very simple way. So what we figure out, there are cycles, counter cycles, and cycles within the cycles, and concentration of believers between both type of polarity, because on a bearish side and bullish side believers, there are cycles and counter cycles, and all kind of things are happening, and that cycles has to be recognized simplest way, and which going to tell you how to do that. And we don't need to learn too much about cycle, but recognizing is the most important thing. So once you recognize, you are going to stay away from trouble. So Magic Trader was designed to identify such cycles in for any type of believers, either it's bullish or bearish, and the Explorer also identify easily for the direction you want to trade. So that's why the Explorers are there, and is available on both sides. So once you filter the directional cycle, and this is very important, and many people do not use Explorer to its advantage, to your advantage. So what we do, suppose I have a criteria, so I will filter monthly, then take the results and use in a weekly to match those same condition. Then I take monthly, weekly, and put it on a daily, and then I will look for the entry in a 60 and lower cycle. So what I'm doing really very simple logic, right? Not like make a project out of it. So we took all this Magic Trader, like we talk about magic lines. So we could put that as a criteria, and horizontal time risk. So those are the key component, right? So now they have to match everywhere before even I'm attempting to even go and pull the trigger. So this way, I'm reducing my risk, and I have a multi-confirmation automatically done by Explorer. And then I don't need to look at 300 charts, maybe 50, right? And then beside that, all sub-criteria I could apply: pi ingredients matching, tree matching, whatever. So that took care of a lot of risk out of the equation. So this way, I'm going in safe environment. There's nothing guaranteed, but I have less chances of failure. This is what Scalp-Swing is based on, actually. And most of the people avoiding the exploration, but any strategy using, you use this one if you don't even have nothing to do with Magic Trader, use in your strategy and see the results. So people are like, oh, just going to do daily. No, you need multi-confirmation. So you need an RB behind it, a force. That's the key. And that's how you find the good result in your trading, and you don't need to work too much. So we don't need to trade. Sometimes I get only 15 charts out of 5,000 optionable. So I don't care about other things. Let it go. Otherwise, there will be movement everywhere, and then you won't sleep. Then what we did, I divided the scalp swing into two methods. It's a scalp side and a swing side. And how we could recognize it is by a switch, which we're going to talk in a little bit. So this way, now I'm pinpointing every single thing, right? That's my trading plan practically. I don't need to write all these fancy plans, which I used to 3 hours it takes to do, right? Few security, right? Suppose you want to take 5 stocks, it takes 2-3 hours if you don't want to do it right. I don't have time for that. So I figured out a way, more effective way for me. And then I share with the institution. They loved it. And now we're sharing with all the regular guys. So this is more or less, don't get intimidated. You will have this thing, you could read through it, but I want to show you what to do. So everybody knows daily, weekly, and all other happy stuff. So what we do, we filter through monthly, use those results in weekly, and from weekly to daily, then 60, 30, and then we looking for certain criteria in the smaller time frame. So practically what I'm doing it, I do not want any drawdowns. That's why I go through this exercise after 60 and under. So I am practically drawdown free. There is no guarantee it's going to happen. Market can change in a dime, but at least going in, I have less risk. So that's the theory. So suppose we got everything filtered out in a daily chart. So I look for certain things, type B candle, which is, I know, big institutions coming in, right? Somebody can be skeptic, but we have also a lot of things to back it up, right? So basically, that's a good thing to go long. And then I see 60 meters, yellow bar here, yellow bar here. So I'm good to go, right? So this way, I'm going to use those setups in my favor. So suppose my trigger is 10 minutes. So that has also yellow bar. That's good to go. So but when I could do swing, so initially until, right, certain things doesn't take place, which is a switch, which is the transfer of the power to the higher power. Until then, I will be doing scalping. If I don't want to do scalping, I'm busy. So I will look for turquoise bar to get in. So suppose we got in here, right? So that's a swing for maybe 30 minutes. And then it pulled back and retested this level. And then here is the transfer of the, what you call, between bullish and bearish believers, right? Second time with a little bit higher prices they want to pay, or they are not going down. So this way, I know that I'm going to go in a swing mode, and the yellow bar came in. That's a new life, right? So now I do scalping meanwhile, right? If I don't want to do it, go on a yellow bar as a swing trader, and the rest is the history. That's the basic concept of scalp swing. We're going to go into more details, so we could give you also some example. So let's talk about some switches. So what are these switches? This is the point. It's like a line in the sand between scalpers and swing, but with a controlled manner. Not when I feel it. When the switch comes in, then I know that I'm going now for a couple of hours or a day into the trade, and I have less risk because the software finds those. So my particular choice is this one, A1, B1, or C1. A1 and B1 is even more because big institutions participates in there, and C1 is everybody else plus some institutions, right? So basically, I like to recognize them, and I feel comfortable because when they're going, I'm going. So I have a least amount of the drawdown because there is a force of money behind it. That's what I'm looking for. Then we have a turquoise bar, which has a multiple functionality, and they also work as a switch. In many webinars, you could go on a YouTube, and we talk about many times about yellow bar and turquoise bar. Yellow bar is like a ready to go, and it is that like earliest stage entry. And that doesn't mean that they don't come here. When they come in, whole new era starts of trading. That means I feel safe to go in there. So they also work as a switch. Now the forecasters is one of the most recognized feature by many people all over the world, and that tells you based on the risk that your security is going up or down. So there is a symbol, blue color symbol, which I'm going to point it out. So once you see them, there is a low risk on a scale of 1 to 6. So 1 is the lowest one, 6 is the highest one, right? And you could be, I cannot guarantee, but you have a piece that now is the time to get in there with a low risk. So software is telling there, we're going to go to the moon. So what is wrong with you? Pull the trigger, right? I can't tell you or advise you, but this is what I do, right? So then part B, which is a swing, you will, by the time you get this switch, it will be 3.3 and up. So which is good, 3.3 is good. So basically scalping, you could accumulate here in this phase, right? And a low risk, and basically we're waiting for this switch practically. And that's the point, you know that institutions are loading up. Now, how to find all this stuff? So basically, like when you go for hunting, you need all the tools. So MetaStock has done very good job, and the tools are there. We're just putting our Explorer there. So there are two basic Explorer you need to use almost every day, right? Which is fine ingredients, right? If you take out the filter, then it gives you all of them. So you have multiple opportunity. So, and this is the universal. So this is 5 ingredients for bearish and bullish. You could use that or the, what you call this one, right, yourself. So you could find bullish trades. And if you are bearish, then you could use that plus this one for bearish trades. So that's what it is. And you need that in order to save your technical analysis time. So let's see what I talked before, and we're going to go quickly here because we got a few minutes left. So we what I said before, that we're going to scan the monthly, take the results, right? These are the results. We're going to go on a weekly results going on a daily, and then we filter down to 60, 30, and 10. You don't necessarily all has to match, but one of them will match. So that's your what do you call entry, and one of them is trigger. So we did this scan on 2/11. I run the trading room. We gave this to everybody, right? NEM, and results are obvious. You could check yourself, and doing good. So basically, people who took the results, they did whatever they want because we don't get involved. Because then I will wind up in advising mode. So people are happy, that's what I care. So in this case, there were 2 ingredients and yellow bar. That's the thing I'm looking for. So not necessarily you need all 5 ingredients. So if you run out of that, your wife will still cook it with whatever she has it and still figure it out. So as long as something is good in there, the yellow bar is a catalyst. So that catalyst is like really igniting the whole test. So we're missing 2 others, they will come around later. So let's talk about, this is one of the security came in the scan, which you saw. And let's talk about it. So here was yellow bar, the spike, right? And there was pure health missing. So 1, 2, the yellow bar, and the lines were parallel for a while. So I know that I will have some kind of investigation needs to do, right? So this is a daily chart, and it came in a scan, you saw that. So let's look for a similarity in the smaller time frame, which is 60 minutes. So 60 minutes wasn't ready. In my opinion, yes, it was telling me going to the upside, but being conservative, suppose you want yellow bar, okay. So here also 5 are not matching. You can see here, the vertical spike is there, the entry spike, this is there, but pure health is not there. So we're waiting for health to come around. So let's go and check the 30 minutes. What is happening there? Oh, that looks better than this one. So you could see here at 11 o'clock, that means here at 10:30, it was lining up, right? And which is like, you, you can't miss this one. So this is my anchor time frame. Right, so it's anchored. So now I know I got to watch this one instead of 60 to manage my risk. And these are the couple of indicators. The blue line, right, is a scheduled events. So basically, the way in which it is, the yellow bar stayed above it. So I know within 10 o'clock to 10:30, I need to figure out where to enter in to manage my risk so there is no drawdown. And you could see here the magic line, right? We plotted horizontally instead of curving. So basically, it gives me the support level. However, these are the forecaster, which is the most important part of that. And even if you don't learn anything, yellow bar 1/3, it pulls back. So any given time you could get entry in, and it was forecasting we going to the moon. You could see here the blue circle with the risk number 1 and number 2, right? That means I could get in. So I will do scalping and looking for a switch here on a smaller time frame. So that's what I'm looking for. And where you put the stop, you put the stop here or underneath, your choice, and it plots on your chart. So this is very simple. Again, fine gradients, right? They are not all lined up 100%, but look at the direction line and both. And then 30 minutes later, this came in. So you look for really inside the smaller time frame to get a perfect entry. If you don't have time, just go and do it here, and rest is the history. So that's how you trade. So you don't need to learn about scalping too much, this and that, you draw trend lines. So all this thing I did, that's what taking away my time. So to hell with it. I'm going to find a better way of doing it. And I don't want to go back. This is almost, how many years now? 16 years. I get lazy, I guess. But I do once in a while in the alert room, I will show them, right? Because you learn, you never forget things, right? Because that was my passion. But I just want to save my time, and I don't want to go on a learning process too much, or everybody else do. So what I did, I put the 30 minutes here for your review, and you could look at it later, this slide. It's a self-explanation. You don't need to be a scientist to figure out. So now I want pinpoint entries. So what happened here between 10 and 10:30, right? So I was looking at here, right, initially, right? You could also trade, right, since 9 o'clock, since the yellow bar came in. So some people, how come we're talking about that? But some people in my room, as soon as we see the yellow bar at 9:30, 9:40, they will go in a trade because they are all experienced. So they find this switch. So they will go and start scalping here, right? Some conservative will wait until this thing matches. So switch comes in here or switch comes here. So switch was here, A1 was here. So it started taking position and really close up the bar next. Some people took it, but the idea was I wait for some time. If software is predicting we're going higher, the regular technical analysis, it closed below the open, so we should not be in there. I don't care, right? My software says we're going to the moon. It's forecasting we're going higher. Even next bar is going higher, so we go in there and see what happens. That's why you do scalping. You take little trades, testing entry, right? Test it out. The water we could drown or not. So I really do not put all 500 shares or 300 shares or 1,000 shares at a time. I don't, because my risk is too high, and I want them to show me the money. So he is telling me we're going to go higher. So this is the blue line. I like when it goes above the blue line, and it's still forecasting. So you could still do scalping all the way until yellow bar comes in, because I want to match yellow bar. So until then, I will do scalping and accumulate some positions, right? And even they are telling me we're going to the moon, so I don't have fear hesitating, but I like to take some profit, to be honest with you. So what I do, and I do the same thing with options, I collect the profit from scalping and utilize to defend myself in a swing. And that's the one thing you get it today, you will be doing good because you're not taking much risk initially. I'm not telling you to do day trade, but it is your money. You want to collect profit from the market and utilize to defend yourself. And this is a risk management technique I teach people. You don't need to be hero. Put $10,000 here. All right, you put $200, $500, and then accumulate when you feel to accumulate. When yellow bar comes in, load it up, and then the switch came in, then 100% load it up, right? And then keep loading. Look at the switch is coming, right? And then C1 came in, right? That's A, B, C. We are on a third phase of buying. So now I'm going to leave it as a swing trader and get out at the spike here or direction line, whichever my choices are, right? And the risk is going higher, so I put a tight stop, right? Utilizing magic lines, or you decide where you want to put the. So I feel comfortable to accumulate here and of course here. And this is what it's called swing. So now if you see it, after you get this switch, there is no drawdown. And even if there is a drawdown, I collected some money here. And this is how the software works. A lot of symbols, but every step of the way. If I didn't have the symbol, how you know it's a switch or not? How you know the risk is low or high? So this is the one I disagree with many people. And when I represented to some institutions, what is this? I said, this is the risk. Oh, we want that. No. Don't take out those symbols. Leave it there because we lose millions of dollars and we have an edge and we utilize money smartly. But when you are learning the business, is overwhelming. But in reality, eventually you will love it, right? So we could, and you have an option. You could turn it off, whatever you want, right? And good luck for that, because I carefully watch my money, right? And sometimes when you take 30 contracts on option, right, it will hurt you if you don't watch it. And if I don't have this, I don't feel comfortable. Because I've been to those avenues. It's my money. I have to be watching every step. That doesn't mean that I sit on a computer whole day. I don't. But I put the alert, right? You could do it. And my switch comes in, then I enter into. And you don't need to trade more than 2-3 stocks every day. That's crazy. You have to be confident about what you're doing. So let's do another one. CMRE, we're going to go quick, but this is another example. I'm going to leave it here, the recording, so this way you could also feel comfortable practicing or at least looking at how we're doing it. So here, this came in, right, in a scanner. So another day, which was the day 2-4, earlier than the previous one. So basically, as I told you, magic line is like a risk mean risk reversion. So I like to buy when it is near in that area and bounce off, because what happened, all these people who wanted to sell it, they're gone, and then I don't have drawdown. That's what this software teaches me. So it is hard to believe in the industry, and many people will disagree with me. There is no drawdown what I do, but there is no drawdown because I do very carefully, and my software allows me to scan those events. So I don't have to go and struggle looking for the I don't know even what to do. So many opportunity, I can't even trade. Usually, you get 30, 40, 50 opportunity every day. Regardless what market is down 500 points, doesn't matter. I will still buy, what do you call, find the bullish trade. Why? Because this is the way software scans all this based on a risk, where my risk is low. So let's see. So we got 60-minute yellow bar, right? And we're looking for anchoring time frame. So I found it here where all 5 ingredients match. So now I feel comfortable to pull the trigger. But I still want to pull the trigger based on a smaller one, so I don't have a drawdown. So basically somebody said, I don't want to look at 15 minutes. So I don't either. I see here 30 minutes, I'm in. Right, I'll do scalping until I get a bunch of switches. And in this case, from trading, the one which I wanted to have this thing above the blue line. So then I will load it up during this formation, right? And once it goes above these 2 lines, I'm full in, and there is no comeback here. So that's the beauty. And look at the pure health is good. So anytime I could enter in because of the pure health. And whatever happens later, look at here. Same forecasts are telling me going to the moon right here, right here, right here. What else you want? I cannot guarantee it's going to work 100% all the time. Institutions are buying on top of their forecasting here, right? The forecasting here. So what else you want? And the fine ingredients offsets, we call offset, right? So they all basically matching. When you subscribe to Magic Trader, right, there's a trick on this vertical line and this spike. I enter at the base, so that is the next candle, right? So basically, the base is important. So many people who's using MetaStock, we crack the code, how it's visualized while you're trading, so you got earlier warning. So the spike is not the same like you trading. All right, so there's a big clarification of few pages there into your member area. So now let's see here. Look here. This is the direction line came in earlier. So this match it here. Look at here. All 5 ingredients matching, right? So what happened here? From here to here, we went into the scalping mode, accumulation mode. Then the turquoise bar came in. That's a switch after switch. So then you go on a swing mode. And every time you got a switch again, you add more. And then leave it alone. And next day, look what happened. It went up. So this is how we trade. It's not that difficult, but you need to, and how you could find the switch? You could scan these, you could scan these, you could scan a yellow bar, and you could find big candles, right? So you could do peacefully and make the entry. If you don't want to do scalping, fine. Find the switch from scanner and do some exercise, what I teach you, and then you're good to go. So now I'm going to leave it to Jeff. So whatever he wants to talk about it, and then if he leaves some time, I don't think today we will have much time, but Jeff will talk a few minutes now because we started late. I don't want to be late.
Yeah, no, Peter, thank you. I'm really glad that you had a full chance to talk because I would have hated to have you have to be cut off. Great job today, Peter. Great job. A couple of comments I want to read off here. Let's see.
Before Jeff talks,
can you hear me?
Yeah, before Jeff talks, I want to tell people, you know who's driving the bus? Jeff is driving the bus. And look on the mountain, what is written? Scalp-Swing.
And if I'm driving the bus, Peter, I want one of those pole horns that you like, the big semi ones. Can you do that?
Yeah.
All right. I want to say thank you for everybody for sticking with us. Dakari on YouTube says, I love this software. It's truly a gem. And Forex Trading Tab says, this is very good information. Thank you. On the GoToWebinar side, Dakari also says, I truly enjoy Magic Trader and it makes things extremely simple for me. Confidence. Thank you, MetaStock, Jeff, and Peter. So there you go, Peter. I'm going to kind of jump in and kind of talk a little bit about the pricing and kind of the offer. I want to say thank you for your time and thanks for coming in today. And I'm glad we were able to get everything resolved. It was a little touch and go there. So let me grab the presentation from you real quick.
Okay.
Wait. All right. Oops. Okay, let me try that again. I'm still a little jittered from everything. Okay, everybody. And again, I said this right before when we were introducing Peter's, I really like kind of the catalyst that he uses to kind of put everything together. I know he covered it, but I like to kind of leave this in the actual PowerPoint because I think it's so handy to kind of have everything. Once you kind of understand exactly what the colors mean and how they all put together, it's very, very easy to rate Magic Trader. One of the things I'd say about Magic Trader is the people that really kind of get in it and figure it out and understand it really, really enjoy it. I've never heard a negative comment from somebody that uses Magic Trader. It's very well liked. So the ingredients that you talked about were the direction lines, the health risk indicators, the entry spikes, the pure health bar, and the horizontal time risk. And once you kind of have all those kind of ingredients in place and the catalysts in place, it works really, really well. It makes the market a lot clearer for you. So here's a kind of a show of the commentary, if you would, and it is implemented. You guys know I love the commentary. He did a really good job of designing this, and Peter did a lot of the design work on this. We helped him a little bit, but I'd say he did all the heavy lifting. And right here, the scanning, you can scan for the 5 ingredients. One of the things is this is a very, very massive add-on. It includes 58 indicators, 47 explorations, 2 expert advisors, 35 templates, 127-page manual. It's got 102 symbols in the expert advisor, 11 highlights, and a commentary window. And normally the retail price on it is $199 a month. We've got a special on that for you today. But in addition to that, what we're going to kind of talk about is a room that Peter loves, or runs. I think he loves it, but he also runs it. He does a consulting educational alert room. And one of the things that amazes me is, again, the feedback Peter gets from the people that are in this room, like Dakari and the other people. But it's a monthly cost of $299. And what we're going to do is we're going to actually, if you pay for a month, we'll give you the second and the third month for free. So this is basically the education room that he does. He runs it. You can kind of read what's included with it, but everybody that goes to it actually really, really likes it. So in addition to that, the package we're going to include is going to include the Scalp-Swing recorded trainings. This is a series of classes, basically classes that we just got done recording this year. In it, you can kind of see what's included in it. It was a very, very exhaustive and intensive class. Peter talked about everything from like the ingredients that he uses, to what instruments that it can work with, to what the different instruments mean. He did a really, really good job. And one of the things I like about Peter is he's very, very thorough. So normally that costs, just the cost for that class alone is $999. Okay. The package that we're actually going to do for new customers today is you can get Magic Trader, or you can get the Scalp-Swing room and the educational room. And you'll get 3 months of Magic Trader Elite. You get 3 months of that alert room. You can still kind of catching my breath after that problem. And then if you already have Magic Trader, that'll cost you about $698. If you're new to Magic Trader and you want to get the whole bang, you can get Magic Trader, the subscription, you can get the educational alert room, you can get the recorded training, and that includes all permanent access to all of the recorded training and the elite service, as well as the consulting service. Would be $897 for 3 months. In addition to that, if you don't have MetaStock, you should get it. It's been rated #1 in its price category for 29 years in a row. We'll include a free trial to MetaStock with any of these packages today, and you can evaluate it and see how you like it. To take advantage of that, give us a call at 800-882-3040 or visit us online at metastock.com/saleschat. So Peter, I do want to say thank you again for coming in and spending some time with us. Sorry, we were a little frazzled from my presentation, but I'm glad it happened during mine. I want everybody that comes and spends their time here with us to get all of the stuff, all of the good education and stuff that we have to offer today. So with that being said, also, we do include, as part of the Traders Action Pack, we do include 3 months of that Magic Trader Elite subscription add-on. So you can get 3 months of Trade Trend, the Vora Victory add-on. We'll talk about the Omni training in just a little bit. You'll get Tushar Chande's complete toolkit, 3 months of Magic Trader, Learn MetaStock, 2 years of Stocks and Commodities magazine, and our training on how MetaStock works. That's normally $4,485. Here at the show, it's $2,193. So, Peter, thank you
very much. Thank you very much, and thank you to everybody. And I apologize for the next speaker. Whatever reasons, we all got late, but no disrespect to the
Don't worry about it. We'll let her go long too. It's okay. No, thank you.
Thank you.
All right, thank you. Okay. All right, and so to take advantage of that, give us a call. 800-882-3040, metastock.com/summit deal, and metastock.com/saleschat. So we will say thank you to Stocks and Commodities for sponsoring our events for 10 years. We appreciate it. Get a free issue if you want. metastock.com/tradersummit. Fill out the registration form and you'll be able to sign up for all kinds of free goodies from our speakers today. Also, thank you to CMT. We appreciate the sponsorship. Good job, guys. And our next speaker is Hima Reddy. Hima is a frequent guest of MetaStock. I really like her take on the RSI, how she looks at them. I like her kind of superhero approach to presentations. So Hima, let's go ahead and bring you on here. How are you doing?
I'm good, Jeff. How are you?
We had a huge technical issue, which I'm glad to say that we got it out of the way.
Oh,
And,
all right.
It was during my class, so everybody else.
Oh, no.
Yeah,
Oh,
well, no,
no.
that's okay. I'd prefer it to be in my class than your class, because that just adds extra stress, right?
Sure, as the host, yes. Well, you're always such a gracious host, so I appreciate you saying that. And hopefully, on our team, we say tech happens, like the other phrase, what happens? Sometimes tech happens. So
you do your best, right?
Yeah, you do your best, exactly. All right, so can you see
we are
my
starting a little bit late. I can see your screen. I don't want you to be worried about time. Take as much as you need.
Okay, thanks so much, Jeff. I appreciate it.
All right,
so good afternoon, everyone. Here we are. It's funny because it's like after market close feeling, but there was no market trading today. But at the same time, with everything going on in the world, it feels like there is, right? So please, so I know everyone's like awake and ready to learn something cool and new. Please type a Y in the chat. Those of you here in GoToWebinar, type a Y. I know there's a bunch of folks streaming, I think from YouTube. And so if you've got a place to type a question, type a Y for me. That way I just know everyone is here and engaged and ready to dive in. Because I am going to look at the markets with you. I mean, technically it's not live markets because things resume tomorrow, but we are going to do that towards the end of my presentation. And as Jeff said, I've got something really cool for you, as I call it here, not your mama's momentum, how to profit in any market on any time frame. And the other really cool thing I love about trading is you can do it from anywhere in the world, right? So awesome, we've got Dalton, Joseph, Arden, Mira, Yahia, that's how you pronounce it, Simon, Michael, awesome. So I'd love to also know where you guys are dialing in from as we dive in here, because I think especially events like this, it's really cool. You can have folks from all over the country, all over the world. So I am based now in Austin, Texas, and February, yes, usually is cold, but it's my birthday month. So I'm so happy to be wearing a t-shirt when it's my birthday because I don't get that often. So where are you guys dialing in from? Where do you do your trading from? Just let me know in the chat. I'd love to get to know that about you here. All right, awesome. Well, like I said, we're here for something super special, super useful to your trading, so let us dive in. All right. So how to trade momentum. Get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows you to predict trends and price and momentum and let me do it for you? Would you like me to share an easy way to trade futures, stocks, and options? Okay, how many of you want to get as much as possible out of our time here together? Yeah, I want that for you too. Okay, for most of you here with me today, we've got Joseph in Toronto, Richard in Calgary, Dalton in Phoenix, Simon in Ontario, Mira in Mississippi. Oh God, I should quiz myself there. Okay, Patty in South Africa. Wow, okay. For most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. Now, in a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? Awesome. Now, I promise that by the end of our time today, you'll know everything you need to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? All right, great, because here's the problem, right? The problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends, especially these days, because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. As you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you well know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results, guys, they're up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you, right? I don't know your trading plan, your account size, or your markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? Well, if you haven't been following me for a while, here's a mercifully short introduction. So I'm Hima Reddy, and I'm originally from New York, the hotbed of the financial markets. Now, I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stock right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders like you guys. And I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. And now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great. All right, I was in the center of the action as an analyst with Piper Jaffray and making them a ton of money. Starting work at 5 a.m., working late, and burning out quickly. Is anyone else a corporate cog making someone else rich? I know, right? I mean, I thought there must be more to life. The money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. And I'll never forget the moment the bottom just dropped out of my world when my beloved dad and mentor died suddenly. At first, it felt like my whole world was crashing in. I had to leave my job. I had to tend to financial and legal family matters too. But then I realized that this was my ray of light, my hope to get out of that corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets as a teenager, I had started a futures report that I called my Skinny on the Mini. It started as just another exercise, but soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But all that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders were hounding me to get that report back. So when I left my job and took over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. I sent out the call to my former subscribers and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what, guys? Right, freedom. Type a Y for me in the chat if you're looking for freedom through your trading, right? Time freedom, financial freedom, location freedom. Now, there's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Freedom. I mean, wouldn't that be awesome? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? Well, they made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading futures, stocks, and options. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive right in. So trading momentum can be easy, but first you need to understand how it works. Do we have anyone who's new to trading momentum here? Please type a 1 for me in the chat. 1 like, yeah, momentum. I just heard the word. I barely know what it is. All right, cool. Well, whether you're at a 1 or a 10, all right, a Formula One race car track is going to have you understanding momentum in no time. So let's put ourselves in the driver's seat. You guys see that little hot little race car there? Okay. Put yourself in the driver's seat. You're at the starting line of the track now. You're going to rev up your engine and go. So you pick up speed really quickly or accelerate on the straight runs, right? That's how you're going to set yourself up to win the race and do so safely. And when you see a turn coming up, you have to prepare accordingly, right? You have to ease off the gas to slow down or decelerate, even if it's just a little bit. So you can have more control as the car whips to the other side of the turn. Then after you make that turn and the road straightens out again, you hit the accelerator once more. Are you getting the idea, guys, of how you accelerate and decelerate on this track? Well, then now you know exactly how price momentum works. So now let's jump into the helicopter. Yes, there was a helicopter looking down on the racetrack. So now you can see we're getting a bird's eye view of the track, right? You see, the racetrack becomes priced as you see it on your stock charts. And momentum is generally plotted on the bottom as a subchart. All right. Now, when price is trending higher, you've got upward momentum that's improving. That upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Are you getting this, guys? Type a line in the chat so I know you're with me. That momentum actually generally makes a change, makes a pattern, makes a shift before price does. There's really a lot of value in that. All right, awesome. Now, during falling prices, it's a lot the same. During falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Pretty awesome, right? All right, awesome. So now we're going to dive into the indicator that I use to measure momentum. But first, let me share with you results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. Okay, now that I've made momentum easy to understand. Yeah, you guys are getting it. Joseph says, insightful. Stephen says, momentum shifts before price does. Yes, generally, Stephen. So you're going to see here. Ed says, good to know. Yeah, it's really good to know. So with that base there in mind, guys, with having made momentum easy to understand, whether you've been using it for years or you're starting here today, would you guys like to know my Jedi secret? Would you like to know my Jedi twist on an indicator you all have access to? All right, cool, because I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using my special Jedi indicator. All right, so I need everyone to participate here on this next slide. It's all about you. Because this indicator, my Jedi twist, it's called the RSI Power Zones. And you can use it on any market in any time frame. So I want you to take a good look at the information here. You see how there's a column of active markets on the left here? Okay. So indices, by that I mean any of your broad markets. My baby is the E-mini S&P 500, okay? There's the NASDAQ, the Dow, maybe the Russell. Stocks, maybe you trade tech stocks like the FANG or whatever they're gonna call it now that they renamed Facebook. Or maybe you trade other sectors or industries. How about ETFs? Do we have any ETF traders here? I have a lot of coaching students that trade the SPY. Maybe you trade bonds, the fixed income realm. Maybe you're trading FX, your currencies, or commodities like oil and gold and more. Let me know in the chat what market you trade. Pick one if you have a few. And let me know what time frame you use it with, guys. Here's just a sampling. Monthly, weekly, all the way down to 5 minute. And there's lots of variations in between. I want to know what you here with me in this presentation are trading because I want you to understand that I'm trying to speak your language here, okay? We're going to go through a variety of markets and time frames, and I'm going to pull up live charts as well and be able to show you examples of the RSI Power Zones that work on those market combinations. So for example, with me, I trade the skinny and the mini report that I still write using the E-mini S&P 500 futures as my trading vehicle. And I analyze them on intraday charts, specifically a 3-minute chart. I started learning on a 1-minute chart and that felt like crazy. So 3-minute is really solid for me. So you guys let me know too what you trade. And we're going to start getting to know the RSI power zone, start seeing how it comes to life so you can kind of get a feel for it. Because that's going to help you understand the twist, the booster to this that is not in the standard indicator. Okay, sweet. We've got Joseph who trades stocks, options on a daily basis. Stephen trades the Dow on a daily chart. Patty trades 15-minute indices. Awesome. So we have a variety of types of markets here, as well as time frames. Dalton as the SPX index intraday. Fantastic. Okay, so here we're going to start out with a market that we all know. Trust me, you know it, whether you trade it or not. It's a commodity. Okay, I'll give you that hint first. And we're going to look at it on a really broad time frame, okay? A monthly chart. And again, whether you trade it or not, you know this market because it's oil. Okay, whether you trade oil, whether you trade markets that are correlated to oil, whether you just check it out at the gas station, it's important to monitor. So I'm going to use this to help you get to know the RSI power zones. We're going to like go on a date with it, okay? You don't just meet a pretty girl and then say, let's get married, right? You got to woo her a little bit. So let the RSI woo you, see if it resonates with you, and we'll go from there. So here we have monthly history of oil futures, continuation chart, meaning this is a chart of each active front month all linked together. Now you can see the squiggly black line at the bottom with all these different colored lines. These are the 4 zones on the RSI that make the power zones. So the 2 lower red lines make what's called the bear support power zone. The 2 lower green lines make what's called the bull support power zone. The 2 upper red lines make the bear resistance power zone. And the 2 upper green lines make the bull resistance power zone. So looking at each of these zones and looking at the history of the price action versus what happened with the RSI, you're going to see it's going to uncover stuff that you wouldn't see with the regular RSI. So there was this run up in price. You see in the beginning of the chart here, right? It took us to huge, crazy highs, $200 a barrel. And that strong advance higher was accompanied by the RSI power zones on oil rising from the bull support zone to the bull resistance zone. This is what was evident on the monthly time frame. So the first thing that the RSI power zones does that is not in the regular indicator that's standard is it shows you how to trade in trending situations. The original RSI, not a lot of people know this, the original RSI was developed in 1978 by Wells Wilder, and it was designed for trading ranges, for trading choppy markets. And those happen, right? But they're not there all the time. Sometimes you're faced with a strong market. How do you get the most out of a strong trend, whether it's up or down? The RSI power zones can help you do that. All right, now we traded up to these crazy new highs, and what happened? Boom, right? Massive drop. Now these are each monthly candlesticks, but still that was a very severe drop. And I was an analyst on Wall Street when this was happening and watching it unfold. And the thing is, everybody else thought, oh, after a drop like that, we're just going to slowly climb back to our original levels, right? We're going to get back to $200. And I said, no, no, no. I don't think this is a one and done fall here. I think oil is going to be in trouble for some time. And that's exactly what happened. Look at this. Years, literal years, guys, of this giant sideways range. Now take a look at every one of these yellow vertical lines. Okay, 1, 2, 3, 4. Do you see how every peak in price or high in price formed with a peak on the RSI? And do you see how every single one of them was within those 2 upper red lines, the bear resistance power zone? Type a line in the chat if you guys see that. This was a massively helpful clue as to the future direction of the breakout. Because after falling to $100 a barrel, people thought, there's no way it's going to fall lower, right? We're going to just recover back to like 150, 175, go up from there. Not so much. After all that years of sideways, we had another drop, still quite substantial. And look at these price lows that formed corresponding to the RSI. Hey, the RSI power zones pushed down into the bear support power zone and continue to pressure into there. So what happened is that after the sideways range, if you were with the downtrend, the RSI power zones made it easy to maintain a selling mentality instead of getting every time we got excited to some one random level called oversold. Okay, by looking at the zones, it keeps you with that trend for longer and doesn't let you get caught in those fake outs as much. So from there, was there a recovery of any kind? Yeah. But even on that recovery, on that first big attempt higher, you can see RSI capped at the bear resistance power zone. Now, what does this look like today, right now? Here, let me show you. This is exactly the chart I captured like about an hour ago, okay? So today the markets aren't open, but this is as of Friday's action on the monthly chart of oil. So that gray vertical line right here is starting where the last chart left off. So check it out. We had that recovery into the bear resistance power zone. There was a pattern between price and momentum, and I'm going to talk to you about patterns more in a moment, and then the RSI fell lower, went sideways, fell again, and look how it came back to the bear support power zone, comparable to the past levels. Now, since then, we've been trading higher, and this entire run up higher, guys, I have been navigating my tribe, my traders that study my work, and helping them stay on the long side of the market. Because when you take what was happening on the monthly chart here and you go down to the weekly or the daily, there are plenty of opportunities with the RSI power zones to capitalize on the move. So this is the RSI power zones as applied to a commodity that we all watch, we all know, and on a monthly time frame because of the importance of its history. So can you see how looking at the RSI power zones on oil might have better helped you navigate trades in oil, whether it's way back 15 years ago or even just recently in this run-up? Please type a Y in the chat if you see that. Okay, awesome. So that's first date, and that's a good start, right? How about we go on a second date? How about we go on a second date with the RSI power zones? This time with an ETF, and let's try a weekly chart. Okay, bring in the time frame a bit. So now we've got our 4 power zones again. And this time we have the S&P 500 SPY ETF, SPY. I know we have some SPY traders here. So when you look at this price action, every candlestick, okay, each of these red and green bars is representing 1 week of price action, not 1 month. And I want you to focus in on the past here, okay, before and after the start of 2016. There was this sideways action on the SPY for like 2 years. And then you can see there was a breakup higher above this black dashed line, and then price pull back to where my cursor is on this yellow line. That pullback provided an opportunity to be ready for a long if you were using the RSI power zones, but not if you were just looking at the traditional approach. You would have totally missed this, all right? So who would have liked to know to start going long the SPY at this time in late 2017? I would have. And I did. Have that insight and be able to take short-term trades, long-term trades accordingly, right? Using the E-mini S&P 500 futures mine market, but understanding what's going on in the SPY and knowing that's all related. So what happened from here? You probably remember this massive run-up. Huge, right? And look at this advance higher. It had the RSI power zones shift from the bull support power zone, extending up and beyond into the bull resistance power zone. So this movement from one green zone to another, it helped you stay looking at the long side, looking at the buying moves in the strong advance, and being less worried about any of these couple of corrections, whether it's a few weeks or a couple months. Then what happened from there? Well, there was a very sharp drop, right? It was like 2 weeks, took out the past 10 weeks. But all that happened was that the RSI power zones went from the bull resistance zone to the bull support power zone. It basically relieved itself of overbought conditions. It's like a pause in the race, guys, okay? When a marathon runner is out there, you know, kicking their butt. We just had the Austin Marathon here yesterday, and I saw people all over the city. When they take that break and they take that water from the sidelines, it's just a pause, right? They're still going to keep moving in the original direction. Same idea here. So I was riding the skinny at this time. Traders got really freaked out. I said, you know what? This price decline, I think, is just going to lead to some sideways action that we can trade in the shorter term. And that's exactly what happened. Okay, there was this sideways tradable moves showing on the daily intraday charts, and the RSI just unwound its overbought conditions. Now from there, what has happened? Where are we today with this? Well, after this price breakout higher, you can see this gray vertical line captures where the last chart left off. And we've had very, very dramatic action, right? We had a lower low post. Then we had a high post into beginning of 2020, right before the pandemic started. And I started warning my tribe about the potential for a market high in February 2020 before there was any talk of COVID or anything here in the States. In fact, I have traders who I was coaching at that time who came back and told me that because of the tools they were using, the RSI power zones amongst them, they were able to protect their portfolios and not suffer this massive drop. Now, again, this is on a weekly chart, guys. So if you take all this and you go down to lower time frames, daily, intraday, that's where the tradable moves come from. Now, look at where we are right now. It's a very interesting area, right? We've been a little weak on the market, obviously, and on the RSI power zones. But look, on the big picture, guys, they're still hanging around at the weekly bull support power zone. And they have not pushed below the low from October. So I think the market overall is very much still at what I call an inflection point. It really could go either way, but I, in the skinny and the mini, put out my short-term research that tells me exactly what's happening in the short term to help me be ready for the longer term. So can you guys see how, looking at the RSI power zones on the SPY, the past few months, the past few years, how it might have better helped you navigate trades in the SPY or the markets related to it? Type a Y in the chat if you see that. All right, awesome. Now we're gonna dive into the trade setups. But first, let me share with you more results from our trading family. So Suji shared my first month using RSI power zones was also my best trading month so far. All right, by now you're getting it. So we're gonna dive into my proprietary 3-step approach to using RSI power zones to finding great trade setups. Okay, I'm gonna show you actual setups that I use and share with my trading family. All right, guys, so on this slide right here, you're gonna wanna take notes, all right? We're gonna have a 3-step approach using RSI power zones to identify trade setups. And then I'm gonna practice that with you. And we're gonna absolutely look at it on live markets too and see what's going on before we resume after the holiday today. All right, so step 1, review the chart and assess the price trend. Now you might think, Hima, hold up. This whole time you're going on about momentum. Now why is step 1 talking about price? Guys, because price is king, okay? Price is the source of data from which momentum is calculated and derived. And we will benefit more from trading momentum if we are aware of the price trend. So when you make this assessment, you're gonna end up with 3 choices: uptrend, downtrend, or sideways. And yeah, sideways is a type of trend, because you can be prepared for the next directional move if you know how to monitor the momentum of the sideways action. Step 2, evaluate the RSI power zones reading. This is specifically looking at the RSI value relative to the 4 power zones. Okay, each zone has a distinctive upper and lower border, and there are 4 total zones, and that's all listed in the system. Now, this means that there's some white space, some gaps in the RSI power zones, and it's important to know if the RSI is currently in a zone, or if it's moving in and out of a particular one, or if it's just like hanging out in that space in between. And we're going to see all this in our examples coming up. Now, step 3, determine the presence of an entry signal between price and momentum. And usually the best signals come from when momentum and price, they're not connecting together. They're not jiving together. That's usually an opportunity that we could take advantage of for profit. All right, so you've got your 3 steps using RSI power zones to identifying trade setups. And I'm going to repeat these steps. You're going to have them down pat by the end of our training. Now, the best way for you to learn is by actual examples. And you know, something I pride myself on is that I practice what I preach in the analysis that I share with you. So traders in the Hima Reddy tribe, they get updates from me. My members get even more detailed updates. And every single example we're going to look at here, I called out to my members as it was happening. Okay, I didn't just have it tucked away in my back pocket and pull it out as a beautiful textbook example. Anyone can do that. I'm showing you actual calls that I made at the time that I made them. So I want you to type a Y in the chat. Whether you're here in GoToWebinar, watching on YouTube, type a Y in the chat so I know that you see the value of what you're about to implement here, that these were actual calls I made and shared with my tribe as they were happening. All right, fantastic. So let's come back to our list of markets and timeframes, and let's look at another combination. This time, let's look at a stock on a daily chart. I'm sure we have some stock chart traders here with that daily time frame as their main trading time frame. All right, so here we have a chart of Netflix, okay? And at the time this chart was forming, exactly like this, I called it out to the tribe after applying these 3 steps. So here we go. Step 1, review the chart and assess the price trend. Well, let me give you a clue as to how you determine price trend. If you're newer to trading, then you may rely on moving averages, you may rely on an indicator, and that can help. But what I like to do is the essence of what Gann did, which is focus in on the price highs and lows themselves. So I have general guidelines for how far back in time I look. On a daily chart, I would say look back at least 6 months. And I look at the most significant swing highs and lows. And I give distinctions of what those are in the system. So if you look at these swing highs and this last one that seems to be forming, what would be your guess, guys, as to what the trend is? Is it uptrend, downtrend, or sideways? That's right, this is an uptrend. But this uptrend has a corrective pullback in motion, right? It's in the downswing part before it makes that new move higher, potentially. All right, great. Step one complete. Step two, evaluate the RSI power zones reading. Where is the RSI power zones? You've seen these zones now, right? You've been on a couple dates with the indicator. So at the least, you can identify that the RSI value is right between the two lower green lines. And maybe you remember that those two lower green lines comprise what's called the bull support power zone. So the bull support power zone is being held, and we've got the uptrend in price long term with a corrective pullback in motion, looking at the big picture trend, right? All right. Now, step three, determine the presence of an entry signal between price and momentum. So there was a disconnect between price and momentum that allowed me to prepare my tribe for the following move that resulted, as you can see here, really took off to the upside. Shares went from the 271.22 low to the 423.21 high, creating a 56% move higher. I have a whole training that dives into RSI power zones for true mastery, and I'll show you the signal in session number 2, because I can't teach you everything you need to know here within an hour, guys. It would do you a disservice, okay? It would shoot you in the retirement. Yeah, I said shoot you in the retirement. Money, it's not just money. It's the blood and sweat and tears that it took you to make it, and you can't afford to lose any of it. I'm here to help you maximize it. And of course, I can't teach you everything that I've learned in 20 plus years in an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can take a look at how I can teach you more in depth. Making sense? Are you getting this? Type a Y, guys, if you understand, because we're going to dive into another one of your favorites, but first I have to know you're still here with me. All right, cool. Let's look again at a stock on a daily chart. And this was a really cool situation because I was actually looking at this exact market with students in front of me live during one of our review sessions. So we're going to apply the same steps. Step one, review the chart and assess the price trend. This looks a lot like that Netflix chart, right? Yeah, we have an uptrend in motion. And it's got that corrective dip in play. Cool. Step two, evaluate the RSI power zones reading. Now here, it had tested the little lower edges of the bull support power zone, okay? It had traded beyond it just a bit, then come back in. So at the current moment that I saw this chart with students live, it was holding in the bull support power zone with room to move higher. The real kicker though is that setup, right? Step three, identify a setup, a pattern between price and momentum. And what I identified here was actually something that you can use to calculate a precise price target. Did you know that? Did you know that you could use a momentum indicator like RSI and price and create an actual target to the penny, to the cent? Well, we did that here. So on April 10th, we calculated an upside target of $39.13. So we were trading about $30, so that's a sizable percentage difference, right? And here's what unfolded from there. You can see there was a move higher later in the month, then a little bit of a correction lower. But all in all, this was a trend higher such that the actual target was met on June 5th. And the market actually continued higher from there. So I have a whole training that dives into all 4 of the RSI power zones. And I'll give you the signal that showed up here in the system. I'm just showing you here what you didn't know that you didn't know. That trading can be simple when you follow the expert. Making sense, guys? Are you getting this? All right, awesome. Now let's mix it up a little bit. We're going to look at a currency. This is the Swiss franc. So one of those 6 major pairs, right? And we're going to do the same exercise again. So you should have this down pat now. Step 1, review the chart and assess the price trend. I'll give you a clue here. High, low, lower high, lower low, lower high, lower low, lower high, lower low. So based on where price action was at this time, what was the trend? Uptrend, downtrend, or sideways? Yeah, this was in a downtrend. And this downtrend in price right now didn't have any sort of corrected bounce or anything. It was just a full-on downtrend. Step 2, evaluate the RSI power zones reading. Now, this one may look a little different. You may say, well, Hima, it's actually between the lower zones, right? Between the 2 lower green lines and the 2 lower red lines. This is where, and I get into this in depth in the system, you have to look at the relationship of RSI over the history of the entity, whether it's the 6 months, a year, a few months, to really get to know how RSI is behaving in that particular market, okay? So when you look at it here, it was been moving between the bear resistance power zone and the bear support power zone. Recognizing that relationship would have you better prepared for step 3. Determine the presence of an entry signal between price and momentum. So there was an entry signal here between price and momentum that was even further defined and qualified by the location on the RSI power zones in which it was happening. That's part of the Jedi twist too that no one else does. So from there, it prepared you to be defensive. If you had a short position with this downtrend, it gave you preparation to say, you know what, I need to protect my profits. And I got my traders thinking about the potential for further upside and what they needed to see for that to unfold. And this is what unfolded. Now, like I said, my baby is the E-mini S&P 500 futures. I'm not a day-to-day FX trader. So I had to check this result of this move with one of my FX traders. And he verified for me that this move, which I called out at the time it was happening, went from the 0.9186 low to the 1.0050 high. That doesn't maybe sound like a whole lot in decibels, right? Do you know what that is in dollars, guys? $8,600 in this move. And I'm not even telling you have to capture all of it. Would you like to get 70% of that? Maybe 50%? Maybe 40%? Well, that's awesome because there are markers along the way where you could have used the RSI power zones to not only get out of the way this trend that was changing the upside, but also take advantage of this move higher. Look, I'm really excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education to trade the markets so you can take control of your financial freedom and live the life you and your family deserve. So by now, you know that power zones and the RSI can really boost your trading because whether you're new to studying momentum or you've been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistency and consistent profits is what it's all about, right? Making sense? Guys, type a Y for me in the chat if you want more consistency, more consistent profits from your trading. Yeah, that's awesome. That's results our trading family loves seeing too, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? All right, then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones. Here's what more of my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's RSI Power Zones indicator has become the standard on all my charts, said Rob. Norman shared, a day after learning one of Hima's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning on the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. All right, great. So here's what I've got for you. This system that can give you all that is a 4 zones RSI coverage system. Before I give you this opportunity, let me show you the features and benefits using the system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size. $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You pinpoint your trades faster, so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 zones RSI coverage system gives you all this. All right, but first, who is this not for? This is not for those who are trying to get rich quick. Hey, like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this isn't for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. Since you're still sitting here with me, you're taking the time to learn to boost your trading. You're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 zones RSI coverage system, I give you my 20 years experience on a silver platter. And it's 100% focused on step-by-step systems, instantly accessible, starting with video tutorials. Here, I take you by the hand and I move you through the 8 phases of a trade so that you have a complete system to your approach so that you minimize mistakes. Okay, walk you through every one of those 8 phases. I also give you my top RSI Power Zones trading signals from years of study and observation with real-world various examples across multiple markets and timeframes, just like you saw here today. I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones. And much, much more. Now, to make it even easier, you'll also have cheat sheets that you can download and print out and keep right by your trading desk. Okay, these remind me of back in maybe high school, maybe you had a math test, like some calculus, you learned some new stuff on Monday, and then you had a pop quiz by Thursday. The teachers that really wanted you to boost your learning would sometimes let you bring in that extra resource, right? That cheat sheet with formulas or definitions. The same idea here, guys. I want you to get everything into your trading, meld it in faster, so this helps you learn faster. So what does this look like? Well, for example, they're easy to read grids like this, and they have step-by-step trading strategies, step-by-step tips and tools and techniques all listed out. And it's a packet you can print out and keep right by your trading desk or keep it digitally. It's up to you. Okay, it moves you faster on your path to boosting your trading account. Now you're gonna love this. Okay, this is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock, our host here today. So you can download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like. Forever. No limit, guys. Now, I've had traders email in and offer me hundreds of dollars just for these indicators alone, and I'm giving them to you here as part of the complete system. Now, I've included everything to set you up for success. The only thing you could possibly still need from me is for me to take you by the hand personally and help you. So would you like that? Would that help you if I hopped on the computer with you and showed you live how it's done and answered your questions right there on the spot? All right, great. Then I'm going to give you everything, including me. Monthly group coaching for life. Once a month, you'll get together online with me personally, and we'll spend an hour together. And I'll personally walk you through the markets, doing analysis with open Q&A to help you become the trader that you want to be. Now you can see that I built in everything you need to boost your trading with the RSI Power Zones. The 4 zones RSI coverage system, with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI Power Zones, is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live, this is priceless, but I've had to put a price on it. This is easily $797 for just the first couple months because I easily charge $500 an hour for my one-on-one coaching. But you get me for life. The RSI Power Zones indicator, available for the most popular trading platforms with free updates for life, is valued at $497. The total value is $3,488, and it's worth every penny. And let me ask you, if all the system did for you is help you trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of the system is $3,488. Because I want to make an investment in your future, because I want you to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. You can get started now by heading to himareddy.com/metastock. And I'm going to make it even easier for you. When you visit himareddy.com/metastock and invest in the system today, I'm going to give you all this because I want to see you finally succeed in your trading. So I'm giving you our personal 100% satisfaction buy it back guarantee. Okay, take action now. Use the complete package for 90 days. Wear the tires off the system. And if you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. I want you to be 150% satisfied with 4 Zones RSI coverage system. Because after all, my clients tend to stick around a long time and become my friends too. So follow the whole system. Okay, I want to get you out there. I want you to treat it like a rental car. I want you to put it through its paces, drive it all over the place, wear the tires off the thing. And if you don't feel you've gotten far more than your investment, then I'll hop on the phone with you, personally work with you. And what I really want is for you to be totally satisfied. And that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488. And we're going to be looking at this for a limited time of just $297. So go ahead and take action now. You can go ahead and visit the page to sign up. And let me show you exactly what will happen when you join us. So you'll immediately get a login access email with details to enter the RSI Power Zone system at my educational portal, this guy right here. Now, once you head in there, all the training you need is right here where you can get to it easily and get started. Literally says start here, right? Now, what's all this other cool content? Some of it's going to be accessible to you and it's all undisclosed bonuses and you're going to love it because we love to over deliver. So take action now because this offer is only available for a limited time and only for this MetaStock Online Trader Summit. Go ahead and visit himareddy.com/metastock to take advantage of this limited time offer and get my entire system for just $297. Now, as I said, I wanted to ask you about your markets earlier, right? And some of you did come in and tell me what markets you trade. So we're going to go to the live markets and I'm going to go ahead and pull those up and we're going to see how the RSI Power Zones are acting on those markets. Would you guys like that? A little taste of monthly group coaching live? All right, awesome. So I'm just going to bring over my screen here. And this is a little bit, like I said, a sample of monthly group coaching live. So I actually pulled up some of the tickers I did in the last session with my students, but I'm going to come back here and look at what you guys mentioned earlier. I was paying attention. So we have the DIA, the Dow, which I'll use the DIA to represent, that Stephen trades on a daily chart. Okay, great. So here we are on a weekly. So let me change this to a daily. And let's take a look. Now you can see that the RSI Power Zones had a disconnect between price and momentum here. I see that. And once you dive into the system, you'll see it too. This happened across all the major averages. So for Stephen at the Dow and for anybody looking SPY, NASDAQ, it all started to kind of fizzle out at the end of the calendar year. Now, the real momentum behind the next move didn't come in until later, right? We started weakening off this January 13th high. But look at how all of this action, guys, here was capped in the bear resistance power zone. You would not have seen that if you were looking at any other RSI, only the RSI power zones. And I teach you not only about the zones, but about the setups and how to marry the two. Where a setup occurs, which zone it happens in, makes it more significant. So where are we right now? Well, we all see that we had a recovery into early February, right? And then between whatever, I mean, it changes like every minute. So whatever's going on between Russia and Ukraine as of this moment, what continues to happen with inflation-related data and the Fed's actions on them, and we'll see what they do by the March 16th FOMC meeting. Maybe they'll take action earlier. There's a lot of big things happening in the market right now. And guys, all of that was accounted for in all this move. But look, you tell me here in the chat, after you finish registering and come back here, where did we stop on this recovery? What zone did we stop in on the DIA? Yeah, the bear resistance power zone. That was the first indication to me. I started telling my traders in early February, I don't think we're going much higher. I think we're going to start to cap out and probably fall into mid-February, mid to late February. And I gave them specific forecasts for some of my forecasting students. So do you see how that's helpful to look at the RSI power zones with the current live markets? So the whole list of platforms for which you have the RSI power zones, Joseph, is on the checkout page. So if you go to himareddy.com/metastock, then you'll see them all listed out. All right, awesome. So what other markets did you guys tell me that you traded? Well, somebody mentioned stock options. I don't have a specific ticker. How about we look at my baby, the ES, okay? So we're gonna look at the current contract, which we're gonna be, rolling away from as we get closer to March. But here it is. Now, between momentum techniques combined with price patterns and forecasting, that's my whole approach to trading, my trifecta, okay? I precisely had a readiness for the market to make a high on February 10th on the ES. 2 different forecasts told me this, and look at where we were in the RSI power zones. We were backing away from the bear resistance power zone after holding the bear resistance power zone here. Now, let me show you more history, guys, okay? Now, this is a contract chart. That's why it's really sparse back here. But I want you to see, it's just not as simple as, oh, I'm gonna buy when it's green and sell when it's red. No, no, no. That's part of the conversation. But if you do that, you're gonna get caught up anytime the market goes sideways, right? Or gets a little volatile. That's why you have to use all 3 factors. You have to know the zones, you have to know the price trend, and you have to look at the setups between the 2. That's where you get the most out of this. So the ESH2 is looking a lot like what I'm seeing on the Dow. How about I go to the daily charts of those markets I showed you earlier? So let me pull up the continuous contract chart for oil. All right. So on oil, I actually had a forecast that was a couple weeks ago for trading up higher into oil. And that's on my YouTube channel, which you can check out. And I had that forecast that I shared, like publicly, okay? So we did continue higher into there, and we're still going up. So where are we heading up to now? Well, let's see what the RSI power zones are telling us. Again, on the daily time frame, there was a disconnect between price and momentum earlier here in the chart. And again, I teach you in the system how to monitor these patterns relative to the location on the RSI. I cannot stress that enough. That's the magic secret sauce that brings it together. All right, so it looks like we still have room to move higher on oil. There's actually a cool pattern setting up between price and momentum from February 8th to February 18th. And it's one of those where you can use price to actually calculate the upside momentum target. So I think we're still on track. My bigger picture forecast is to get up to $100 a barrel sometimes in the next couple months. I have it more precisely in my forecast, which is a separate research I published. Okay, great. We see some questions here in the chat. So SOXL for Jerry here. All right, so this is semiconductor ETF, it looks like, 3x leverage, right? All right. I always like to get my bearings of where I'm at. So we're going to take a test of multi-time frame analysis, guys. We're going to do it for Jerry here on SOXL. So we're going to do is start with the monthly chart. That's right, monthly bars. So of course it's going to be volatile and spiky, but guys, do you see this? I can't make this up. Do you see how in a monthly chart, this 3x leveraged semiconductor ETF, look how it's moving between the bull zones beautifully. Just that alone will help you keep your trades that are with the long-term trend and keep making new trades in the direction of the trend. Now, it doesn't mean that the market just goes up and down with the moves, but it helps you stay out of the way of trying to get in that top picking mode, okay? So let's take this monthly down to the weekly. All right, guys, so on the weekly here, we can see that we had a little bit of a platform here in the bull support power zone, okay, pushed higher, and now we're hovering back in the bull support power zone. So there's actually a important bar here, this one right here, the March 12th range, and that's one of my favorite ways to provide support and resistance. So I teach that, I believe, in session 2 lessons of the 4 zones RSI. So that whole bar and certain measurements in it are important support, okay? So let's finish this out for Jerry, and then we're gonna look at the other charts on just a daily time frame. So daily time frame, this is a lot like the other markets, right? They had a recovery into mid-February, and now they're lower. This one didn't even make its way back to the bear resistance power zone. It's been shy of that. So I still think we're in a room to go lower. Now, market didn't trade today, so we'll see what happens tomorrow, but room to trade lower in SOXL, and I would watch the entire range of this January 28th bar, not just the high, not just the low. Again, in this system, I teach my favorite levels to pull out of that. Does that help you out, Jerry? Does everybody see how in a monthly group coaching setting, you can learn not just from a question you ask, but from something somebody else asks too? Okay, awesome. So I'm gonna take a couple more requests here since they got me on the stage a little late due to some earlier tech issues, and I'm just gonna take a couple more requests here. So let's look at plug here for Steve. Okay, plug power. All right, I'm going to get my bearings by doing a quick monthly, weekly analysis because I don't really know this stock too well. Okay, so it had a very, very many years base, surged higher, pushed lower, and we're back at the bull support power zone on the weekly. This on the monthly. This is a very, very volatile stock, so I'm not going to hold on to that too much. Weekly chart on plug. Look at how beautifully the extreme into the high last year, right? The January 2021 high came up to the bull resistance power zone, just pushed up into those levels and started backing away. Now we're actually in no man's land, that space between the zones. So this is a little bit more of a weaker trend on this weekly time frame, but I see on the weekly chart we have these recovery bars. So let's go take a look at the daily time frame. Very interesting, guys. Do you see this? How we went from this platform of support pushed up into the bull resistance power zone, and there were disconnects here. There were setups that definitely at least warned you to protect your long position before staying out of the way of this down move. On this move down, there were smaller signals, and I bet intraday I could pull out even more to keep you with the downtrend. And now look at where the recovery has gone back to. You can be like, oh yeah, look at all these nice green bars, but where are we hovering? Beneath the bear resistance power zone. So again, not looking so hot for plug. I actually think this is a consolidated recovery pattern in the opposite direction to the trend. And I think we're more likely to have things fall a bit lower. Okay, so let me see. Hey, Jeff, do we have any other ticker requests from YouTube that I can get before I have to hop off? If you guys, I see these.
No, we don't. No? Just some spammers that keep coming back. So nothing, I don't see any requests for symbols in there. But Joseph is saying in YouTube, great presentation and great teaching.
Oh, awesome. Well, thanks, Joseph. Appreciate it. And like I said, you guys, I'm going to come back to my slide here. So some of the questions that we get a lot are, so is this like a 297 per year? Is it 297, no, 297 for life, guys. You get the indicator, which I said is available for MetaStock and other platforms. You get the video tutorials, cheat sheets. You also get any updates I do to it. That may not stay around. Some people charge for updates, but if I make a new version of the indicator, it's just added in. If I decide to reteach the whole class and freshen things up, you get invited for free. So this is a very unique setup here. This is not a subscription or anything like that. So once again, be sure to visit himareddy.com/MetaStock and take action now while this offer is still available. We'll keep it here today for the conference day. So guys, I've given you everything you need, including access to me personally and the best guarantee in the industry for only $297. So remember, every moment you delay can cost you money in the markets. It's time to take action now by signing up, and I'll see you on the inside. And thanks again to Jeff and MetaStock for hosting me. Always great to be here, and I look forward to being back soon.
All right, one last question from YouTube came
Sure.
in just now. Does it work? Charles wants to know if it works on a 5-minute bar.
For sure. So I don't know if he has a ticker chart for me, but I'll just bring over, if nobody has a specific request, I'm going to bring over my baby, as I call it. So I'm going to go to a 5-minute chart of the ES. Ready? So here we are into, let's see, this is the Globex action. The stock market was closed today, so most futures traders, take it as a holiday. But let's look back to last week's ranges here. Do you see how just going off Friday's regular action here? Okay, so let's start with Friday. Here we go. Friday at 9:30 a.m., Friday the 18th. Do you see how it pushed up in and hit the bear resistance power zone? That was super, super helpful. So I'm just going to mark that off here. That was within the context of a downtrend. I see that in combination with one of my GAN signals that I teach in one of my GAN courses. That's a beautiful setup for a push lower. And I was actually trading at that time, and I was able to trade all this move down with a combination of various signals, including momentum readings. Now, I was looking on a 3-minute chart, but a 5-minute chart is very comparable. You can see that the 5-minute chart pushed down into the bear support power zone multiple times. Do you see, whoever has this question on YouTube, I'm so glad you asked, because can you see how, by knowing that that whole bear support power zone is there, even with each one of these bounces, it kept you focused on the downtrend. Then what happened here was a more complex power zones pattern formed before the surge into the end of the day. So that's just one example. That's just from the last full regular trading day of how this absolutely works on a 5-minute chart. And you'll see that in all time frames.
Perfect. Thank you, Hima.
Sure.
Let's see. Jim wanted to know on YouTube also, we'll do one more question. I know we're running late, but Jim wanted to know if you're using the default RSI settings.
So this is all custom. So the whole settings that I'm using are listed in the portal once you sign up, so that you can get help from us in setting up your own software to match if you don't have one of the ones we listed. So all the settings will be listed in there.
Perfect. Perfect. Well, I do want to say, I'm sorry we started you a little bit late. I'm glad that we were able to get through we had a technical issue with you one time, I think. So.
Oh, we did? Oh, no. Okay. Well,
yeah. No, we never did. It didn't happen.
Oh, we did. Not today. Oh, a while ago we did. Oh, yeah.
Oh, yeah. So you've been the victim of that before. Tech happens, right? Thank you so much, Hima. Really appreciate it. HimaReddy.com/MetaStock. It's only $2.97, guys. Give it a go. Thank you, Hima.
All right. Take care, everyone. Have a great rest of your day, and good luck out there.
All right. Thank you. Okay. All right. Let's go ahead and change the presentation up again. I want to say thank you to Oscar for waiting patiently as we kind of get going and that kind of stuff. Sorry that we're a little bit late, Oscar. We had a horrible technical issue, but you're going to be glad that we already had it. So that means we're not going to have it with you.
That's it. I'm quitting. You didn't start me on time, and I'm leaving.
All right. Well, there's no way I'm going to duplicate your presentation. Just no way. So, but let's go ahead and roll right into you. We'll say really quickly, thanks to Stocks and Commodities and CMT Association for sponsoring the event. I do want to introduce my friend Oscar Carboni, who runs a camp. You've got a camp coming right up, right, Oscar?
I do, on the 24th of this month, actually, 24th through the 28th.
Oscar, I would say, is a very entertaining speaker. I love his style. So does Greg, who's not here today with us, but we just think he's absolutely phenomenal with the presentation style, with his instinct around the market, and we love kind of the drawing tools that he uses and all that kind of stuff. So I'm going to leave it right there for you, Oscar. I'm going to let you take it from here. Let me go ahead and get the presentation on you.
Thank you, Jeff.
Let's see here. Make you the presenter. Yes. All right.
All right. And show
me. Oh, you're looking. Did you just get a haircut? You're looking rather, I don't know, sharp today.
Yeah, I fell under a lawnmower and big fight with it, but this is what came out.
yeah. No, you're looking good today. Quite good. I'll get out of the way. Your turn.
Well, thank you. So let me start with, I have to move this camera out of the way because I can't even see my presentation. Hello, kids. All right, traders, good morning, good afternoon, and good evening from across the globe. And to MetaStock, a round of applause. To all the presenters before me, fantastic work. Thank you for being here all day. And thank you, attendees, for waiting for this session. So my analysis might be a little bit different. I promise to not sell you anything at the end of this. I just want to show you where I think markets are going, because that's what I do. And I think that this presentation will help you moving forward, which is what we need. So let's do this. This set of analysis is for both the day trader and the longer term position trader that we're going to go over. No matter which software or trading approach you've decided or chosen to use, you still have to know what trend are we in, right? Is the market going up? Is it going down? How do I use my software? So if you purchased some great software, it's very important to at least know the general trend. That will be the topic of today's presentation. My comment, well, let me start here. I'd like to call this, which is something that you haven't heard from me in a long time, by the way, do not fall in love with the upside. That means I am telling my fans around the world for the last few weeks, do not fall in love with these upside rallies. When the market rallies, you need to sell into it. So that's going to be the theme of this presentation, because that's all I found on the charts this weekend when I prepared this for you. So I don't have a PowerPoint or anything of that nature. I basically look at charts, and I started in 1982 down on the trading pits in the epicenter of where all of this happened. And when I started, there were point and figure charts with pencil and graph paper. Computers didn't even exist. And I've morphed my way through the computer age, and I've revolutionized what technical analysis means. And you'll see that in this presentation. So to my current Omniacs, please humor me for a few moments and await the technical analysis portion of this program. To those who have just met me now, I'd like to show you a little convincing of who I am and what gives me the authority to tell you that after what you see for the next few moments, I am absolutely the authority. I've got enough experience to teach you and show you where these markets should go next. So right after I show you a couple of quick videos just to set up things, how the Omnis worked in the past, we'll forget about the past because you're only as good as your last trade. We're going to move forward and see what we think of how we can make money this week with the information I'm going to give you. So again, Omniacs are going to show a couple of videos. If you already know me, you know what's coming. Please be patient. That'll only take a few moments. If you haven't met me before, you're about to see some of the most amazing acrobatic stunts anyone has ever done with technical analysis. Watch what happens here. I'm going to take you back to 2007. I do YouTube videos starting in 2006 every night to tell people where the market should go the next day. Then I reside in a live trading room to take them through those trades all day, all night, every day, and that's how we survive. Back in 2006, I started doing YouTube videos. The purpose of those videos is to show you what to do tomorrow and to put out my year-end projection in the beginning of the year in each one of these videos. So the beginning of every year, I tell my Omniacs where the S&P should end up at the end of the year. This is 2007. The market hasn't crashed, right? 2008 was the crash. I have been bullish since 2002 in every one of my videos, 5 years straight up, and here's what happens. Please humor me for a moment.
We spoke in yesterday's video about a possible rounded top of this S&P. We had a top, and we put another top in a little bit lower a few days later, and we put another top in that's sort of rounded. If we do not take those tops out tomorrow or the next couple of days, then they're going to push them right back down again. However, if that rounded top gets violated towards the upside and NASDAQ makes new highs, away we go. And if you guys recall, for months on end, I've been saying the 1577 level has been my target since this year began.
Do you know that 1576 was the height of the S&P before the crash? When I was doing those videos, S&P had never been over 1400. I'm calling for new highs, 1576, and that should be the high. It went to 1577, right before the crash started. Right to the date, by the way, that I projected we'd get there. So I was able to successfully identify the high right before the crash within 1 point. That's a fluke. Now, wait a minute. Maybe that was a fluke, right, Oscar? So you got lucky. Everybody gets lucky. Well, once I call the top, I put a projection on that top. I say now S&P cracks all the way to 668. In my videos, way before it ever gets there, and I do these videos every night so that there's no way I can fudge and say I didn't say it. It is what it is, right? And then I back my projection in each video. So here we are. The crash has started to take place, and right at the high that I called, just like that. Some weird fluke? Yeah, probably. But let's see what happens next.
If you all want to make a case, don't start today, because I expect this to be way into the next year. I think as low as 668 in the S&P.
You know what the crash low was? The entire crash of 2007-8 into 2009? 666. I called it within 2 points. That's the Omni strength. All right, so Oscar, you called a fluke trade on the way up. You called the high of the crash. You actually called the low of the crash. You're still just a fluke. What else can you do? Well, let's find out what happens.
668. We can go that low while we're producing what could be that inverted big bottom
It's exactly what happened in 2009, just as we projected. On March 6th of 2009, we hit 666. I called for 668 while we were trading way up at the highs. Just like that, it gets nailed. Well, all right. Second fluke in a row. Third one.
Any of my long-term video plans, when I make these long-term projections, we have not been wrong on our long-term outlook at all since we've started these videos.
Now we're in 2010.
The 561 videos that are out there, and you will see whenever we've made long-term projections, those videos turn out to be absolutely right. My projection for this year in the S&P, and I'm not saying it's going to be a top by any means, and I'm not saying when it's going to get there, but I am going to say this. The bull market is going to take us to the levels of 1290 to 1300 in the S&P. I think that we at least go there, and then we'll see what happens. 1290 to 1300 this year.
Okay, so what happens is the market travels right up to 1290, and within 8 days of the end of the year, it closes at 1290. Bingo. Oscar, how did you get that one right? That's no longer a fluke. How are you doing this? Well, that was 2008, 9, and 10. Times change, markets morph, and Oscar's system probably doesn't still work, right? Well, of course it doesn't. That's what most people would think. So let's take us now to 2015, and let me set this one up for you. I receive an email. Hey, Oscar, would you like to be on television today? And I write back, sure, what's the topic? And they write back to me, the topic is crude oil. What do you think? And I write back, I think crude is going down. Enter. No interview. It's over. They write back, no, Oscar, you no interview today. The person I see being interviewed that day doesn't seem to know as much as me. How did he get the interview? So this was a Monday. On Wednesday, I get another email. Hey, Oscar, would you like to be on TV today? And I write, sure. What's the topic? They write back, once again, it's crude. And I write back in an email, interesting. I think it's going down. And they write back, well, no interview for you, Oscar. All right, what am I doing wrong? So it's still the same week. And on a Friday morning, just on Thursday night now, I put out a YouTube video to tell my fans that crude oil is going down. And I show them a chart and a reason why crude's going to go lower. It's trading at $103 a barrel. And everyone's calling for 145. And my work says it's going down, way down. So I get an email on a Friday morning. Hey, Oscar, do you want to be on TV today? And I write, sure. What's the topic? And Melissa Francis writes back, the topic is crude. What do you think? This time I'm thinking. And I write back, I don't know. What do you think? Enter. They write back, we think it's going up. And I write back, what do you know? So do I. Enter. I just did a video last night to talk about the downside. I am not going to get on TV and talk about the upside. I get an immediate return. Oh, Oscar, you get the interview today. Oh, interesting. I'm going to call for the upside. I get the interview. Now, you know me better. I'm not going to go on TV and talk about the upside, but it got me the interview. So half an hour later, there's a black car waiting for me outside because I said crude's going up. I happen to agree with the TV station. Once again, I just did a video last night to tell my fans crude's going down, so there's no way I'm going to get on national television and lie. And here's what happens.
Oil prices isn't a huge surprise to some. One gets predicted it right here on Money 2 years ago.
For perspective, in 1998, crude was only $9.91 a barrel. In 2001, crude was $14.59 a barrel. Then you move us out to 2009.
Commercial. Sorry, kids. Is what it is.
Crude was only $35 a barrel just in 2009. So that tells us at the rate we're moving, we should have crude oil back down under $40 a barrel by mid-2015.
I don't know about that. You had me until you said 40.
Now, here's what really happens. As soon as I talk about the downside, she loses her mind, gets up and says, get him off my set, go to commercial. He's a nut. He's calling for $40 crude. I was supposed to talk about the upside, right? So I said, Melissa, I am giving you a projection, not a prediction. Crude will trade $45. You'll see. And she throws me off the set. Okay, a year and a half passes. Right to 2015, just like I promised her in this interview, that crude would hit $45. And it does. Smack. From 103 down to $45 a barrel. And I get a phone call. Hey, Oscar, how did you know? And I said, well, how did I know? Because I use charts like I always do. You invite me. If you're inviting me back on, you apologize first. And I'll come back on and explain how I did it. And this is what happened. She actually doesn't apologize. She does kind of apologize. But she claims that I called her, was tweeting her, and said, I made this call. But what happened was the studio called me and said, Oscar, you were the only one who figured this out. How did you know? Here's my second interview.
Look who's right now. Joining me now, Oscar Carboni, president of Omni Trading Academy. So, Oscar, I got to say, I love you. You're like tweeting at me the last couple of days saying, I was on your show and I predicted this was going to happen.
That's
so
not
I
true.
said, that can't possibly be true. We went back and we looked at the tape, and of course, we found it. You saw it. You said it was going under 40 by mid 2015. We're pretty darn close. When do you think we go under 40 here?
I think it will continue to move lower. I think you'll actually see the price of 30, 35, and then 30 might be a floor. And it appears that they will not stop pushing the price of crude down right now. As you know, I made that projection for you. I use technical analysis always when I start a projection. Everything starts there. In fact, I spend about 20 hours a day in a live chat room on a camera and microphone doing analysis every day. So I've got so many logged hours, more than anyone, and here's what I did. I found the technical picture, and then I always go out and look for a fundamental reason why to prove out my technical picture.
Well, so what was your fundamental? Yeah, what was your fundamental reason?
Well, what I did was I seen the price was going to come down on the chart, so I took the price of crude over 15 years, the price of the stock market, and the price of the dollar, crude relative to those two. And then I looked at how much crude production was being made, shale. I added it all together and extrapolated $40, which matched my technical projection. And then I came on the show to tell you about it and got thrown off.
You know, I'm floored because I started covering crude oil in 2003. So I've seen it make this big sweep, and I'm surprised to see it back where it is. So you think it's going to go
Okay. That was 2015. So, Oscar, you were pretty good in 2008, 9, 10, and 15. The Omni's working there too. But, you know, the markets have changed. There's been COVID, and now we've got Russia and all the nonsense news. What have you done for us lately? Well, an interesting video. I was bullish all the way through this year, 2021, all the way until December 31st, and then I had a week to do my homework. So I did my homework and came out to explain to my Omniacs who follow me from around the world on YouTube what should happen next. This video was filmed on January 4th, which was my first trading day back after doing a week's worth of analysis in between Christmas and New Year's, January 4th. And here's a video. And in this video, I want you to listen to the next few minutes because it is me explaining to everyone the first couple of days of January what happens now, what comes next. Me, the most bullish guy in the world for the last 10 years. What comes next is this. And after this explanation, we'll go look at some charts. We've got a lot of work ahead of us, traders. What I think will happen here, and I'll show you some charts in a moment, is this. Not what I think will happen. This is the inherent relationship between markets, real estate, and interest rates. Commercial, sorry, kids.
How exploiting IRS code 408M3 can pay.
Sorry about that. They're getting ready to raise rates in the next 3 months. The market is noticing already that bonds are tanking. When bonds go down, interest rates go up. Whether you know it or not, we do not need the Fed to raise or lower rates. Traders can move the bond price and make rates move. Now, the Fed's been buying bonds forever to keep the price of bonds up, keeping rates down, and traders had no chance of fighting against the Fed. Well, the Fed is backing off on their bond buying, eventually stopping the bond buying, and then maybe raising rates, which makes bonds go lower. Now, if the street, the banks, all the traders in the world decide to just sell bonds, the rate will go up automatically, whether or not Jerome Powell flips the trigger or not. That's how this works. If bonds go down in price, the bond futures interest rates go up. Now, of course, the Fed raises and lowers rates, and how they keep them in check is by either buying bonds or selling bonds to make sure the Fed rate doesn't move too much. But if they're not buying bonds which means they're not selling them, but they're no longer buying as many. If the street sells or then the Fed's buying, bonds will go down, rates will go up, and I'll show you some charts to prove that. Now, if you are buying real estate, here's good news. Rates are really cheap. If they raise rates, it doesn't matter. They're going up a teeny bit. It means nothing to you except for this. It will be, and we'll discuss this again when they get closer to raising rates. When they go to raise rates, this is called the get off the couch segment of interest rate movement. That is any company or any individuals, let's forget companies, individuals, you and your wife, husband, whoever, you're sitting there on the couch and you decided we should buy a house, interest rates haven't moved in so long, that's not a worry. The price of the house fluctuates a bit, we can kind of afford it, but there's no urgency to go out and get it. And then suddenly you hear that they're going to raise rates. What do? You get off the couch and you go buy that house before they raise rates and your mortgage goes up. Now let's go to companies. Big corporation, they're looking at buying a big property. If the rate moves a little, the rate moves a lot. So if they are going to raise rates, it buoys real estate. It makes it go up. Well, at the same time, it makes the stock market have to adjust down in price. Why would that be? If the stock market's made up of corporations, big, huge ones, those corporations sell forward corporate bonds, monthly bonds, quarterly bonds. So you give money to a big company, Goldman Sachs. They use that money for a month to pay their monthly overhead, run their business, and they promise you X amount of interest and return at the end of the month. Those are monthly bonds. Those are how corporate bonds are sold. If at the end of the month of the quarter they owe you 5% interest, great, you get your 5% interest. That's why you would buy a corporate bond instead of a U.S. bond that has low interest. Well, if U.S. bond interest goes up, the 10-year, 30-year, the interest that you get if you buy a bond goes up, well, these companies then have to offer more interest for their corporate bonds. That means they're paying more money for the same amount of money, which means their stock feels it in price and must adjust. In layman's terms, I hope I didn't confuse you, but that's what will happen. When they start to raise rates, real estate will go up because they don't give it a boost, and the stock market will have to adjust down a little bit. So that will come in the future. We'll discuss it again. Get ready for that long-term. Short-term, very mixed signals. We're going to go after some other markets. I want to show you some charts right now to sum up what I just spoke about. Remember this. Keep your emotions out of trading and say this to yourselves every morning, every afternoon, every evening. Then we'll look at some charts right after this. And you know what that is. Stop, so in. Emotions are Let's go look at some charts. This is to show you that I am well capable of calling these markets correctly. You know, there are a lot of people with a lot of systems, and those systems, you have to have the market running and the chart is moving. And if this says that, and the RSI, forget about all of that. There's a much better way to get to the bottom of this. So let's go to work. In fact, let's go to work. I want this time off. Let's go to work together, kids. Check this out. You know when I filmed that last video that you just seen? Right here at the high. The absolute high of the market, I came out and said it is time for us to adjust. Just like I did in 2008, like I did in 2009, like I did in 10, like I did in 2015. And whether you cats know it or not, I didn't even include this video. We called the absolute low in COVID right when it hit, right there when everyone was calling for the end of the world. Ask any of my Omniacs. Did Oscar call the low in COVID? Yes, we did. Because my Omni, Oscar's market navigational indicator, called the low, not me. Now let's go to work. Do not fall in love with the upside. Why? This is your E-mini S&P daily bar chart. From the day of that video, we started adjusting lower because it has to be that way. If you're going to raise rates, stocks have to adjust in price. They'll go back up. That's why we're not going to fall in love with the market. We're not going to fall in love with the upside yet. We need some more adjusting, and let me show you what's going on. So right after that video, the market did start to crack, but take a look at how Wall Street works. These are algorithms. These are anything that you want to call them. Look at how this 100-day moving average, simple as can be, When the market lands on it or gets above it, Wall Street comes in and buys. It hits it again, they come in and buy. In fact, let me make this ellipse a little bigger so I've got a little tool to show this to you with. All right, so here we go. And then it rallies again and boom, it hits once again on the 100 like it was magic. Back up we go. Boom, we hit the high, and I do that video right after the new year begins and the adjustment starts to happen. So now that we've got an adjustment happening, we go down and what do? Once again, we hit that same crazy spot. Why would we keep hitting that same average and bouncing? Because Wall Street is using this as their latest algorithm. They have grabbed onto the 100 ball moving average, and every time it hits, it rallies. But then look what happens next. We get under the 100, right? Okay. Market cracks under the 100, gets to the 200 ball moving average, which another average that Wall Street absolutely loves. And I only like to use the averages that are widely used on Wall Street, because we want the crowd getting in where we get in and getting out where we get out. So why not use the crowd mentality, right? So the crowd loves the 100 and the 200 ball moving average. And if that's what the Wall Street crowd loves, so do I. So it starts to play Tetris, right? Or breakout. It goes from the 200 up to the 100. Down, back down to the two. I'm sorry, this thing's giving me trouble moving around here. Back down to the 200. And then it goes up to the 100. It goes back to the 100 like Tetris, right? It's trying to break out. Gets under the 200, back above, and then finally the crack comes. This is bad juju, kids. Moving forward, which is all this video is about today, this presentation, is what should happen moving forward. That does not look good to me. Everything I've ever learned about markets, that needs more corrective time. So moving forward this week, you should be looking to continue to sell rallies. Now, Wall Street knows we just broke the 200 ball moving average. They are not blind. Their algorithms know. And in fact, this analysis was done on Friday after the close. I'll bet we can now refresh and see, oh, it didn't update. I assumed we get an update today for the half day that we had on Monday. But looking at the markets, the half day that we had on Monday was a lot lower, kids. We cracked pretty hard during today, President's Day, where we were closed. But if you ask me, the bar looks like this because the market was open for a little while. So it is continuing lower, just as this analysis projects it should. Now remember, I make projections based on solid, secure, trusted over the years technical analysis, not based on the news. I don't care what Putin's doing. I don't care what China's doing. In fact, the only time I read the newspapers, I plow through the newspapers on the weekends, stacks of them, only on weekends. During the week, I do not listen to the news. If I do, it's background noise, but I don't hear it. I don't pay attention to it. And I will not read these papers during the day because you have to realize markets are moving. Things are taking place. The fire hose of information being shot at us that we need to disseminate of news and internet and everything else is too much information. And when these reporters need to get the news out by 5 p.m., they don't have time to disseminate anything. They rush it out so quick, the stuff during the week couldn't possibly make much sense. So I don't even bother looking at news. And if I do, it's only on weekends because the charts are a visual look at all the news, at traders' reaction to the news, at governmental reports, when companies are going to produce their quarterly reports. If the CEO, let's take Elon Musk, if he gets caught smoking pot on camera like he's done and the stock goes down, all of that is included in this graph you're looking at. The difference is no human emotions. Nobody on this graph owes palimony, alimony, child support, or a BMW payment. A graph takes in all the news, takes in all the fundamental information, and has zero emotions. If you can read a graph, you can tell where this market's going to go almost every day. So this market tells me we are going lower on Monday, Tuesday. We'll find out one day at a time, as I like to day trade. But this is an overall picture. This market's got lower to go, kids. That's your E-mini S&P. Let's go look at another chart. Now we're going to take the NASDAQ. If you ask me, this is nothing but more bad juju when I look at it. What does that mean? Well, once again, that wonderful algorithm, or whatever you'd like to call it, Wall Street picking up on this time the 150 ball moving average, because that's their darling. You know, I don't look to reinvent the wheel, nor do I look to reinvent a new system. I like to use the stuff Wall Street uses. Why? It's where I grew up. I know it works. So the 150 average happens to be the darling for NASDAQ. What's the market do? It comes all the way down to that 150 average, hits it, and explodes. Comes back to it, gets under for one day, rallies, and then breaks. Okay, not good there. Breaks the 200 ball moving average, and that is, if you ask me, that's the line in the sand for Wall Street. They think the 200 ball moving average is the best thing that's ever been invented. And if that's what Wall Street thinks, that's what Oscar thinks. So right here, you break it, and now what happens? You get back up to it and cannot get above. Ugly. Comes down, gets back to it again, can't get above, and then the crack ensues. Bam. Now we're in a danger zone right here. Why? This red circle with the X is the symbol for a stop loss order. How Wall Street works is there will be tons and tons of stop loss orders building up below the previous low, which means we're going, kids. This market's going to go down and take out the work or the stops beneath the previous low. Another reason, barring if you don't realize that the 150 was cracked and then the 200 was cracked and then Wall Street went go from buying to selling, and now they're selling, and this will continue lower for now. Now we're day traders, and some days we will rally, but that's why we will not fall in love with the upside when it rallies. So that's your NASDAQ. Let's go take a look at another chart. Now, here's where it starts to get a little bit loopy. Not only is this very same chart that you just seen, the NASDAQ, I toned down these two averages here so they're not in your face, so to speak. The NASDAQ daily bar actually has a massive head and shoulders formation. Now, when it comes to a head and shoulders formation or any formation in technical analysis, it does not have to calculate correctly. It does not have to exactly match. It just has to visually look like something close, and that's it. It's an art, not an exact science, right? So this looks like a left shoulder, a head, and a right shoulder, which is shoulder, head, shoulder, right? It simply looks, kind of resembles a human. That pattern is supposed to make the market go lower. And that's why I've got these red arrows here, because I expect that next. And there's absolute calculations that you can do from the head and shoulders to tell you exactly where it's going to go next. But I'm not here to do that for you right now. I'm not here to show you anything that you need to purchase or learn. I just want to show you where these markets are going next. So if you did purchase any of this software today, you can use it in the proper trend. So that's your NASDAQ, same chart as this, the one we just looked at, but this one shows an absolute head and shoulders, and anyone that is good at technical analysis would recognize not only is it a head and shoulders, the street recognizes what it is. They, of course, will tabulate it and calculate it and put it into tabular form where it's not looking like charts, but Wall Street is taking the high and low from every day and the settlement and using it in the same way we do. I'm just using the visual because who needs to play all these games? You know, Wall Street does everything in their power to make it seem difficult for us because they want us to give the money to them so that they are managing our money. But I kid you not, all the jargon that they use and the EBITDA, and you have to know percentage returns and what's the float. It's all nonsense. It's fluff so that we get scared and we don't trade ourselves. But I am telling you, people have been watching me do this since 1994. And look, before that, in 1982, I started, well, in 1984, I started a technical analysis service on the commodities exchange in the gold and silver pits, and people from all over the country were tuning in. Back then, when I was a kid at this, I've gotten much better since I was a kid. So here's your head and shoulders, and that should make NASDAQ go lower. All right, well, that's a theory, you think, right? But I don't theorize ever. Everything I do is based on pure facts and technical analysis. Well, we go out to the Dow Jones Industrial Average. Now, that is the market, right? The Dow Jones Industrial Average, that's it. In fact, the market is named after Charles Dow. So if it's the Dow Jones Industrial Average, you got to believe it's the big one, right? Well, it is. So a left shoulder, which doesn't have to look symmetrical like the right shoulder. It just has to somehow resemble some kind of a shoulder. I've got a left shoulder ahead of right shoulder. The Dow Jones agrees. It is a massive head and shoulders. We are going to move lower, and look at where it had trouble. Right there, when it finally breaks the 200 ball moving average, you'll see that's when the street says, uh-oh, this is no good anymore. Why? Because here it held. And when it dipped again, here it held. And when it dipped again here, it broke, but got back above, right? Gave Wall Street a little bit of hope. That's no good. Now we are below it, finishing off a right shoulder of a head and shoulders formation that should project lower. Remember, head and shoulders are supposed to end up going lower. That's supposed to be what happens after they finally are completed. All right, so let's find out if that is what happens. Traders, in fact, you know what? Before I even show this to you, let me just see if the transportation average is in there, because I think it is. Let's go to that one first. Look, Dow Jones transportation average. Now, this average morphs a little bit. This one's a 90, whatever. It's not the 100. It's not the 150. The street loves the 90 on the Dow Jones transportation average. Good information if you want to use it. Look how well the 90 bar average works. I mean, it's like a magnet. It hits. If it gets under, they're sellers. Boom, 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 boom. Right? That's it. If it gets above, Wall Street buys it. That's it. I mean, it is as simple as the day is long to figure out Wall Street algorithms. You just have to know what they're looking at, and it's easy to find. Once again, that's not the purpose of this. I just want you to see what's been going on and where we're heading to. So what happens in the transportation average? You have a capitulation day. This is the day that I knew to start looking for at the top. Not in the futures indices, because they're futures, they move a little further. When I seen this happen in the transportation average, that in my 40 years of doing this, that means markets have changed complexion. That capitulation day, I put that right there, that note that says capitulation day right after we got there. I said, that I know is capitulation. I've been doing this long enough. And since then, we've been dropping and I've been mapping it out. So now we're in a bearish channel, as you can see with these red lines. We're stuck in between the channel with the exception of that 1 week of popping out. Below the 90-day average, but look what's happened since. Now it's starting to get serious because the Dalal, the 200 ball moving average, has also been pierced. That is the Dalal. As you can see, they love buying it when you get above that green line. But look where it is now. And that is the absolute beloved line in the sand, 200-day MA. They love it. I promise you Wall Street loves it. I grew up there. I don't have to guess at this stuff. You know what I'm saying? This is what happens. So Wall Street absolutely loves this average. And when I see it get below, I know that they're paying attention. So now that we're below the 200 in the transportation average, you have seen the S&P look terrible. The Dow look terrible. Head and shoulders, transportation average in front of your eyes with capitulation top, a bearish channel below major averages, and then there is this. Look at the Russell. Does the head and shoulders formation work? Well, let's get this flagpole out of the way for a moment. Look what happened when we came out of the right shoulder. It all began here with the Russell. Russell broke the 200 ball moving average weeks before anyone else got near it. Any S&P, NASDAQ, S&P, NASDAQ, Dow. As the 200 was broken by Russell first, the market immediately started to crack, finished off the right shoulder, broke out to the downside, just as I'm telling you S&P and NASDAQ has to do, and created what I like to now call a bear flag, which is this next combination or formation. So now we've got what's called the bear flag, and that will lead to these arrows as well. The head and shoulders works. The leader who started it all, Russell, has already proven that this voodoo works. Traders, these are projections, not predictions. Predictions are for crazy people. I make projections. I know how to calculate. I do the calculations, and I put them in my videos for you cats. So here is where we're going. That is a bear flag. I can absolutely calculate how far down that the bear flag will take us. But there is this. You could get anything that makes the market go up for a few days, right? So let's make it look like it went up for a few days. You might get bars that take the market back higher again. And what I'm telling you is if that happens, do not fall in love with the upside. That would simply mean the flag expanded. You will sell it towards the high of that flag, and then expect if it hits up there to come right back down again. That is what I would expect. So we are selling rallies, and we would expect this kind of action even if Russell rallies. As day traders, we'd expect if it rallies, it's in a bear flag. Bear flags have room for play, but they generally tell you market goes lower. So there's a lot of proof that I have found getting prepared for this webinar for you guys today, guys and gals, that tell me these markets do not look very good. You know, and I trade every day, and so do you, so we need this information. Now, what would make a market get beat up? Well, you can't have the price of crude going up like this. I mean, look at this. It's ridiculous. You can't have the price of crude going up in this fashion without it putting pressure on stocks. Now, it's almost $100 a barrel. It got to $94 or $96 a barrel today. That is going to put pressure on our markets. So the difference is crude going up puts pressure on our markets. Well, take a look. This is the absolute opposite look from S&P, NASDAQ, Russell, Dow, Tranny. Why? Because all you do is hold above the 100 almost every time you hold it. We hold it again. You break it once. You hold it again. Boom. Comes down, breaks it again, then gets back above and takes off. Meanwhile, the whole thing's in one big bullish channel. The blue line's on the outside. You're above the 200, it almost never even gets to it, and it just keeps riding above the 100 and exploding. So if something that puts pressure on stocks, if it goes up, looks so much better on the chart than the stocks themselves, this is all making sense, right? It's all one big picture. All the markets are interrelated. So let's go once again. Let's see, we looked at crude. Yes, that would absolutely make a stock market want to go down. What else would? Gold. Now, I will tell you this because I know I grew up in the gold pit, 18 years old, smack as a kid, signed out of college in day courses, took night courses, went to the New York Institute of Finance and stood in that gold pit since I'm a child. And I am telling you that gold tends to go up when the stock market is going down. And look what gold has been doing lately. Once again, like crude, opposite of indices, you only see two red arrows on the 200 ball moving average where it pierced it from above to below. Everything else is hold, green, hold, green, hold, green, hold, green above the 200, and then the explosion starts. Now look at what we're in. Now you're in this, right? Now you're in this channel. Gold should move higher. If it'll update me, let's see what it did today. No update. I think gold today ran up about this high today. I think your gold bar looks to be about this big as of today. The analysis I'm putting forth in front of you happened and was finished on Friday's trading. I'm showing you what should happen. Had I been able to give this video to you on Sunday, you could have used this information already today. But I'll give it to you on Monday because that's when MetaStock called me out to show you it's useful this week. Gold should continue higher even if you've got to buy the dips. So when gold tends to go up when the stock market goes down. Let's see what else is out there. Now, we hear about inflation every day. You hear it on television, you hear it on the internet, you see it in the news, everyone's talking about it. And you only feel it if you go to the pump as an American. Do you know why? Yes, we feel it at the pump, but almost everything else, tell me if you've really felt inflation in the other products in your life, except for at the pump where it's really gotten expensive. And here's why. We see it, we hear about it, but we do not feel inflation, barring at the pump when you're getting gas, as much as the rest of the world feels it, because the dollar is rallying, keeping pace with, in some ways, inflation. Now, it's not exactly keeping pace, tick for tick, but imagine being in another currency. We've got inflation going through the roof and our currency dropping, making it these currencies we can buy less food with every day and food keeps going up. That's serious inflation, right? Well, that's happening around the rest of the world. Our dollar is going up. When the dollar is going up, it's actually helping us pad the inflation. There's only one country on the planet that their currency's been going up steadily lately, and it's ours. Well, maybe there's a couple of others, but nothing major. Now, the thing about that is most currencies are priced in US dollars, like a teeter totter or a seesaw. So if you put dollars here and other currencies there, if dollars go up, those other currencies go down. Imagine if our currency was going down during this inflation. Oh my God. But that's not what's happening. And in fact, look at this fantastic hold that the dollar has been doing above the 100 bar moving average, which once again, we know Wall Street loves it. That's why I use it. So look at this. The dollar has been saying, yes, there's been inflation, kids, but I'll help you. I'll go up. While we have inflation, I'll keep bouncing off the 100 bar moving average and off the bottom trend line, and I'll try to stay pace with inflation so that Americans don't feel it as much as everyone else does. And that is what's going on right now. If our dollar starts to head lower, we are going to feel inflation like that. But we have been blessed during this portion of the inflationary cycle because just about as long as we've seen the inflation get heated up, our dollar has been padding that for us. Thank you, sir, upstairs. Good thing to be an American right now. All right, so now we've got that done. It's always a good idea to be an American, but even better right now. So let's see what else. Here's where a lot of this, all comes together. What's making this happen is what I explained in that third video a few moments ago. This is the 30-year bond market. This is what Jerome Powell and the Fed uses to move our interest rates. Picture this to be a teeter-totter, a seesaw in a park. So you're out in a park right now, right? And we decide to get on this teeter-totter. And your name is interest rates, and my name is bonds. If I get on that teeter-totter with you, I'm heavier than you. Bonds go down, interest rates go up, right? That is the way this works. It's the inherent relationship. Jerome Powell doesn't have to do a thing to raise interest rates. If bond futures go lower, the interest rates will go higher. So bonds have been in a tailspin drop. Look at the size of this channel, this red channel that we're in. And then, of course, you had the 100 and 200 bar moving averages. They crossed, which is sort of called the golden cross type. It's not quite the 100, 200, but it's like the golden cross. And that was good. And the markets did go up a little bit right here. But they hit the top of the channel. And that was the end of that. And now it's gone bad. Look at that. Now the 100 is below the 200. That's really not good. That means the market will continue lower. And look at the channel bonds are in now. Check this out. Now bonds have steepened their channel. And they are absolutely starting to move much lower. See, now they're in the red channel going this way, where they were in this bigger channel moving downwards, but not as quickly. Now we are in acceleration mode. So corporate bonds, the added costs, the higher interest and inflation that they're paying forces their stock prices to have to adjust. So that's what's going on right now, traders. That's why the stock market is dropping. So let me see if there's any other charts I wanted to present to you. Oh, yeah. Okay. A little bit scary. Not even crypto is immune, kids. Maybe we could hide in crypto, right? Where are we supposed to hide? Well, not even crypto is immune. Crypto, because Wall Street has a futures Ethereum market and a futures Bitcoin market, they have adapted the 200 bar moving average to it, just like you'd expect them to do, because it's simple-minded and it works, and it's built into all of their trading programs. So you've got the 200 MA. Let me show that to you. That's the teal one right here. All right. I don't want to waste time making this teal, but pretend that 200 MA is teal color. Look, it held here. Let's see if it held in the background too. All right. So it starts here, gets close and holds. Nice hold, big rally. Right. Nice, big. Gets underneath it. Uh-oh, not good. Comes down, tries to get above it, and now we are in trouble. So Ethereum's not immune, and then watch this. You want to get scared? This is also what's in Ethereum. Very easy to see if you know what to look for. Check this out. Gets scary right away when I do this. Now, this is hardcore technical analysis, but I have to tell you, traders, what you're witnessing is it's my pre-kindergarten 101 baby food technical analysis studies that I could literally do when the pre-kindergarten teacher hands us out the cot and the milk. This is the analysis I could do when I'm laying down in my sleep. You guys have no idea what my Omni is. That's a set of analysis that would just spin you. You wouldn't know what to do with it, not knowing it. If I showed it to you, it'd make your toupee spin, whether you wear one or not. It's so intricate. It's so much better than what I'm showing you now. It tells you exactly where to get in, exactly where to get out, where to put your stops. I mean, it is fantastic. But that's the Omni. And I'm not showing the Omni to anybody on television or on YouTube or on the internet. I don't box it up. I don't send it out. I don't mass produce it. I would never. It works so well. Why would I ever want too many people to have my Omni? So I'm just showing you my 101 analysis, my baby food analysis. You can learn much more from me than this here in Las Vegas Live, but this is good for now. Let's see what else is out there. So we see Ethereum, watch Bitcoin. You can't hide Bitcoin any of the kids. That's just as ugly as everything else. It's got a massive head and shoulders. The whole thing's built. The two shoulders are built below the 200 ball moving average. Right? I mean, this just doesn't look good. Now, I'm loaded up with Bitcoin. It's the last thing I want to tell you about right now. But I've got a 5-year target. I've got no choice but to go like this and sit on my Bitcoin. In 4 years and 3 months, we'll decide whether my 85,000 target in Bitcoin is right or not. I don't expect it to be wrong. If you guys have been following me long enough, you remember when Bitcoin was trading at 12,000, I made a target of 32,000. It gave you an exact date, and right to the date, January 1st of that year, we exploded from 21,000 and hit my mark. I know I'm going to get this one right too, but I've got to suffer on the downside for a while. I'm not allowed to do anything about it. I can't manage the position. It is long term. I've got to wait 4 years and 3 more months. So you can't hide in Bitcoin either. Don't join me. And then that brings us back to this. Let's go here. Don't fall in love with the upside, kids. It is absolute. I am telling you, I am very, very good at this. This is such baby food analysis. I'm showing it to you. I'm proving it out to you with the simplest form of analysis. The more complicated analysis makes it even more thorough. So here's what I will tell you. I don't have anything I want to sell you at all, but being that you've sat with me and put up with my nonsense for this hour, I would like to give you, my trading room. Let me give you the address of my trading room. It's absolutely free and no credit cards are required. No nonsense, no anything. You would simply go to, and I may have it up right here. You would simply go to livewithoscar.com. You would either click login or register. If you do, you will get, 3 or 4 questions. There's almost nothing to do. Let me see if I can hit the sign up. If it knows I'm logged in, it might just log me in. So basically you'd sign up here, you'd end up here. Now you can see the Omni trades I'm putting out, and I'm not going to try to explain all this to you and bore you, but I put out trading recommendations, but here's where I want you to go. I want you to log into Live with Oscar and go to the chat room. You're going to click Omni Chat. A chat page is going to come up, and you literally can just meet me in my free live trading room. That's all I would like for you to do. If you want to write to me, here's my email address. Now, I do actually have the Omni method, which I wouldn't dare show anybody, nor would I box it up. Not online anyway. I do have Omni camps. I only host them 3 to 4 times a year. They are extremely exclusive. It is a 4-day exclusive event, 5 nights, 4 days, happens here in Las Vegas. But here's the thing about it. It's very exclusive. The most students I've ever had were 6. I only do this 3 or 4 times a year. I absolutely hand choose the students out of all the apps I get, and I will only teach this to a few of you. Not what you've just seen, by the way. The Omni is much more intricate. The Omni pinpoints exactly where to place your stop, exactly where to get in, either long or short, and exactly where to place your profits. The beauty of the Omni is you do it before the market ever opens. You plan a trade, and you trade that plan. You never look at a live chart during the day ever, because I think that scares people, and it makes you make more decisions. When you're in a trade and you're looking at a live chart, it makes your fingers start to come to life, and they hit those keyboards, and then that's always a problem, right? So the Omni method I teach, you don't do anything at all except for do your analysis, put the charts away, place your orders, and wait for the next day and do it again. That's a completely different course that would happen in Las Vegas. But here's what I will tell you. I will offer you a 2-week free trial to my platinum recommendations. They are my Omni, Oscar's Market Navigational Indicator. They are my Omni recommendations. I used to trade my own account. Because you sat with me this long, I will give you a 2-week free trial, but I'm actually hosting an Omni camp starting this week. So I'll give you a 3-week free trial, just in case you don't see so much of me in the first week, and then you'll see my Omni action for the next 2 weeks. So that's about it. It won't cost you a dime. If you'd actually like to join me in Vegas, you can just fill out an application, and an Omni Bootcamp application. I cannot promise you I would approve you, though. It's up to me whether or not you're coming to my home office for 4 days, and not a lot of people get to do that. But that would be OmniCamp. Where I can help you is in my live trading room. It is open 24 hours a day. I'm there. No credit cards, no nonsense. Just come join me. That's this one right here, and I'll see if I could help you out. That is my presentation, traders. I hope this helps you moving forward, and I hope I've shown you a little bit of how to read these charts so that you know how to place, or at least you know the mentality of what should come in the next few weeks ahead of us. Jeff, I will now give you back the time if you'd like to have it.
Okay, thank you, Oscar. Good job. We had some great comments. Jim Valentine said this was great. I love it. Jeffrey Edney, who has a really good first name at least, wanted to say that he did the trial, and what did he say? It's well worth the trial. So
well, imagine that.
A lot of really good comments.
Jeff, the check for the advertising in the mail, I promise.
All right. We did have an interesting request that I was hoping that you could maybe accommodate.
What do you got?
Jim in YouTube wants to know. Let me see if I could. Let me find it again real quick. I thought this would be really, really cool. He wanted to know if you could show the hand signals for selling the 500 ES at the market.
So if I were doing that, the hand signal for 5 is kind of easy. It's 5. So you could do 8. Let's say it was 800. 800. You can do it like that, my friends. You gotta. Now, Chicago had different signals than we did in New York City for whatever reason, but that would be an 8. Flip your hand backwards, 4. This is 4 or 40, right? It's 8 or 80.
Awesome.
But what I used to literally do is I wouldn't let my clerks who worked for me were not allowed to use hand signals. They had to run the order to me silently, because when you use a hand signal, someone else around the pit knows what you're about to do. So I would never let the clerks who worked for me were told no hand signals. Give me the order silently.
Jeff did say he signed up after his trial too. So Jeff Edney, you can look for him as his records.
Jeff, I'll kick butt for you. Stay with me and don't hesitate when those trades come out.
Charles says, I live in a communist country called Canada, and I can't travel to the US yet. So you'll have to look for the next one, Charles.
From what I understand, Charles, if you and your neighbors hold hands and sing, you'll be arrested in Canada. So I don't know what to tell you about that place. It used to be free. I'm not sure
TPC says, is there a reason you use a moving average instead of an exponential moving average? I think I know the answer to this.
Yeah, the simple moving average seems to be more widely used on Wall Street algorithms and programs. The EMA, the exponential, I like it, but it shifts away from the action a little bit for my liking. So I go with the simple. And besides, there are other averages that we all know. But if you're going to come up with an average like the 129.2872 to the 6 power average, and no one else on Wall Street's using it, you're putting yourself in a box where you don't belong. Try to use the mainstream indicators, because that's what Wall Street's using.
All right, here's another question. Hey, Oscar, great presentation. I'm an Omniac. Ian is his name. And I went to camp. I just wanted to ask how to determine when the breakout of the moving average is confirmed. Do you wait for a number of sessions above or below the MA?
Great question. And I know who Ian is. Hi, Ian. Nice to speak to you again, my brother. What a great guy Ian is. He was out in my Omni camp. Right here, you must wait for 3 full settlements above. See how there were only 2 and then it cracked? So if you want it to be above, it has to be 3 settlements above, or if you're expecting it to go below, you want to wait for at least 3 settlements below, which you don't get. If you notice, you get 2 and then it runs back up. The third day settlements above the blue line, right? So look for 3 closed daily bars above or below your average, and that's usually the signal that you can then plow in.
This question has been asked. This is the last one, I promise. I appreciate all of your generosity with your time. William wants to know, do you have a price target for the end of the year? And I think I saw that one for the S&P. I saw that one in YouTube as well.
All right. Are you ready? There it is. That's it. You can't see it any further. I haven't released it yet, but it's right here in my hand. I always have it done in January, but I try not to release it until right around now, the end of Feb, beginning of March, because usually the market's in a completely different place from my projection, and they tell me I'm crazy, and I like it that way. So I'm going to wait until we go even further in a tailspin, and then I'll present you with my projections.
Well, maybe so somebody can get that when you release it. They should subscribe to your YouTube channel.
Absolutely. YouTube channel is absolutely free. It's youtube.com. In fact, let me just type it out for you in case you don't know where to go. youtube.com/futures analysts. And they give you a little background on that so you can actually read it. And if you want, just sign up there. Of course, YouTube's free as well. Almost everything I do, traders, is free to help people around the world. So come join me and see if I can help you get through your day every day.
Absolutely. Thank you, Oscar. I think I really appreciate it. As always, another great presentation. We love having you on here. You do such a good job with things. And
thanks for having me, everyone. Thanks for tuning in and putting up with my madness. But if you read between the lines, I've got some good information in this video for you. So make sure that you rewatch it if you need to understand what it is that I was trying to shape for you. I was able to do it in the past many times. I'm able to do it all the time. I want to show you that you can believe in this, and it will go in that direction.
All right. Very good, Oscar. Thank you very much. Always.
Thank you for having me.
All right. Okay. Let me go ahead and do this, and we'll just wrap up today. So let me go ahead and turn on my microphone, push the buttons that need to be pushed. We had some questions while I'm kind of getting things ready about kind of the recording and that kind of stuff. We will be making a recording available. If you're watching on YouTube, the recording, and just back up to wherever you want to see, and you'll be able to see it. If you are joining us from GoToWebinar, I've actually already programmed it in, so within an hour of us hitting the end broadcast button, you'll get a link to the recording. So I do want to say, actually, I do want to ask a question. If you've been here since we started this morning, go ahead and type in the chat and say just all day. All day. Emmett says, bring Oscar again, please. Or all day. I've been here all day. Whatever, something along those lines. We bring Oscar in all the time. We are here. We love Oscar. And I think it's been a truly great seminar. I hope you agree. It's been a great session. I really enjoy doing these. They are a little bit tiring. With Oscar, in November, we sat down and we recorded a program that we called Trendlines and Technical Formations. You notice that he works with a lot with technical analysis and trend lines, drawing up charts. In it, he did a really good job of showing how to properly draw up a chart, how to do support and resistance, how to do technical formations. And I remember this class, and we do have it available as a recording. I promised to talk a little bit more about it, but Oscar did not disappoint. I'm actually losing my ability to speak English. I've been broadcasting for too long. But we are offering that. If you just want to go to that, you don't need MetaStock at all. He talks a lot about the drawing tools that he uses and why he uses them and all of that kind of good stuff. It was a great session. Normally, we sell it in our education site for $4.99. You can buy it here at the summit for $3.49. I think you'll really enjoy it, especially if you enjoyed watching him talk today. To get it, you can call us at 800-882-3040, or you can visit us at metastock.com/saleschat. So Julia says, I've been at all day. Larry says, all day, you did great. But you did not mention the Performance Plus. Well, I did lose a little bit of time for but that was a really good addition. Really good addition for the thing. Okay. So I do want to remind you about actually, let's just do this in a second. I want to say thank you to Stocks and Commodities. We kind of ran behind all day. They're awesome. They've done 17,000 plus articles on trading. They've got 1.3 million subscribers. They've been writing the magazine since 1982. If you're on YouTube and you haven't registered for the event, now's your chance. Just go to metastock.com/trader summit, fill in the registration form and elect, and you can have a free copy of the magazine. If you take advantage of any of the offers today, like the training or anything, you'll get 5 months. And as long as you spend $300 or more here, you'll get a 2-year subscription, which is, I checked it a while ago, I think it's $198 value. So we really appreciate the support. They've been great partners for us for decade now, so we appreciate it. Also want to thank CMT Association. I am losing the ability to speak. It's getting bad. CMT Association is a great organization. We really are proud to be sponsored by CMT, a well-reputed organization all about chartered market technicians. You can get a license there. They talk about risk management, quantitative systems development, all that kind of stuff. Anyway, cmtassociation.org or 646-652-3300. I want to thank all of our speakers today. Great job. I want to thank all of you guys for coming and really helping us make these things successful. I hope you enjoyed it. I hope you learned at least one thing or more. So I also wanted to remind you about the MetaStock Summit Actions Pack. We had hedge fund manager Jeff Tompkins start. You can get 3 months of his service. Victory, which was our best-selling add-on of all last year. You can get the Omni training that I just talked about. It's not Omni training, it's his training on technical trend lines and formations that he did with us in November. You get a recording of that. You can get the new Tushar Chande's complete toolkit, 3 months of Magic Trader Elite, learn MetaStock, unleash the power of MetaStock, 2 years of stocks and commodities. There's so much in this package. I'm getting, and I am a little tired after 8 hours, but you should try that. $4,484 is the retail price on this. $2,193 is the price today. A lot of it is refundable if you're not happy. All but the subscriptions are. Give us a call, 800-882-3040, metastock.com/summit deal. James says, thanks for some presentations. Lee says, where can we get the videos? The videos will be emailed to you within 1 hour, Lee, because you're in the GoToWebinar room. If you're on YouTube, you can stack it up right now. Okay. Give us a call, 800-882-3040, metastock.com/summit deal. Thanks for coming today. I appreciate it. Stay healthy, stay well, stay safe. We'll see you at the next one.